aberration by 2070, and last year's ban on cane juice and B-heavy ethanol was just an aberration, and it's a correction of the past issue. Secondly, it also reflects the confidence in the decision makers that the stock level as far as sugar in the country is concerned is adequate. And the next year's crop also looks to be quite all right. So I think overall, it's a very good decision. But honestly speaking, I actually consider this as just a work in process. Because the government had, before the elections, announced that next year's FRP, or the fair remunerative price for cane, would be jacked up, and the amount was also announced. So now it's important that the cane juice ethanol and the B-heavy ethanol prices are also suitably increased. There's just no sense that maize ethanol would be selling at 72 rupees a liter and cane juice ethanol at 65 and B-heavy at 60. So we expect the government to take suitable action to jack up this price. And all this is definitely positive for the sugar sector, and even from the Renuka's perspective, because we are possibly the largest manufacturer of ethanol in the country, so it should help us, definitely. It's a very decision.
Right. Atul, if you can tell us, for the industry, so the ethanol price revision is also expected, but yes. Pending that, just with this move, will there be any, this brings certainty, sure, but beyond that, is there any earnings, are there any earnings implications right away? Or do you think that will only sort of start to show up once the ethanol price kicker also comes in?
No, in fact, whether we like it or not, all these changes are going to be relevant once the next crushing season is started. Because cane juice, as of today, is not available because crushing is just not there. So I would say October onwards, it should start impacting the operations and operations big time.
Mr. Chaturvedi, sir, just a quick question. Yesterday, I think there was another move. Now, a certain quantity of rice can be lifted from FCI in order to sort of use that as feedstock for ethanol. Just want to understand whether from Renuka's perspective, do you look at other grains at all, or do you restrict yourself to cane juice and molasses? And also you mentioned the increase, right, that the price has been static for ethanol. So what is the kind of increase that you would expect or that you would hope for from the government?
We are actually looking at an increase of closer to what the maize ethanol price is. Say, for example, as far as cane juice is concerned, which is about 65 rupees a liter, we want it to be jacked up to closer to 72 or 73 rupees a liter. And secondly, for the B-heavy, we want it to be suitably increased to about 66, 67 rupees. So that we hope the government would take suitable decision in the matter. And as far as your question on the rice is concerned, let's face the fact that India is struggling with massive stocks of rice. And this has also got augmented with the ban on white rice exports. So your stock levels have got built up. And the next year's rice crop also looks to be quite all right. So I think you could possibly say that 2.3 million tons of rice being earmarked for ethanol via the auction route, it could possibly be treated as an import substitute. So effectively, instead of exporting the rice, they have gone in for the import substitution via the ethanol route.
Got it. Mr. Chaturvedi, good morning. Nigel on this side. Wanted one number from you. What kind of distillery volumes you're factoring in for this year as well as for the next?
In terms of what? The volume of ethanol?
Yes.
Or?
Yes, volume of ethanol.
Oh. We would expect the ethanol volume to be pretty high. In fact, we've not done the numbers as yet. But
for Sri Renuka Industries, sir, for Sri Renuka, what kind of number would you be working with?
Sri Renuka, we would possibly feel that this year we could be possibly doing more than 20 crore liters.
All right. And for the next?
Next could be higher. Next could be higher than that. In fact, our capacity is above 25 crores, and we see no reason why we should not be in a position to achieve that.
Okay, got it. All right. We appreciate you joining in, Mr. Chaturvedi, and giving us your first take on this. But let's get in Prashant as well, who's waiting by. Hi, Prashant. Good morning, and thanks a lot for speaking to us here on CNBC TV18. How do you read this piece of news? I understand that maybe you are factoring in that this leeway will come, but maybe it's come sooner than expected. So your initial take, and who stands to gain the most by this?
Good morning. Yeah, so this move was expected, but the government decision of this coming in August is timely rather than waiting for crushing season to start for a decision. That I think is sentimentally positive for the sector. And yes, we were already expecting this. So numbers wise for FY 25, the numbers are not changing. And the entire sector is going to benefit from this, from the normalization or resumption of the full-scale ethanol blending, and with the resumption of FCI, the sale of FCI rice for the grain ethanol manufacturers. I think the grain ethanol manufacturers as well as the dual feed manufacturers in sugar industry, these companies are going to benefit.
Name them, Prashant, that would be helpful. I mean, just from a distillery perspective, say for someone like a Triveni Engineering, what is the kind of additional kicker one can expect on their ethanol side of the business? Or any of the other beneficiaries, really?
Right. So the benefit will largely come from H2, which is when the sugar season starts. So the benefit will be split between FY 25 and 26. But just from a sugar season perspective, if we talk about, then I think the volume growth could be anywhere between 20 to 25% for the larger companies like Balrampur. And for small players, depending on their capacity and what type of feedstock they use, the volume growth may be accordingly. But a good 20% volume growth is possible from a season to season perspective starting the next season.
And this is higher than before? This is higher than what you'd earlier assumed?
No, this is what we were assuming.
This is what you're assuming.
In terms of regulatory action is opening up exports. What are you expecting and hoping on that front?
Has put your call on hold.
All right. Okay. I think we'll try and reconnect that through the course of the day. We'll get you some more reactions as well from other sugar companies. Mr. Chaturvedi, appreciate you joining in. Prashant, thank you very much for taking the call early in the morning. And thanks for your time. We'll take a quick commercial break here, but we'll just leave you with some opinion through that we've got getting through on other asset classes as well. So this is V. Lakshmanan on the rupee, who says that they see mild gains tracking Asian peers and MSCI-related floors. Remember, MSCI changes are effective at the end of the day, and they're meaningful, and they can essentially push the dollar-rupee lower. He says the dollar index recovered marginally after making a 13-month low, better than expected US GDP estimates. G7 currencies paired gains with the dollar recovery for the coming sessions. He expects USD INR to trade between 83.75 to 84.15 to the dollar.
On bonds, Lakshmanan V says that the Indian government bond yields traded in a thin range as markets await Q1 GDP data and key economic data from the US. He says Fed Chair Powell sounded more dovish than expected at his Jackson Hole speech, leading to expectations of a certain rate cut by US Fed in September. However, he says US GDP for the second quarter came in higher at 3%, indicating firm growth, which may push back case for aggressive rate cuts. He's adding that the coming sessions could see the 10-year benchmark yield in a band of 6.8 to 6.9%.
We've got a lot of stock-specific action to track for you. For the time being, we run you through the list. We look at Balrampur Chini, Sri Renuka Industries, Triveni Engineering, Praj Industries, Prestige Estates, NLC India, Interglobe Aviation, PB Fintech. All of them will be reacting to positive news flow, while we have Max and SpiceJet that will be reacting to negative news flow. I'll tell you what, let's slip into a short break. You come back, we'll delve further into the top 10 segment. Stay with us.
Welcome back. Well, lots to go over and plenty of cues to track. We've discussed the big sector sort of story of the day, which is sugar. There are lots of other interesting stocks as well to keep an eye on. And our team is standing by with the CNBC TV18 list of top stocks to watch today. Guys, good morning and happy Friday to all of you. Vamakshi, you go first because your sector is making the headlines. Sugar, we just got some perspective from the guests, but just put it in perspective because there's a lot of news flow in the last 12 hours.
Well, absolutely a lot of news flow indeed for the sugar industry. The first news flow that came through was that the government has lifted restrictions and has allowed ethanol production from cane juice, B heavy molasses, C heavy molasses for ethanol supplier 2024-25, which starts from November 1st. This is a big relief and a big positive for the sugar industry, and that is because the distillery segment was doing very well until the ethanol policy changed in Q3 of FY24. Ethanol production also receives generally a better margin profile as compared to sugar sales, so therefore this bodes well for companies like Balrampur Chini and Sri Renuka. The other announcement that came through was that the government permitted the sale of up to 2.3 million tons of rice from Food Corporation of India or FCI. This bodes well for Triveni Engineering, and because the company in its Q1 con call had said that they had substituted grain feedstock with maize, but the margins for FCI rice were very healthy and attractive. So overall this bodes well for Triveni Engineering. It also bodes well for Praj, and that is because it supplies tech for distillery operations for most of these companies. Other than that, the industry is also hoping for a hike in ethanol price as well as lifting of restrictions for exports. So that again, we will be watching out for.
All right. Vamakshi, thank you very much for that. So that's a fair bit of sugar right at the top. Well, we've got some fundraise as well. So Prestige Estates will be in focus. There is Max Estates, which is also raising money through issuance, and there is news flow for NLC. Vivek is here to wrap up all those things. Vivek, morning.
Well, good morning. Fundraising continues, and most of the promoters are doing QIPs in order to raise funds. Now, the first stock on the radar, the first company on the radar is Max Estates. Now, what we understand from our sources is that the company has launched a QIP to raise close to 800 crore. The indicative issue price is at a close to 12% discount to yesterday's close at 597.5 rupees a share. Equity dilution at almost 9%, and the company will be using the funds for land acquisition as well as interest and development of land development rights. The other stock on the radar, again, quite a large QIP coming through, is Prestige Estates. Almost 5,000 crore is what the company is looking to raise via the QIP route. Indicative issue price of close to 1,674 rupees a share, almost a 7.5% equity dilution. What is the company raising the funds for? Number one, debt repayment, also land as well as land development rights. That is something that the company is looking to acquire, and also looking to go ahead and do some investments in subsidiaries as well as JV companies. And lastly, NLC India, some important JVs that the company has announced. The company has, gone ahead and done a JV with Rajasthan Rajya Vidyut Utpan Nigam Limited. Basically, they are going to be setting up a lignite-based thermal power plant in Rajasthan to meet the fuel requirement of the thermal power station. And the JV also has been formed in order to go ahead through NLC India Renewables Energy Limited to development renewable power projects of up to almost 2 gigawatt, that is 2,000 megawatts. So going with the green as far as NLC2 is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sudarshan. Sudarshan, Interglow, PB Fintech, large trades out there, and there's news flow on SpiceJet as well. Fill us in.
Morning, Nigel. So it's an update to what we have reported yesterday. So first one is Indigo. Rakesh Gangwal's trust has sold more than 5% stake via block deals, and Morgan Stanley Asia PTE has bought nearly 1% stake on behalf of its clients, and block deals likely to have happened at rupees 4,715 per share. Next is PB Fintech. Tencent Cloud Europe has sold more than 2.1%, and buyers include Axis Mutual Fund, Euro Pacific Growth Fund, HDFC Life, ICICI Prudential, and SBI Mutual Fund. And following yesterday's block deals, Tencent Cloud Europe's holding in PB Fintech now stands at 2.1%. Last is SpiceJet. There are two news flow which might have a negative impact on the stock. First one is company has placed 150 cabin crew members on furlough for 3 months, and company says this step has been taken in response to current lean travel season. Second news is aviation regulator DGCA has put airline under enhanced surveillance. DGCA says special audit conducted on August 7 to 8 revealed certain deficiencies in operations, and that's the reason it has put on surveillance to ensure safety of operations. So keep an eye on these three stocks.
Okay, got that. Sudarshan, thanks very much. We'll keep them on our radar as well. Let's quickly recap the list of stocks to watch then this Friday. The ones that have positive news flow around them are Balrampur Chini, Sri Renuka, Triveni Engineering, Praj Industries, all of them on the back of the sugar regulatory developments. There's also Prestige Estates, NLC India, Interglobe Aviation, and PB Fintech. The ones that have some negative cues around them are Max Estates and SpiceJet. Okay, so that's the stock list for the morning. Let's now look at the commodity cues in focus as well. We have Manisha joining in with a roundup of all the action. Manisha, good morning.
Morning, and thank you for that. So, well, the top commodity today clearly will be sugar, and you've discussed that. So, I'll take on crude oil prices, which is headed for a second monthly decline. Well, the ongoing China demand concerns clearly seems to be weighing on the prices here. The street will watch out for the OPEC and allies meeting that's in the first week of September on what they do talk about, a gradual output cuts from the month of October of 2.2 million barrels that has been spread out in the next year. So that statement, those guidance would be important to watch. But the only thing that really seems to be shining right now is the gold price is very close to its all-time highs of $25-30 an ounce. Well, it is about U.S. inflation data today, and any cues coming in from that will tell you on where the prices are moving.
All right, we'll take a quick commercial break here. Manisha, thank you very much for that. We'll come back. Deven Chokshi will be with us with some fundamental stock talk. And of course, we've got the Reliance AGM takeaways to discuss as well. So all of that is coming up.
But it looks like Jack Smith doing more of what he does, which is filing these absurd lawsuits in an effort to influence the election.
Welcome back. You're tuned into Bazaar Morning Call. Well, Deven Chokshi, MD at DR Chokshi Finserv, joins us on the show. Hi, Deven. Good morning and good to see you in. Well, let's talk about the big mover yesterday. Reliance Industries came out to bat and helped the Nifty, smash it out of the park. What's the view of the stock? You have that additional technical trigger now, which will be a bonus issue. Tell us more.
Yeah, Nigel. Good morning. Well, of course, the bonus issue is one aspect, and definitely I think this is an important one. Largely because of the fact that I think most of the businesses have completed the capital investment cycle to a greater extent. The last one, which is the renewable segment, I think is undergoing the implementation. So I think by next year, they would also be by and large finishing the, I think, larger part of the capital investment cycle. So obviously, on a 6,700 crore equity and on a 7 lakh crore worth of reserve, it's a no-brainer as far as I think the issue of bonus is concerned, because the serviceability of the equity is never in question in this kind of a situation. With more than 1,60,000 crore worth of EBITDA producing, which is growing at around 15% on a yearly basis, I guess I think it's given that I think this kind of bonus will get easily absorbed as far as I think the company's operations are concerned. More importantly, I think capitalizing the reserves at this point of time also gives an indication that somewhere down the line, I think the company is preparing itself for demerging the retail business as well as the Jio platform business. Because I think generally when you capitalize your reserve, at that time you give an indication to the investors that yes, I think you have completed the program, and now I think the businesses which are going to be separately listed, they will probably find its own way. I think that is an indication in between the line message that one can read out of it. Otherwise, I think from the annual general meeting, I think a couple of things which I think has appealed me most. This company is trying to disrupt its own business model by way of creating a similar kind of an impact through implementation of AI and deep tech technology in their entire operations. This is probably on the size of a company like Reliance, I think is not heard of, I think very commonly. I guess I think this is what they're challenging themselves, that before the competition or global play could possibly swipe them out, they are actually, I think, preparing this company for a long-term play, I think, with a sustainable operations. So that, I think, remains, I think, a cornerstone of the entire AGM speech. Apart from that, I think every 3 years, 4 years, retail business and Jio platform business, they have indicated that I think they will grow double in size from what they are currently. So 90,000, 1 lakh crore kind of EBITDA between Jio platform and the retail stands doubled, I think, 3 years, 4 years from now to 2 lakh crore. And I think that's an important key takeaway. Along with the renewable segment, I think, contributing as much as I think the O2C segment contributing today in next 5 years. So I think they are creating a vision of at least 3 lakh crore plus kind of an EBITDA making business for the company in next 3 to 5 years.
Devin, good morning. How would you look at some of these fundraise efforts, especially in the real estate space? You know, yesterday there was that rich list which was put out by Hurun, right? And it was noticeable that real estate companies and promoters of real estate companies were some of the maximum new additions, I think, came from that space, from real estate. And I think that talks to the boom that we are seeing across the board. Most of course, the value of most of the people on that list is tied to stock holdings, the underlying value of the shares they own in their businesses. But Prestige Estates, Max Estates, both doing a fundraise round. Max promoters themselves are also putting in money along with outside investors. I don't know if you have any views.
Yeah, Prashant, good morning. Well, as such, I think that this is an asset class. The real estate as an asset class is basically a class which is going to be due for next 25 to 50 years kind of development in the country which is happening. They are likely to be, I think, participating significantly into this particular development. So if you are an entrepreneur, if you are owning the real estate company and probably, I think, growing into this particular mode of providing the business solutions across the country, then probably I think is the best time that one can argue for. In my viewpoint, I think business remains capital intensive for a reason that I think for expanding the operations, you continue to have larger amount of capital, and so would be the number of square feet I think that you construct. You require that additional capital. So I'm not completely surprised that I think some of the promoters are also, I think, raising money or deploying money in some cases because of, I think, this particular reason. In my viewpoint, I think the valuation-wise, if you look at most of the companies, they are adequately priced today. But if you are having patience to stay invested for next 3 to 5 years, then some such opportunities will come in between the times when I think you will get some of the corrected valuations available to you. So it's a long-term play as I see it. I think in the near term, most of the things are appearing in the price at this point of time.
Devin, just give us a couple of minutes. We actually want to discuss Tata Motors with you as well, because there's so much going on with the whole capital reduction scheme and the DVR is going, etc. So we want to discuss that with you and understand that. So allow us a couple of minutes. We'll come back to you. In the meantime, let's just go over the key highlights and the big announcements that came in from the RIL AGM yesterday and what the implications could be for the stock. We have Karan Taurani joining in from Elara Capital, as well as Balaji Subramaniam from IIFL Securities. Gentlemen, morning. Great to have you both on. Balaji, if I could come to you on all the Jio-related announcements, and there were several, right? A lot of talk about the air fiber, the Jio AI cloud, the 100 GB of free data, so on and so forth. And also, of course, the big statement about the business doubling over the next 2 to 3 years. What were your big takeaways? And purely from a stock point of view, do you think there'll be a disappointment because there's no indication at all of a listing right now, though the business plans obviously seem to be, very, very impressive and on track, perhaps?
Hi, good morning. Thanks for having me on the show. So firstly, to take this big picture call of Reliance talking about doubling of revenue and EBITDA of Jio platforms over the next 3 to 4 years, I think that target appears reasonable. So, the key drivers here to look forward would be the tariff hikes that the industry took a couple of months back. And my sense is that we are in for another round of tariff hikes maybe in the next 12 to 18 months. So, between these two tariff hikes and the continued subscriber addition, as well as the fact that Jio Air Fiber would continue to see subscriber additions, which would come in at a significantly higher ARPU compared to where the mobility ARPUs are. I think in the next at least 4 years, the revenue and EBITDA doubling target appears achievable. As far as Jio Air Fiber is concerned, the chairman yesterday was talking about a target of adding 1 million customers every 30 days and a medium-term target of somewhere around 100 million households. So if you see, there the progress has been steady, at least in terms of the in terms of the subscriber additions. There has been an acceleration, but I wouldn't rule out at some later point in time maybe entry lower priced plans. So even if you look at the FTTH offerings, Jio had started at 399 and subsequently they came out with a 198 plan. So I wouldn't rule out something similar also happening in Jio Air Fiber at some point in time, which I think would probably help them move closer towards the target that they have set for themselves. As far as the Jio AI cloud is concerned, the 100 GB storage for Jio customers, I think those are all different ways in which you try to improve customer stickiness and lower churn, because that is one extra reason for a customer to probably hold on to his Jio SIM. So I don't know how effective that will be in terms of subscriber additions, but at least that appears to be a good customer retention strategy.
Just a point, since now that we don't have the immediate trigger of a carve out and a listing, I guess it boils down to now going back and seeing what happens at that ARPU level as well. So Balaji, there, one of your peers at a different brokerage, I think it was UBS, brought a very thought-provoking piece. Now, their contention is that while we've seen some tariff hike announcements, the question is the trickle-down effect and the sustainability, because their contention is that maybe customers will start down trading. And you also just mentioned slightly lower price packs, right? So net, what is the effect of the last round of tariff hikes that you see? Has it completely percolated in the first quarter itself? And what more would you expect and pencil in on tariffs and ARPU for Jio as we roll along?
So historically, what we have seen is that at least in the last time, when I say last time, I'm talking about the end 2021 tariff hikes. The headline tariffs went up by about 20%, and if you see the kind of revenue flow through that happened, it was around 14-15%, because there was some down trading and there was some SIM consolidation, which I think will probably play out this time also. So my sense is that one can probably expect somewhere around a 14-15% kind of a revenue uplift from the tariff hike that what just got announced. So maybe, we will see the full benefit of that coming in only by 3Q, because you have people on 3-month packs, etc. They would have locked in the earlier tariffs sometime in the end of June, and by the time they are on the higher new tariffs, it could be late September, October. So net, I think it will probably take a couple of quarters by when you will have the tariff hike flowing through into the revenue. So that is what I would think. As in somewhere around, so Jio was at has been around 180 rupees ARPU. That will probably go up to somewhere around 205, 210 once the entire tariff hike gets into the base.
Okay, all right, got it. So let's see third quarter onwards how this shapes up, and of course the implications of all the Diwali launches that will happen with respect to Jio AI Cloud as well. Karan, thanks for joining in. So I'm sure you heard the speech as well and all the highlights. There was a lot of mention of the media businesses as well. I remember that Mr. Mani's statement that the time has come perhaps for India to challenge sort of the intellectual domain of media, global media. So that was interesting from our perspective as well. But you tell us what stood out for you and what are the key takeaways and the stock implication, if any.
Hi, morning. I think in terms of, the key takeaways, it's very clear that they really want to scale up the Jio Fiber business. And, as mentioned by us, whatever deal that is happening right now in terms of RIL Disney, last mile support is of utmost important because I think digital is a business of scale. And in case, you want to go to a large customer base, you need last mile support so that you can kind of raise ARPUs over a period of time. So the plan is very clear that, bundle these kind of offerings, provide, the customer the content and, the pipe, to use that content or the bandwidth rather. So I think it's very ambitious plan. I think it's good. We'll have to see in terms of, how these things actually work out. And the only key is user experience. So I think, if Jio Cinema is able to match up to user experience of global counterparts like, Netflix, Amazon, and even Disney and so on and so forth, we can see, Jio Cinema becoming the largest app in India today and even challenge the likes of YouTube India. So there is potential for scale and execution is key from here on.
Okay. All right, gentlemen, thank you for the quick call and some quick perspective on, of course, what we've seen and heard at the Reliance AGM yesterday. Thanks for joining in. Let's just head back to Deven for a couple of more questions. Deven, I was talking about Tata Motors, right? Yesterday, there was a big surge on the stock, 6% higher, as the company goes through a lot of the corporate actions, including the changes in the share capital itself and, the DVRs, which will be on their way out. Can you just simplify for us exactly what's going on and what is it that shareholders should keep their eye focused on?
Yes, I think this is slightly a tricky question from the point of view of taxation impact, I think, which is coming up. The DVR shares are getting converted into the ordinary shares, and today is the last day of trading. From 1st September, that is Sunday onwards, I think these particular shares would be, getting traded into the normal shares. Now, if you look at, the impact coming in, I think the DVR shares basically converting to ordinary shares, there were 3 legs of taxation out there. The first leg of taxation is that I think whatever the number of shares, 51 crore shares of DVR, they are basically going to be attracting the deemed dividend because of the free reserves that is there in the company. So as per our workout, on about 10,000 crores free reserves, I think it is about 200 rupee per share kind of an impact coming in. So this 200 rupee per share would be considered as a deemed dividend in the hands of the DVR shareholders who are basically converting their shares into ordinary shares. That is the first leg of impact. So deemed dividend would have its own taxation impact at the same time. Then the company is forming a Tata Securities Trust, I think, in order to basically settle the TDS part of the deemed dividend, which they have to deduct before making the payments. They will probably deduct this till 10% TDS, and that is where probably I think they will have to sell some part of the shares allotted to the DVR shareholders. So that will probably result into reduction in the ratio from 7 shares of Tata ordinary shares of against 10 shares of Tata DVR. It will further reduce some part of the shares. So that is the second level of taxation impact. The third level of taxation impact, as I see it, is in the hands of the investor. When he is basically getting the converted shares, he is attracting long-term capital gain tax in case they are holding for more than 12 months. So I think these 3 legs of taxation is there. Of course, I think the deemed dividend tax will be first deducted out of the price, and then probably long-term capital gain tax will be calculated. But as you can probably make out, that it is a very weird way of, I think, working out the entire thing, and probably I think taxation structure is quite complicated. In my understanding of the subject, it is best that I think the investors would allow the shares to get converted into the ordinary shares and end up, I think, taking the taxation part on the other side, instead of, I think, selling the DVR shares today in the market and buying the Tata Motors shares on the other side. That may probably result into unnecessary amount of cost, I think, that they may incur. So I think the first option is better. Allow the DVR shares to get converted and let you get, I think, the Tata Motors ordinary shares in course of time in next 15 days after the book closure is announced.
Okay. All right, Devin, that's helpful. Thanks very much for for simplifying what seems to be a fairly complex exercise as the DVR shares are phased out. Thank you for joining in. You have a good day, and we look forward to connecting again. We have to take a quick break on that note. On the other side, of course, we get our technical experts in Mitesh Thakkar, and Avni Bhatt joins in with some trading ideas.
The president doesn't have some level of immunity in how he conducts his office, in the same way that judges have to have immunity, police officers have to have immunity. There has to be some recognition that people can't be sued for doing their job.
So help me God.
Okay, welcome back. There's 6 minutes to go for the pre-open session. Mitesh Thakkar and Avni Bhatt are with us with what they want you to do as far as today's trades are concerned, gentlemen and lady. Great to have both of you here. Mitesh, so, you know, the Nifty is moving up 11 days on a trot, and that too without any help from banks. So there is that divergence to note. So will the Nifty pull the Nifty Bank along at some point? Will that start to happen? What's the sense, and what are your trades this morning?
Morning, Prashant. Actually, yesterday I felt that the Nifty Bank could see some kind of an upward traction, and we had some buy calls over there. The Fin Nifty has been doing well, so I think the Bank Nifty today could be one index which could, compensate for its underperformance. But on the Nifty, I would maintain targets of 25,400, and on my stock side, I have all buy lists today. AU Bank is a buy with a stop at 628 for targets of 666. Coforge is buy with a stop at 6,200 for targets of around 6,450. IOC is a buy with a stop at 173 for targets of 185. And Persistent System is a buy. Keep a stop below 5,000. Look for 5260, 5270 as the target area.
Got it. Thanks for that, Mitesh. Well, let's welcome Avni as well into the conversation. Hi, Avni. Good morning. We are starting a new series. Quick observations on the roles. How is the series panning out and your trades?
Yes, the rolls are more or less in line with the 3 months average, and that doesn't indicate any directional cues as of now. But overall, the structure still remains positive as per our last discussion last Friday. India VIX is still giving us a lot of comfort. It's trading below 14%. So it's going to be a slow move. There will be a lot of consolidation. There will be phases of bouts of correction. But the overall, the trend is on the positive side. So we need to be having a positive bias as far as both the Nifty and Bank Nifty are concerned. And I think from here onwards, Bank Nifty should take a lead.
Bank Nifty should take a lead. Great. Noted that point, Avni. What about individual stocks?
So I have 2 stocks on radar for the long trades. And both these stocks are structurally very strong stocks. They have seen recently they've seen some bit of price retracement, and they are trading near support levels and ready for a reversal. First is ONGC. We can take a long trade in this particular stock for a target of 338 to 344 on the upside and keeping a stop loss of 322. And the second stock is Coal India, a good reversal candidate. 527 was the close yesterday. We can take a long trade in this particular stock also for a target of 545 to 550, keeping a stop loss of 515.
All right. Thanks very much, Avni, for joining us with those trades. Mitesh, thank you very much. We'll take a quick commercial break here. There's 4 minutes to go for the pre-open session to kick off. We're going to come back and we'll have the pre-open rates. We'll also have an analyst from Bernstein, and we put the focus on banks and financials here, which have not been performing. What is keeping them back and what will push them to start performing? We'll ask them on the other side. Stay tuned.
Well, in a minute or so, we'll have pre-open rates that will flash for you on the screen. But before we get to that, let's welcome Chandan Taparia on the show. Hi, Chandan. Hope you're feeling good on this Friday morning. We're starting a new series as well. How would you approach the Nifty and the Nifty Bank? You know, an observation that we've been making last few days is the Nifty Bank can't get that 51,300, 51,400 mark. Your take.
Good morning, Nigel and Prashant. Thanks for having me. So Nifty index continues winning streak of last 11 trading days. It has been making high tops, high bottom on the daily and the weekly scale. Index has surpassed the previous lifetime high of 25,078, made a new record at 25,192. Yesterday, we have seen the rollover activities being the last Thursday of the month. The rollovers are 75-77%, which are in line, indicating the trend could remain intact. And as of now, till it holds above 25,000, ongoing momentum can extend towards 25,500, 25,750 marks. The good part is that volatility index is at lower levels. CBOE VIX is also below 17-16 marks. The global sentiments are supporting. So all the data setup indicate the bullish bias could continue. But when we talk about the Bank Nifty, which is slightly underperforming, got stuck in a range. Nifty made the new lifetime high, but Bank Nifty is still away by 2,200 points from its lifetime high. But we believe that it is holding well above its 50-day mark, so positive to range-bound bias could continue until it holds above 50,800 zone. It has potential to bounce towards 51,500. So bullish stance in Nifty, but positive to range-bound bias in Bank Nifty index. Now looking at the stock-wise, first trading idea is buy on SL Tech. We have positive stance in Nifty IT, and SL Tech is outperformer in the IT space. So we are selecting the sector and stock which are outperforming the peer competitor. Now looking at the SL Tech, it has completed a rounding formation on the daily and the weekly chart. Even on daily scale, it has been moving in a rising channel, which clearly indicates that bullish stance could continue. Longs are adding with rollover activity, indicating momentum could continue. So one can buy with support of 1750. Stock has potential to rally towards 1850 zone. Second trading idea, that is market heavyweights Reliance Industry. Stock has completed an inverse head and shoulder pattern, which has bullish implication. Again, the consolidation breakout of last 27 days indicate positive move could be there. So one can buy with support of 2980 for an upside move towards 3200, and bullish bias in Reliance could accelerate the Nifty towards higher zone. Last trading idea, that is buy on Hindustan Petro. Positive price pattern, supports are gradually shifting higher. Better rollover with put writing activity indicate bullish momentum could continue. So one can buy with support of 408, and HPCL can head towards 440 zone.
Chandan, have a great day ahead. Thank you very much for all of those. Have a good weekend as well. We'll speak again next week. Thank you very much for that. Well, end of the day, MSCI changes will take effect. Vivek is here with what changes. And Vivek, tell us, any specific names you may want to highlight that you think should see some action. Go on.
Well, good morning. Today is an extremely important day as far as, passive funds are concerned, given the fact that this is actually a very high liquidity net inflow event for Indian equities. In the last hour of trade, you will see these changes take place as far as the MSCI linked ETFs are concerned. Now, what exactly is India getting? India today will get net inflows of over $5 billion, close to $5.5 billion as per IFL Alt Research, indicating inflows of almost 40,000 crore rupees. Now, remember, what's actually happened as far as India's weightage in the MSCI Emerging Market Index is concerned. In this particular review, that is the August review, India's weightage in the EM basket has risen to almost 19.8%. Earlier in the last review, it was 19.4%. India's weight increase has come in at the expense of other emerging market countries, actually seeing a slight dip as far as their fortune as well as performance is concerned. So China, Taiwan as well as Korea will see some weight reductions. This particular weight increase in India is simply due to the outperformance of the Indian equities in the run-up to this particular event. Now, talking about the MSCI Standard Index and the names to watch out for, 7 additions and 1 deletion. This is the index that we will be tracking, given the fact that the impact here will be a lot higher. Which are the 7 additions? Zydus Life Sciences, close to $218 million of inflows expected today. Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, RBNL. These are the inclusions. The only exclusion being Bandhan Bank, expected to see outflows of close to $109 million. Along with that, the very important stock to watch out for would be HDFC Bank. Remember, MSCI said that they would be increasing the weightage in HDFC Bank in 2 separate tranches. Today will be the first tranche of the weight increase. Almost $1.4 billion is what HDFC Bank will see as inflows today. Important to note, a lot of these developments were earlier known as well, and market participants, especially active fund managers, have already started pricing in this particular development.
I saw HDFC Bank, I'm not sure, because the pre-open is kicked off. Vivek, stay with us. HDFC Bank was showing a 5% pop. But that's just the pre-open, I think. I mean, obviously, 200 points in the Nifty, 700 points in the Sensex. We'll let a minute, 2 more pass. But there is, of course, one tranche which is going to happen now for HDFC Bank. And, it's a big one, $5 billion. Now, first, Vivek, as you said, right, it's well anticipated, well advertised. People would have bulked up on many of these stocks, and then so the actual price impact on the the last hour. Are there any names at all from the apart from these 7-8 changes which perhaps are likely have not moved so far where some price action is likely?
Prashant, 3 names is what I'll be tracking today. First is HDFC Bank. Remember, in the run-up to this particular event, HDFC Bank actually was a significant outperformer. But 2 things dampened, the street sentiment. Number 1 was the fact that the street was anticipating that this particular inflow will come in one tranche itself, expecting inflows in the range of $4 billion. That hasn't happened. Secondly, 2 other stocks. Number 1 is Zydus Life Sciences. This particular stock has corrected quite steeply after the results, but this particular event is almost a $218 million inflow. So that's a significant inflow as far as Zydus Life Sciences is concerned. And third stock, would be Prestige Estates. The company today, in a very timely manner has gone ahead and launched a QIP. The QIP discount is not too much, and the inflows too are quite significant. So these 3 stocks definitely, would be on the radar.
Nicely put, in a timely manner. Vivek, you think they probably would have had an eye on the MSCI rebal?
One thing to watch out for would be the very high volume action that you will see, especially in the last hour of trade. Now, remember, Prestige also has a lot of other triggers. Very tough to go ahead and predict the price.
Absolutely. No, I mean, but it's nice, happy coincidence. Thank you very much for that. So those are the changes: 7 in, 1 out. I think $5 billion inflow. Actually, the rupee should have started to trade. And I think I'm not sure if it'll show up now. But the dollar INR, I would suspect, should see a marked move at some point during the day, because it's a big inflow, money coming in. I mean, I think it should provide the rupee a decent lift. We'll see. But 83.82 right now, not very much. I think we're getting the first rates here as well.
So just on the pre-open, HDFC Bank is still the pop is not as much as 3.5%, what it was a couple of minutes back, but it's still 1.5% higher. Because for what it's worth, the money's finally coming in, and the street didn't celebrate this too much because of the reasons that Vivek mentioned, that this, weightage increase is happening in 2 steps, not the 1 step. And then, of course, there are other fundamental issues around which have kept a lid on HDFC Bank. So no major rally. So perhaps now that the event is happening, we're seeing that little bit of green. Reliance is the other one. Keep a track on this as well, because in the pre-open, the suggestion is that it's going to move another 1% higher, with that bonus cheer still being intact. Some of the other movers include an L&T, some of the names like BPCL and NTPC from the PSU space are also up and about. But let's move on and get some more perspective, putting the spotlight on the rate cut cycle and banks in general. Bernstein, in a recent note, said that they do not see India going through a sharp rate cut cycle, and they are expecting 50 basis points rate cut in the current cycle, with the real rate settling in at 1 to 1.5%. We have Pranav Gundapalli, senior analyst at Bernstein, with us. Pranav, great to have you on. Thanks so much for joining in. What you're saying is interesting, because I think a large section of the street was banking on the fact that we'll get into a rate cut cycle, and maybe, gradually things start normalizing, and perhaps the whole deposit mobilization issue also starts resolving itself once we get in the lower regime. But you're not expecting anything beyond just 50 basis points in the entire cycle?
Good morning. I think for us, we see about 50 basis points in this first leg of rate cuts. Unless we have a dramatic reduction in food inflation, falling off a cliff or something, or if there is a serious global recession kind of an environment, which will warrant massive cuts across multiple markets. So the rationale here is that the focus for the central bank has remained on inflation, which is also why we've seen tighter liquidity conditions, and therefore the whole discussion around deposit growth being weak, etc. So that would have to be resolved first. We'll first see a liquidity improvement before we see any sort of rate cut action from the central bank.
Okay, and what would the implications be, Pranav, if indeed this rate cut is going to be as shallow as just 50 basis points? What does it mean in terms of asset liability issues across lenders, banks and non-banks?
I think 2 things. From a banks versus NBFC perspective, I think this means that the benefit for the NBFCs is going to be limited. versus the banks, because they typically tend to benefit during a rate cut cycle, but that even it's a shallow one, the benefit would be limited. From the bank's perspective, I think what it means is that the whole margin compression that we talk about from a potential rate cut would again be limited. Now we're talking about potentially 10 to 15 basis points of net interest margin reduction from a 50 basis points of rate cut, which again would leave most banks with a NIM that is much higher than what they've seen, pre-2022. So doesn't result in a massive decline in their ROAs, which should be a bit of a relief, given that the current overhang on the banking sector seems to be the potential NIM reduction, as well as some of the other concerns around credit growth and asset quality.
So you don't see that much of a NIM compression for banks, right? That's the point.
Okay.
And within the banking space, what is your preference, Pranav? Going by all that you have said, I believe IndusInd Bank and HDFC Bank, you're leaning more towards them. Tell us the preference, and particularly when HDFC Bank comes in.
So I think two things here. In terms of preference, for us, HDFC and IndusInd at the top, followed by Axis, ICICI, and SBI, and then Kotak. Now, our view is, yes, rate cuts could be around the corner, but I think the focus will be more on the deposit accretion for the banks and the asset quality trends for the overall lending space. To us, those would be the bigger factors which drive the stock selection or the performance compared to the impact of rate cut. Now, for HDFC Bank, what makes it interesting for us is that there is still an idiosyncratic profitability improvement story that will play out. Whereas for most other banks, the profitability is likely to decline from their current levels, which is peakish. So that's what makes HDFC top of our pecking order. For IndusInd, the rate cuts benefit them a lot more than peers. And that's kind of why it comes up second after HDFC. For the rest of them, I think while the compounding story is largely going to play out without any big risk, the chances of a big multiple re-rating looks limited, given that their ROAs are likely to decline from here, even if marginally, and that will limit any sort of a multiple re-rating.
Okay. All right, Pranav, we'll leave it on that note for this morning. Thank you very much for joining in and offering us that quick perspective on just the way the rate cut cycle could perhaps play out here in India. Back to the screen to check, what's moving. About a 90-point pop, that's what we have on the Nifty right now. At least in the pre-open, the Midcap index doesn't look too bad. I mean, even the Midcap index is managing about a 0.5% increase. But let's see how that plays along. Some of the sugar stocks, let's pull them up just for reference. Something like a Renuka is popping 9%, Balrampur, Dhampur. A lot of these stocks are expected to, start on an optimistic note. So there you go, lots of green across sugar. Mitesh is with us, so let's quickly get the 910 call in. Mitesh, what's the view? Tell us the stock, and also just a word on the sugar trade. Would it interest you today?
See, my 910 call would be IFC, buy for targets of 185, and sugar has been in the move for quite some time. So not exactly a fresh entry, because if you look at the charts of Balrampur Chini, the stock has had a run up from 450 to now at 580. So not the best entry point. But if somebody is holding hold on, I think the long-term targets are still higher. But you might want to see a dip if it happens to buy into this up move, which is already started.
Right. Okay. Mitesh, thank you very much for that. I think we were about a minute and a half away from the market open, which will come up on your screens as we go along. Lots to track. I mean, 100 points higher on the Nifty. So this is fantastic going. 25,300 and change essentially was the first. I mean, that's the sort of daily upper Bollinger Band, which we were looking at, which we were working with. I think it'll come sooner than what one thought. And eventually, I mean, the bigger retracement is 25,530. I think that has changed a bit, but I think that's largely the number. So we've got the first rates on your screens anytime now. And how much of a change will come through from... Let's look at the HDFC Bank stock as well, because the Bank Nifty has been the big underperformer. It's been the drag. HDFC Bank is up about 1%. So it's not that much, but at least it's not down. So that helps, because it's been I mean, the Nifty's been, ex-financials have been doing very well, and you add a little bit of financials to the mix and suddenly the picture starts to look a lot better. So the first rates on the Nifty and the Bank Nifty on the screens, 25,250, 225. That's about 1/3% higher. I mean, this is a great start. Once again, the Sensex is up 0.6. I mean, actually, not bad at all. You've got the Midcap index, which is up 0.5%. So broader markets also looking up. And the IT index is blinking. I mean, it's just absolutely flat. I think we've got about 6 or 7 stocks which are in the red. That's essentially the Nifty heat map, as you can see. And the majority of stocks, the bulk of everything which is trading right now is up, and it's showing up with a 90-point gain on the index. Surabhi.
Okay, all things sweet are sugar. So that pack is really off on a pretty good note. Bajaj Hindustan about 7.5%. Renuka volumes are big on these stocks as the day is kicking up. Even pull up a Triveni Engineering. Good news for all the distillery and the ethanol manufacturers. Up about 6% there. So sugar is a very, very sweet spot in the market today. But on to individual names on the Nifty itself. Nifty is managing a 90-point up move for the time being. L&T is the big winner. 1% up, followed by HDFC Bank, about 1.25%. The Bajaj Financial Twins, Finance and FinServe, both of those stocks are up and about. There is some buying on NTPC. Then there are some FMCG names like Britannia and HUL that are doing pretty okay. Hero Moto and Mahindra continuing the form, and there's Reliance up 0.5%. Just curious to see what Tata Motors is doing. Stocks cooled off after yesterday's massive move. It's down about 1.5%, but otherwise it's a good opening for the Nifty. About an 80-point up move, and plenty of flair on the large cap screen.
Well, that's right. HOEC, there's some news out there which was flashing for your screen earlier. The block B80, both wells D1 and D2, they have been activated for production. I think this was the trigger for the stock, so that's why HOEC is up closer around 4% as we speak. So big up move is what we're seeing out there. The other one I'm looking at is Nidlon. There was a large trade that took place in early morning session, so that explains why volumes are massive on Nidlon, and also you have a bit of an up move on that stock. So keep an eye out there. Chambal Fertilizers has been in a bit of a range, but from the F&O basket, well, that's one of the big gainers in today's trading session. And Voltas, that's actually been moving quite well. Well, that's cooled off a little bit. It's down closer around 1% as we speak. So a good start, but that MSCI rejig takes place later today. So that's going to be top of mind. And HDFC Bank, that's now cooled off a little bit from the top. That's the stock to track, because bulk of that $5.5 billion inflow will be towards this large name.
Well, 85 points higher. We are up above 25,200, 25,235. So, I mean, a lot of sugar I can see as far as the top volume traded picture. Balrampur, Renuka, Bajaj Hindustan, there is Praj, which is up 5%, EID Paddy, Triveni, Dhampur, Dalmia, Dwarikesh, Awadh, Magad, I mean, Uttam Sugar, Andhra Sugar. I could go on. I mean, 8-10 names, which are all, and they've got volumes. I mean, they don't show up. Many of these don't show up with large size volumes right out of the gates in the morning, but they are now. So that's looking good. And we should have some of these names up at the bottom of the screen as an alert. Just to keep track of what's happening. Oil India is up 3%, so that's a sort of new non-sugar name in the mix in the morning, 3%, so 756. We've got what else? I mean, actually, it's kind of tough to find non-sugar names. Patel Engineering maybe 4% higher. Bharti Hexacom, I saw an initiation from one of the brokers this morning. Bharti Hexacom is up about 2.5%. Stocks at about 1,200 plus at this stage. So that's it. I mean, as far as the broader markets go, in terms of what's up, 4:1 is what the advanced decline right now looks like. On the downside, you've got Tata Motors, which is down 1%. So it's a top volume-led loser. But, of course, the cuts won. Paytm is down about 1.25%. Paytm is done well from the lows, 350-ish or so, started moving up, and it's come up to where it is now. We mentioned CDSL already. PB Fintech is another one which is down 1%. Voltas is down about 1%. KPIT Tech is down 1%. Zentech is down about 3%. Kernex is down about 3%. NIIT Limited has had a sort of rocket-like move recently. That is taking a bit of a halt as well. So this is, I mean, essentially the bulk of what we have as far as price action is concerned. I mean, there is more stuff, and we can maybe talk about this. Look at the, I think the Prestige stock was higher, where there is the QIP. And the Max stock, Max is selling off about to about 660-ish or so, is down about 3.25% as well. So 2 real estate companies in the market to raise money, and a lot of them are. So why not? Samir Arora is with us, founder and fund manager at Helios Capital. Samir is our market master of the day. Great to have you with us here, Samir. Thank you very much. Appreciate it. We're chatting after what seems like a while. So
we spoke after the budget and everything. So quite recent.
It's been feels like distant memory, and the market reaction after that, and all of the sort of crazy stuff. But the market's moved on, Samir, and it's looking stronger even without banks participating, right? So how are you?
The best comment I heard was from you just now, saying, "Oh, HDFC Bank is at least not down today." Which is how sad it is that this is the situation. But yes, the market has done well.
Yeah. Go on. Sorry, please.
Yeah, I was saying that the FIIs are willing to buy anything if you offer them a 3% discount. But if you ask them to come into the market, they don't like it. So I don't understand. For example, yesterday was, that big block of Indigo, whatever, 10,000 crores. But the net FII flow was so much less. Maybe it was mutual funds, I don't know. Maybe it is just that the FIIs want to buy only blocks for some reason. But overall, it every day looks a bit much if I look at history, that so many placements, so many QIPs, so many IPOs can happen. In the past, that is in the 2000 era and the 2007, I used to always say that to entities, and please, these guys should not take it personally, but in those days I used to say that Enam and Kotak bring down the market because they did so many deals that in the end, the market used to not be able to handle it. Now it is beyond the size imagination that we ever had for our market. So far, so good, I would say. But always a bit nervous because of looking at history.
Yeah, no. So anecdotes is what makes the market also, right? Stories. And I was talking to somebody yesterday, Samir, an old-time investor, and he was saying that nowadays, and it struck me, he said, nowadays when we speak to other investors, nobody's asking, what are you holding or what are you buying? Because earlier it used to be,
they have their own
curiosity. Everybody is just focused on their list and everything is done well. That has gone up 2x, this has gone up 3x, this has gone up 4x. So, but it's all gone up.
Correct. But, I was reading, because now if the old guys like me say that the market is a bit hyped or that the SMEs are, the speculation we have not seen, the public, at least, because now, unlike the previous episodes, you get feedback from the market, from the public because of Twitter and other social media. They say, oh, these big fund managers are jealous of small guys making money in SME. So on behalf of all the fund managers, let me tell you, we are not jealous of somebody making money in SME because that's a different game. It's like saying, oh, I am jealous because yesterday Amazon stock went up 5% and Mr. Whatever Jeff Bezos made $2 billion. Sorry, you're not jealous. You're only jealous of each other in the same category. This SME is a different speculative group within intra-retail, but I would say you are not making money. The other retailer is losing. So collectively, it's a game within the retail. You can keep thinking you're making money. Collectively, you're not. But I would still say it is a bit too much. Some of this hype is too much. Look at this IPO. Forget about this recent IPO, which whatever is happening
now. The Yamaha showroom one.
No. I'm talking about the big IPOs now, this Premier or whatever. It's a good company, agreed, let's say, and you buy it. Who's supposed to buy it on day one? I have not understood. What is he supposed to think when he buys it? Okay, today it's okay. But in theory, it has to open up, I don't know, some 50, 60, 80%. Otherwise, this 200, 2000, whatever number times oversubscription would itself be losing money. But conceptually, who buys it that day? And what is his game in buying it that day? That also has to be resolved a little bit when a guy is buying an IPO, that what will happen on day one if it goes up X%? Why should the next guy buy it? Of course, somebody will buy it. Because there is this tendency on day one of an IPO for some large guy to think that this is the only day he can get a float, so he can clean out the float because this is a mid-cap company. So if collectively we buy $800 million and $1 billion, all of us, because the float is so much, then let me tell you, I had a bet with one guy who's still my friend, in 2000, who told me that it is guaranteed that Wipro can never fall. Because he said the float is this much. It was only some 15% float in those days. The market cap is this much, but the float is only this much. And this is the amount of money that comes in. So its index weight is higher because in those days there was no free float. So it can never fall. Then another group presented to me in 2007 how in DLF, the IPO is over 10. I mean, the market cap is 10 billion. You totally need 1 billion. These are the big guys. These are the guys who will never sell because these guys got it in anchor or whatever. So these guys are long-term holders. So the float is only 350 million. So 350 million is so many days. So it can never fall. We have seen all this. Now, again, currently we can say it's not happening. So people can say the old guys don't know anything. But little bit of nervousness should be there. It doesn't mean anything. We are also fully invested. It's just that you have to know all these things a little bit.
No, yeah, nervousness or a sense of wonder. And again, on that point of foreigners, I mean, so as you said, they're happy to buy 5% discount, but they don't want to buy. That's what you began by saying. I don't know why. Yeah, I mean, but so usually, I mean, you know, look, markets, if they stay higher and they keep going higher, it can paper over a lot of stuff, right? I mean, you start to believe that actually, and maybe things are good, but you start to believe they're really good. And that's natural.
So I think the only thing we can all do, because we are also bullish about the market and we don't want to give up. But all you do is stay away from the obvious things, I would think. So obvious bad thing or obvious hype or 100p or, you know, things which are so far into the future or the same thing being repeated again and again. By the way, as a result of all that, over the last 2 months, actually, we've gone back into IT because it still looks okay. We know the companies and there is some turn. And you can also sense it from the fact that suddenly all these guys want to do analyst days or analyst meets. So, you know, if a guy wants to do an analyst meet right now, he has some positive spin to give or some positive episodes, incident stories, orders. So the point is just stay away from the obvious bad. Forget about things which you think are not bad and turn out to be bad as part of life. I think that is the only thing I can do myself, and that is what we are doing.
That's good advice, and you're on point on IT, right, Samir? The index has done so well. Individual stocks have done even better. I mean, it's been the poster boy of August, actually, through all the roller coaster.
Month and a half. Yes,
absolutely. Yes. It's been IT's month. And I'm glad you came back to this because I was just thinking the last couple of times we've had you on, from politics to elections to budget and taxation, we've discussed so much in economy. Let's get down to brass tacks in terms of what you're doing in the portfolio. So you've already given us sort of one clue here that you've gone back and put some in IT. What else? But I don't know if you participated in Ola, for instance.
No, not what else. Because, you know, depending on what you call IT. For example, I used to own this KPIT and all. But I don't call it even IT in the sense that it doesn't move with these 4 or 5 big moves. It's a different company. That way you can also call... You can call, we also own this small company, Indigene. Now it's IT, but I'm saying it doesn't move with the IT crowd. So if you call all of them, then we are now some 15% weight. But if you call these regular IT, old IT gang, the TCS, Infeed, HCL Tech types, then maybe we are 9.5%, 10%. So please understand, to move 10, 15% of the portfolio or 10% of the portfolio is all you can do in a month, 2 months. You can't say, no, what else have you done? Because
fair.
Selling something, buying something kind of thing.
No, fair, absolutely. And I like how you call them, you know, the old IT gang versus the newer businesses and more niche businesses. But
which are called IT, but they don't move with the
old IT gang. No, absolutely. I got that. But while you've made this tilt in the portfolio towards IT and the newer age IT, let's call it newer age, you know, technology, what have you pruned down on? Or is this just incremental money you're putting in there? Or what are you selling down or getting away from or taking profits from?
Incremental money won't do it in the sense we are talking about the full weightage changing. So it means you have to move it with everything. So basically what has got pruned down, as I said, was the... capital good PSU type stocks, because I think that there was a bit of a post-budget. You needed more, according to me, of course, the stocks have still done well, but broadly you needed more stories, more conviction on that and more stressing on that from the government. And to me, it looks now that the government is moving the capex on the account of the individual PSUs rather than doing on account of the government. So when the government is doing it, then some companies are getting the orders is okay. But if BPCL or HPCL or Coal India or somebody is saying that we will invest $6 billion or we will invest $10 billion, according to me, the guys who are spending the capex and spend it over 3-4 years, I don't call them beneficiaries of capex. They are the guys who will have to then, and mostly they are doing it in somewhat unrelated areas. I mean, unrelated means somebody is doing in petrochemical, somebody is doing here, things which are long term, and then you prove yourself in that project 5 years later. Normally, we buy companies where the capex is coming to an end, so that you can say that okay, now the drag of this blocked capital is over and numbers will improve, financial returns will improve. So when you are starting a 6 billion, 8 billion capex, I am not into those kind of stocks.
So you mentioned you've sort of climbed down a bit on capex. So that means no railway, no defense, and you also mentioned you're staying away from 100 PE stocks. And then I'm trying to marry both the ABB and Siemens of the world.
Actually, those unfortunately I never had.
You never had, yeah.
No. So railway we don't have now, and we can see the change in the priorities of the government in terms of, even changing the money where it is being spent instead of being spent on these big air-conditioned Vande Bharat type trains to newer, more basic trains, or maybe more on safety equipment or whatever else. But these are the things which change what you were buying and then what happens. For example, there was this company saying that we didn't have it, but I'm just giving as an example that I will get orders of air conditioning of all these coaches. And now you say we don't want air-conditioned coaches, we want basic coaches because otherwise the public is getting upset that all these trains are very expensive or whatever. So these changes happen, but now they are happening. One is general, we say that, this risk is always there of change in policies and all. It's not so much change in policy. It is maybe realization that these marquee projects are good, but you have to first do some basic things right in terms of security, safety, whatever. So, for whatever reason, post-budget, we changed that. And with that money, you can say on the margin, we have moved it into ITS.
All right. Hi, Samir. Good morning. What about defense? Though the headline index
defense, actually, most of my guys have sold, but I didn't sell because I'm telling everybody, in my hedge fund, I do massive call writing on this. The premiums are so juicy that I feel like, okay, I can drag it for a few months, but basically, I'm willing to let them go if somebody was to hit my prices. But there, what I'm doing is I'm basically writing very massive. You get 6, 8. I mean, not 6, 8. You get 5, 6% in a month, 4% in a month. It's crazy. But in my mind, I have switched off from that. Yes, I don't want them. But they have, technically, I have them. The others don't have them.
Got it. Samir, so 2-3 other areas I wanted your thoughts on. Zepto. By the way, we have an interview with the Zepto founders.
The two guys. Okay.
Yeah, we're gonna play. Our colleague Shireen interviewed them, and we're gonna play out sound bites through the course of the day. A lot of interest around this. Quick commerce, actually, right? But there's interest from investors, but also interest from other players. Big Basket, for example, is going full quick commerce.
Everybody will come in. Everybody will come in. Flipkart will come in. Everybody will come in. Yeah. So that is a bit of an issue for my company. But because the difference between this and let's say the paint industry. Because we actually discussed it in our meeting that in the paint industry, we realized 1 year ago that this big fellow is coming and there'll be new production and new marketing and new brand or money will be spent. Here, the only difference is that you're coming into an area where the overall GMV of the industry is so small that the whole thing is still growing. So in a thing which has just started, and I think it's some 4-5 billion is the total, this thing out of the retail overall, and you are basically doing it in 7-8 cities, although technically I think Zomato is in some 20 cities or whatever, Blinkit. So we thought it's a bit early, and also these guys will have to prove themselves. We have also seen in the past that the guy who first, and if he's doing well, continues to do well, unless the market size becomes an issue, which is what we thought in the paint industry, which seems to have worked out a little bit. So we are staying there and we are not going to do anything. Also, please ask the Zepto guys, or maybe solve them into already over, that they should talk about size of business. One fellow out of those two always talks about market cap of the company that he's trying to create. Again, the old guys would say You don't create the market cap, you create your revenue and profit and service or whatever. That is big picture advice, free advice to anybody who I come across.
And I think I'm sure they're listening. Samir, just
because they always say that. I know they always say that we are creating a 50 billion company, 20 billion company. That I mean, it's okay. It's young guys.
Aspirational.
Okay. And they've done well, so no question about it.
Of course. Just a quick word. All these, how should retail watch all these big IPOs? Ola, for example, has been I think, surprise to many who participated, did not participate. Even institutional guys who got in early, they were also surprised by the sharp run-up. That is one. We got Hyundai coming. We've got this. Yesterday there was a report saying LG from Korea is coming, and
everybody
you hear a lot
will
of this.
come. I think Google will come next. They are only 30p there. They should come here and trade at 100p.
No, so that is the point. But you know, when you say in Korea, for example, Hyundai is trading 5p. At 5p, and here you'll get 40. But you're buying you're not buying the Korean Hyundai business, right? You're buying the India business. In that sense.
Yeah, but that's okay. But you know, so what the other thing that was done by the Indian companies is that you go to Africa and buy an African asset and you list it in India, which has happened in our consumer sector, or you buy Moroccan orders, or you buy a business happening in the paint industry in Middle East or somewhere, and it is listed in India at 70p. If you look at that, the same that part of the revenue, if it was there, it would be trading at 8p. So all that is part and parcel of a bull run. I am only saying to everybody, including to us, participate in the IPO. You will not get a lot. But on day one, who's supposed to buy on day one?
Yeah.
In theory, if it goes up, obviously in theory, because it's oversubscribed a lot, so in theory it's going up some X%, which is 30, 40, whatever, 50%. Then at 50% up, who are the guys buying? And please, you guys do this. Nigel should do this. Analyze the IPOs, not from the listing, not from the offer price, but from the first day listing or even the first day closing price. Because then is a genuine this thing that what happens after that. Then you will see that the returns are not very high. So in theory, we can, I think, I don't know exactly, but informally, if you say that from that day, the returns are very normal, then your exit is threatened. That means the guy who's buying in the IPO.
Yeah. All right. Yeah. I think couple of I'll work on that, Samir, and a couple of instances that come to mind. Idea for Tata Technology. Tata Tech.
Yeah.
Yes, it's not moved at all from there. Since we're talking about IPOs, very quick.
It's down 20%.
It's down. Right. I think 1,300 or so, and I think the deal happened last week or so. But before we let you go, Samir, Ola, we have briefly mentioned that. Did you participate?
No, I didn't participate because we have to hire some 18-year-old guys in our company. We only have some 30-year-old guys so far.
No, and in fact, that created quite a buzz. You know, when you all put that out on Twitter, people were saying, not asking what Samir has bought. They were like, what about that CV? Can you reach it to them? So 1-2 CVs I sent to them. Sure, I don't really have a look at it. And let's see.
Okay, all the 18-year-old guys we'll interview first.
So while as you get the 18-year-old brigade in, just to round this off, Zomato, would you be a buyer now? There's Swiggy coming because you're very bullish on quick commerce. Everybody's getting in. But again, the price, the valuation.
I don't know about Swiggy, but I don't think that their, what is it called, Instamart or whatever, is as good as Blinkit. You know, I must tell you, I'm right now in
It's
Dubai.
fabulous. I'm a user, huh?
Last week I was in Delhi and at 6 a.m. we ordered a clothes wire for drying clothes on Blinkit. 6 a.m. at 6:10, 6:09, the fellow was there. It's crazy. It's absolutely crazy. But it's an early stage. Therefore, I think we can all hope that, you know, the industry or the segment does well.
There is a longer sort of run where you can order, you can shoot a printout and they'll get you that one printout.
I haven't tried this, really?
Tried. $7.
Everything. And they can get absolutely everything. Even when you're traveling overseas, you know, you want to collect extra
I got all kinds of puja stuff, including aam ki lakdi for a recent puja in the house. It's phenomenal.
And by the way, for Swiggy guys, the it's coming at $10 billion. Pre-IPO, the private thing has started. So they're selling it saying 30-40% discount to Zomato.
Yeah.
So, something great,
but that
great
much
chat.
Discount should be there. That much discount should be there for unlisted to listed. Because otherwise, how will your issue get oversubscribed 20, 30, 40 times, which means you're supposed to make 30% on day one for whoever.
Got it.
Thank you very
Got
much.
it. Thank you very much.
Thank you. Great talking to you.
And lovely chat and lovely stories and anecdotes. Thank you for joining us. I think the market, by the way, is up about 70 points, 25,224. So it's come off a little bit from the day's high, but is looking pretty solid all across. I think we have the next management with us.
Let's get straight to that. KEI, that's the stock in focus. It's up more than 40% in this year. In fact, UBS has initiated coverage with a buy rating on the stock. To discuss this and more, we have Mr. Anil Gupta, the CMD of the company. Hi, Mr. Gupta. Good morning. Thanks a lot for joining in. Well, KEI has ramped up the branded wire segment, I think from around 16% in 2018 to around 29% in 2024. Now, UBS says that KEI will benefit from this consolidation in the wire market, and they are estimating 4,000 crores of revenues from the branded wire segment by 2027. You think it's doable, Mr. Gupta?
Good morning, Nigel. Yeah, I think at this moment we are, close to 2,500 crore rupees on the wire and flexible segment, the branded wires and flexible segment, and I think by 27 it will be doable. That we are almost growing at 20 to 25% in this segment every year. So 27 is just 3 years away, and it will be possible.
For that as well? You think it could be earlier?
I guess maybe, but no, I can't commit.
Okay, let's focus on a couple of other segments then. Switch gears, small electrical products. There's a big scope of business out there, right? Currently, how much do they contribute, and where do you see that number headed?
No, we are not in FMEG business at all. We are only manufacturing wires and cables, and we are not in the switch gears or switches or other low tension electrical products. So, at the moment we don't have any plan to do that.
No plan. Got it. All right. Then tell us, how is the demand picture looking like? Could you tell us where is demand coming from? As per your observation, Q1 is done. We're mostly through, 3/4 through Q2 as well. How is demand shaping up? If you want to give us a volume growth estimate for this year.
We expect a 17 to 18% volume growth in this year. And the demand is pretty strong, especially from the energy sector, solar developers, data centers, and a lot of other. I think most of the sectors and transmission and distribution sectors in the energy space is doing very well. And I think most of the sectors in our industry, wherever wires and cables goes, are doing well, in my opinion.
Mr. Gupta, there's also sort of a lot of chatter around the possibility of you getting into related spaces like switches and switch gears and maybe, some sort of other electrical equipment or appliances. Can you give us an update on the plans? I mean, if they've firmed up yet, what are the timelines they're looking at, and what is the kind of investment you would be looking at in this side?
I have just mentioned that we have no plan to enter diversify from wires and cable segment, and no plans to enter switches or switch gears or other related electrical products.
Okay. So not even switches and switch gears. Got that. So that's out of the way. Just talking about the potential in the branded wire segment itself, there are certain reports that are indicating that you should be getting 4,000 crores of revenue from branded wires by FY27. Just what is the competitive intensity in the market right now? And in terms of, you've given some volume projections, pricing, do you see any element of a price hike possible? How intense is competition? Because there are a lot of players, now in the branded segment.
I agree that there are a lot of players in the branded segments in wires and cables, at least 6, 7 I know. And but this space is also growing very well. And the companies who are able to create more interest with the distributors and the influencers and able to pen out their marketing activities, in the farthest part of the country, including rural areas, are getting benefited. And we have also done so, and we are focusing on the business development activity with the actual users also, in not just with the distributors, etc. So that is how we have been able to grow faster.
All right. Very quickly, if you could give us your rough market share that you have, I think back of an envelope suggests it's around 10%. And do you believe that you can, increase your market share from here on?
Overall, wires and cable segment, we are at 12%. And 12%. So if talk of only the branded wires segments, I think we are operating at 7 to 8% at the moment.
Okay, all right, Mr. Gupta, we'll leave it on that note. Thank you very much for joining in and giving us some perspective on the business. Wish you good luck for the rest of the year. We are taking a break on that note. Come back on the other side and we'll be in touch with the management of Bazaar Style Retail. Now, this is a company that's going public. The issue is opening out today. We'll connect with, in a bit after that, we'll connect with Pramod Patwari. Go back to the sugar story. He's CFO at Balrampur Chini Mills and talk about the recent regulatory changes and the removal of the ban on sugarcane for the use of making ethanol. Welcome back. So, as promised, the next company on our radar is one that's going to be making its way to the street shortly. Bazaar Style Retail. The IPO is opened out for subscription today. The IPO is consisting of a fresh issuance of shares worth 148 crore rupees and an offer for sale for about 687 crore rupees. To talk about the plans and the way forward, we have with us Mr. Pradeep Kumar Agarwal, Chairman Bazaar Style Retail, and MD Shreyans Surana also joining in. Thank you, gentlemen, so much for being with us. Mr. Kumar, I'll open out with you. So tell us the whole thought process, the rationale, because a lot of this is OFS. The money going into the company is less than 150 crores. And I think you're using a lot of that, most of that, to repay debt. So tell us, what will your debt levels be once you, repay? And just the reason for coming to the market and what you envisage ahead.
Yeah. We are mainly using the proceeds to repay the loan, and our company will be debt-free after this IPO.
Right. Okay. Gentlemen, good morning and congratulations on the issuance. Now, Mr. Agarwal, if you can tell us, you've got the largest retail footprint in Eastern India, right? Versus other.
We are the largest footprint in Eastern India.
So so V-Mart also operates in some of the markets where you are present?
Yes. V-Mart is also there. V-Mart, B2 is also there in some of the market in Eastern India.
How are prospects looking? I mean, I was looking at your matrices compared to the other listed players, but how are prospects looking? Because at the lower end for the longest time, we've been speaking with V-Mart for quite a bit, and they've been telling us demand remains quite subdued, etc., etc. And then not recently, but over the last couple of years, there is Tata's Zudio, which has come through in that segment, and they've sort of grown rapidly. So just give us a sense of what are prospects looking like for you from a market demand perspective in terms of the products you're offering?
Yeah, Judio is basically value fashion. They are offering the fashion garments only. That is the copy of Zara, you can say. And their presence are basically in tier 1 and metro cities only. And we are focused in tier 2, 3, and 4 cities. We are offering the affordable garments to our tier 2, 3, 4 and 3, 4 customers. Basically, in the tier 2, 3, and 4 cities, the penetration of organized retail is till 24 was only 30%. And going forward, it is projected to grow by 21%. CAGR, till 27.
Okay. All right. Hi, good morning, gentlemen. Thanks a lot for joining in. Well, just to get that point out with regard to your borrowings, you'll be debt-free post this, right? Post this issue.
Yes.
Got it. And what were your borrowing costs? I ask you this because last year your PAT was roughly around 22 crores. But on this, 170, 180 crores, there'll be some interest costs, which post being debt-free, it'll flow to the PAT. So what was your rough interest cost last year? You were borrowing at around 10%, fair to assume?
Yeah, it was around...
I hear you. Yeah.
Shreyans, we can't hear you.
It's 13 crore. Am I audible?
13 crores, got it. So that flows down then to your profitability, got it. 13 crores was the interest cost. Tell us about the total number of stores that you plan on adding, and what about the geographic mix as well? As you'll have been mentioning, East is where you'll have higher amount of exposure. So where does this number head to?
I'll just brief you. Am I audible?
Yes, very clearly, Shreyans. Please go ahead.
Yeah, I will just brief you. We started our journey in 2013 from 2 stores in Bengal.
Yes.
And in FY14, and as we speak, as of FY24, we are at 162 stores across 9 states, 146 cities, almost covering 14.6 lakh square feet of retail space. Basically, what we have done is we have followed a cluster-based model. What exactly is cluster-based model is that whenever we go deep into whenever we go into a state, we go deep into that state. We try to capture every district of that state, so we can create a brand for building for us. We can create that brand loyalty among the consumers. Apart from that, our focus is majorly in tier 2, tier 3, tier 4 cities, where as Pradeep said, the organized penetration is very less. And what we are trying to do is that we are playing on 3 things. One is the variety of the articles, assortment that we create. Second thing is the experience. We try to create a shopping mall experience with a good premium feel, with air condition facility, exchange facility, trial run facility in tier 2, tier 3, tier 4 cities. And third is the creation of fashion altogether. So a mix of all the 3 things is helping us to have a higher traction of footfall. And as per our intent is concerned, from FY17 to FY24, we have grown at 26% CAGR in terms of revenue. And in last 3 years, from FY22 to FY24, we have grown at around 32% in terms of CAGR. So our intent will be to grow in the existing cluster only, because there's a huge room of scope that I see in these areas only.
Sure. Mr. Agarwal, just to go back to the second part of my question. So I asked you about the debt, and I also asked you why you were coming to the market. So if just expand on that, sir, because like I said, only 150 crores is coming to the company. The rest is offer for sale. And also, if you've had any conversations with some of the selling shareholders, Mrs. Rekha Junjunwala is one of the shareholders who will be selling. Have you had any conversations? Will she continue to hold some stake in the company, even in the post-listing space, and what the thought process is? Why are you coming to the public, apart from this OFS?
Yeah. Late Rakesh invested in our company in the year 2017-18. And he liked our model very well. And he think that the tier 2, 3, and 4 cities will grow more and more. And Rekha ji is selling only 50% of her holding, and after selling, after post IPO, that her holding will be around 3.9%.
All right, got it. We wish you the best of luck, both of you. Thank you very much for joining us this morning, and we'll speak again on listing day. Thank you very much. Now, back to the sugar story, right? The government essentially taking out any caps on diversion of sugar for ethanol. We have the management of Balrampur Chini now joining us. Pramod Patwari is CFO of the company. Mr. Patwari, good morning. Great to have you with us here back on the program. And congratulations, I should say. It's come through, long expected. Implications, sir, for Balrampur Chini. Does it up the sort of... Can you hear me, sir? Mr. Patwari? I don't think Mr. Patwari can hear me. We'll just try and fix it in a minute. And just sort of have him back. Well, 90 points higher is what you have on the Nifty, 25,240. It's looking solid through the course of the morning so far, although it's been not that long. And market breadth is looking up as well. 1,500 stocks are higher, and you've got about 850 stocks which are lower at this stage. You know, I just want to take a quick look at the newer sort of movers in the mix that we have so far. Praj is, I mean, I think it's still a lot of sugar, but ex-sugar, Tata Elxsi is a big mover, which was not there in the mix in the morning. 82.80 or so is where Tata Elxsi is at. More in a bit. But I think Pramod Patwari, CFO of Balrampur Chini, is with us to talk to us about the announcement from the government in terms of removing caps on diversion of sugar for ethanol. Mr. Patwari, thanks very much for joining us. What does this mean for Balrampur in terms of volumes that you will do, sir? And, you know, how big a positive is this? Does this kind of remove any uncertainty that may have had, although this was widely expected? Go on, sir.
Good morning, Prashant. Yeah, you are absolutely right that it will definitely remove a lot of uncertainty. But we always believe that last year decision was a temporary decision. As far as the Balrampur Chini is concerned, we have total distillation capacity of around 35 crores liter per annum. This is on the basis of 335 days of working. Now, we produce around 3 crores liter of ENA on an annual basis. That leaves us with a balance of 32 crores, which is absolutely available for production of ethanol. We have one distillery, which is a multi-feed distillery, wherein we can produce around 5 crores liter of ethanol in an off-season. That means the remaining 27 crores is available for production of ethanol out of juice root and B-heavy. So it will definitely have a big impact as far as the liquidity to the Balrampur Chini and the profitability is concerned. It will overall improve the liquidity in the hands of the sugar industry as such, and it will help the industry to pay to the farmers on time the cane price which is announced by the government. It is a very welcome move from the government.
Got it, Mr. Patwari. Good morning. Thanks a lot for joining and give us a number then. For this year, what do? You've nicely broken up the capacity and how things work. For this year, what should you be working with? And for FY26, what should that number look like? That's on volumes. And there's a demand, there should be a price increase as well on the ethanol side. How much are you all rallying for? How much you'll be satisfied with?
So, Nigel, good morning again. And as far as the pricing is concerned, in 2022-23 ethanol year, the FRP was 305, and on this basis, juice-based ethanol was priced at 65 rupees 61 paisa per liter. Now for the season 24-25, the FRP is standing at 340 rupees. So there is formula and mechanism already in place. We have just requested the government to continue with the same formula. So, and whatever little increase they can consider on account of increase in the conversion cost. So that is on the pricing front. For Balrampur Chini Mills Limited, you will be knowing that this ethanol year will begin from 1st of November. So we will have only 5 months of production coming in this year, and thereafter it will get spillover into the next year. In any case, the impact of this relaxation will be felt in the next year only as far as the volumes are concerned.
Correct. Okay. So volume for this year will be around 23 crore liters, 24 crores. Should that be a fair estimate?
I think it should be in the region of around 22 to 23 crores liter.
22 liters. Got it.
Okay. So, sir, take your point that...
Yes.
Next year, next year it can be around 32 crores liter. So there is an upside of almost 9 to 10 crores liter in a year's time.
Now, please translate that. Help us sort of translate that in terms of revenue implication as well. If I look at the first quarter, the sugar business did a revenue of around 1,130 crores. Distillery was at 424 crores. Now, let's talk full year basis. Now that the limitations are out of the way, full year, what are you projecting for the sugar business and also distillery now that you get in the 5 months of additional higher ethanol revenue?
So it will be easy for me to convert or explain to that on a season basis. So on a capacity of say 35 crores liter on an annual basis, the distillery revenue can be in excess of 2,000 crores. maybe 2,100 or 2,200 crores on a full year basis. Now, when we produce that much of ethanol, that means we sacrifice sugar through juice route as well as through B heavy route. So production of sugar in that situation comes down. If we assume a production of 1 million ton, so that is on a seasonal potential of revenue on a full year basis.
Okay, so if we put both together and try and gauge the top line impact, sugar and distillery, because as you're explaining, sugar will have to go down a bit and the distillery volumes and revenue will pick up. Full year basis, revenue growth for this year with the 5 months of kicker and perhaps next year, FY26, any sort of sense that we can work with?
So FY24, we had a revenue of 5,500 crores. And on the basis of maths, which I explained, which again will depend upon the feedstock availability, which is cane in our case, the full year revenue seems to be in the region of around 6,000 crores. But again,
that's
maybe at the cost, not for 25. A part of it will accrue in FY25, which is difficult to predict at this point in time. And the balance will accrue in FY26. So on a full year basis, on a season basis, now this business can give us a return of around revenue of around 6,000 crores.
6,000 crores. Sir, just a word on sugar, because the math that we've just discussed is based on policy as of now. If the government gets a little generous and allows exports, I don't know, are you even expecting that? Because allowing exports when we are looking at the festive season coming up, maybe that's just a wrong expectation to have to begin with. Tell us your thoughts on that front. And if exports open up, what that will mean for the sugar business.
Extremely relevant question. So to answer that, I think we will have to start with a inventory available into the system as of now. On 1st of October 24, as per our calculation, we will have an inventory of around 8.5 million ton at a country level. We are assuming a gross sugar production of around 32 million ton. Now, out of this 32 million ton, on the basis of this ethanol policy relaxation, we expect around 4 million ton or maybe max 4.5 million ton will go into ethanol. Even if you assume 4 million ton, that means we will have another 4 million ton of 32 minus 4 is 28 against a consumption of around 29 million ton. So we will draw 1 million ton from an opening stock of around 8.5 million ton. We don't need sugar in excess of 5.5 million ton on a normative basis when we close the season. So there is a scope of 2 million ton of further exports which can be allowed. But what we understand, government would like to see the progress of the season and thereafter can take a call.
Okay. All right. Very quickly, Mr. Patwari, last time the conversation was a little bit short, but I need to ask you on PLA. That's the next big trigger, and brokerages have started penciling in some numbers. You're going to be putting 2,000 crores. Total capacity, I think, is around 75,000 tons. Now, I have a DAM Capital note that's saying that by 2027, you should do around 550 crores of revenues. Do you think it's doable?
So, Nigel, as we have said in the past also, at this point in time, we do not have the liberty to say anything as far as the financials on PLA is concerned. So whatever we have said in the public domain, which is in the public domain, that yes, we are putting up this capacity at a cost of around 2,000 crores. And we expect to commission this project in October 26. So part of revenue from the new stream of business will come into FY27 and the rest will get spillover into FY28.
Hopefully next time around we'll get some numbers, Mr. Patwari, but thanks a lot for joining in. You've helped us out with particularly the ethanol business as well as the sugar business. Next time, maybe a sneak peek into the PLA business as well, which will bring some money. Appreciate you joining in. For the time being, though, we'll slip into a short break. You come back, we'll focus on the commodity sector. We have Manisha Gupta, who's waiting for us.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or Rs 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Okay, welcome back. We've got the market, which is sort of cruising along nicely. 64 points off the day's high, though, but still looking good. Mitesh is back with us. Mitesh, just a quick word. We are up and about. The Bank Nifty is up as well, thanks to, I think, HDFC Bank today. But what are your trades?
The markets are doing decent. On the trading side, a buy on Syngene. I think that's a stock which is breaking into fresh highs. So keep a stop below 852 here and look for target of around 930. And also buy on RBL Bank. RBL Bank, I would recommend a buy with a stop just below levels of 224.5 and a target of around 242.
Okay, Syngene and RBL Bank. Got it. Thanks very much, Mitesh, for those two. Well, let's talk about commodities now. And Manisha is here with what is top of mind as always. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at metals yet again, and that is because all the gains that we saw in the month of August now really seem to be easing off, especially in case of copper. We are just about positive for the month of August. There was a time that we were up by nearly 7 to 10% for this metal and for various others as well. So copper prices, for one, have continued to decline. Today is a 4th straight day of that. The Chinese demand concerns really seem to be weighing on because all the economic data that is coming in from China, whether it is about housing or manufacturing, has continued to be on the weaker side, and all the stimulus measures that we have seen, and there have been plenty, by the way, but they haven't been strong enough or big bang enough for the markets to take their cue or change their structures there, and that's what's weighing on. Well, if you look at the LME inventories, we have seen gains onto that one too. With the kind of gains that we've seen overnight, the LME inventories now stand at a 322,000 tons, which is the highest in last 5 years. Also, the spot in sense of LME is at a discount now to the 3-month futures. Chinese copper prices also have continued to decline. BHP has come out with a report suggesting that last year Chinese demand was 6% on the higher side, while this year that demand has been curtailed to 1 to 2% on the higher side, but there is a demand growth nonetheless. Also, Nvidia, which is heavily invested within copper, has seen earnings kind of decline, and that outlook also is weighing. Nvidia, remember, is heavily dependent on copper-intensive data centers construction, and we have seen demand for that also see a bit of a weaker side. Also, there are concerns about renewed trade wars between China and the Western world, and that could hamper the copper demand as well. Markets also are looking at various other energy and metal prices continuing to decline. Coal prices, for example, are now trading at a 4-week lows. In the last 1 month, we stood all trading in the positive, but the higher sides in coal have not been able to hold on. Within metal sector itself, steel prices have continued to decline for a 2nd straight day today, nearly 2% down. It's off 1-month highs for that one. Aluminum prices have come off its 2-month highs as well, as supplies show increase. The only thing that the markets will watch out for before we end this week is going to be the US inflation data. If that comes in any sense on the positive side, you could be looking at yet another weakness into the markets, but that data will tell you on how the metals will now perform for the next week.
All right, Manisha, thank you very much for that. That is commodities in focus. But, we've got SpiceJet, which is in focus as well. Sudarshan is here to tell us why. Sudarshan, morning.
Morning, Prashant. So the shares of SpiceJet is under pressure and the stock has fallen almost 6% in the early morning trade. And it's on the back of two news flows. First is company has placed 150 cabin crew members on furlough for 3 months. And the reason company has given is this step has been taken in response to current lean travel season. Another news flow is aviation regulator DGCA has put the airline under enhanced surveillance, and regulator says special audit conducted on August 7 and 8 reveals certain deficiencies in the operation, and that's the reason it has been put on surveillance to ensure safety of operations. As far as recent earnings are concerned, both in Q1 FY25 and Q4 FY24, company has reported profit for second consecutive quarter, but as far as revenue is concerned, revenue has seen decline in both the quarters. In Q1 FY25, revenue had fallen 15%, and Q4 FY24, revenue had fallen 19% year on year. But on EBITDA front, in Q1 FY25, EBITDA was up almost 6% on a sequentially, and in Q4 FY24, EBITDA was up almost 20% on year.
All right, got that. So SpiceJet on the radar as well. Thanks very much, Sudarshan, for getting us the details there. Well, we have to take a break now, but on the other side, our special segment, It's the Economy, coming up. Lata today will connect with Pranjal Bhandari of HSBC and Nikhil Gupta of Motilal Oswal Financial Services to decode what to expect from India's first quarter GDP numbers.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer.
The all-important first quarter GDP numbers are going to be announced today at 5:30 p.m. The CNBC TV18 poll shows that economists expect the growth to come in at 6.8%. Now, remember, the Reserve Bank's forecast is 7.1% in the first quarter, but quite a few economists whom I polled were a bit skeptical because the government spent less during April, May, June. Those were election months. And it was also an unusually hot summer, an El Nino summer. So a lot of services could not be offered with the same gusto. But to give us more color on what to expect and where should we train our eyes when the big numbers come, I have with me Pranjal Bhandari, the chief economist from HSBC India, and Nikhil Gupta, the economist from MOFSL, Motilal Oswal. Pranjal, Nikhil, thank you very much for joining. Pranjal, you wrote an excellent report on how, GDP actually moves with the amount of heat, or rather weather conditions. So would you be a bit worried about the number in the first quarter?
Yes, absolutely. I think the number will be closer to about 6.5% GDP number. And three big reasons. One, that elections quarter, the government was not spending that quarter. Second, real bank credit slowed in that quarter from 15% to 12%. And third, and most importantly, was the heat wave, a very debilitating heat wave over March, April, and May. I think which was at the heart of this quarter. Now, as you know, we wrote in a report yesterday, we are finding that temperatures are becoming a much bigger driver of agricultural growth, rural incomes, food inflation compared to rains and reservoirs. You know, we are all tracking rains, we track it on a weekly basis, but actually that doesn't really impact inflation or agricultural growth that much anymore. And the reason being that irrigation facilities are helping us tide over weak rains. But there is no such magic wand for temperatures. And it was a quarter of very high temperatures, and I think we'll have very low numbers on the back of that.
Okay, so 6.5. Nikhil, what are you working with? And of course, you can bring to bear a lot of the EBITDA numbers of the companies. What is GVA? It is EBITDA only. And, you know, the other thing I wanted your comment on is also US GDP. It's been upgraded to 3%. How does all this impact your number? I think you're on mute.
Yes, sorry.
Okay.
Good morning. Yes, so we are also penciling in real GDP growth of 6.5 to 6.6%, with the GVA growth of 6.2 to 6.3% for the first quarter. We were expecting the same kind of growth a couple of months back, in fact, 1 or 2 quarters back as well. We have always been of the view that FY25 full year will be closer to 6.5%, and 7% looks very unlikely. Several factors have contributed to this belief of ours. First of all, we are of a very firm view that FY24 was a very exceptional year. The deflator played a very important role in pushing real GDP growth much higher. That itself, the manufacturing sector, where we saw very strong growth last year, which pushed GVA growth higher and the GDP growth higher, we don't see that repeating. Manufacturing sector itself, we believe, would take off as much as 1 percentage points from real GVA growth this year. That is one of the key reasons why we have always believed that FY25 growth will be much lower than FY24 and what the market is projecting, which was close to 7% a couple of months back. As far as US GDP growth is concerned, yes, US growth has been very strong. It has been strong. I mean, it has been revised upwards, but generally for the last 5 to 6 quarters, it has been much stronger than what anyone was anticipating. Same was the case for India as well. I would be very surprised if we see real GDP growth of close to 7% in Q1. I think Q1 will be the first quarter in many quarters when the actual print would be lower than what the market consensus and the RBI forecast is.
Okay. Well, the Reserve Bank sounded very confident even in the post-policy deliberations. The off-the-record comments were also very strong. They were worried, they said, in the first half of the earnings season. But by the time the full earnings season was over, they were more confident that corporate EBITDA is very strong. So they're putting their bets on 6.9. I mean, very, very close to 7, if not 7% itself. But Nikhil, this subsidy, okay, Pranjal, the subsidy issue, it is still possible that the states declare much or have actually given lower subsidies, and therefore we are likely to see, you know, the GVA growth closer to the GDP. You think we are dabbling in something we don't know over there?
Yes, I think so. I think this big gulf between GDP and GVA, which is, taxes net of subsidies, that was a wedge of 1.5 percentage points in the last quarter. My sense is that a lot of it was driven by the fact that fertilizer prices fell very, very, very sharply. And on the back of that, the subsidy bill fell. What we've seen in the June quarter is fertilizer prices stabilize a little bit. And so my sense is that the wedge won't become any wider at this point of time. But, it will still be a substantial wedge. I would say anywhere like, close to about 0.5 percentage points, but lower than the 1.5 percentage points that we saw last time. But this is generally a problem with GDP accounting. We have a lot of issues where we are not able to deal with a good quality price deflator, especially in NIT. And that's why I would always recommend looking at GVA more than looking at GDP, at least at this point of time.
Yeah, fair enough. There are all those complaints about the deflator and about subsidies. And there was even one economist who said he expects the GVA to be higher than the GDP. He was not even ruling out that possibility. Okay, Nikhil, what would you watch out for in terms of, private consumption has been a disappointment all this time, but we are told that rural recovery is very much visible. FMCG companies said that. So can you give us a little more granular data on what are you expecting on private final consumption expenditure, private capex, if it has picked up?
Right. So on consumption, Lata, we are expecting closer to 4% growth in real private final consumption expenditure.
Oh.
4%.
Okay, but that's just as bad as last year in that case. I mean, the wedge between GDP is running around 7%, and for that, a consumption of 4% is a big wedge, which we saw last year. You think that continues? You're not seeing improvement?
At least for the first quarter, yes. So last year, again, we know GVA is a bottoms-up estimate, and GDP is actually arrived from headline GVA, and that's why we have such a large discrepancy. Discrepancies accounted for as much as half of GDP growth last year. So yes, FY24 was exceptional in that circumstance as well. And yes, although there has been a lot of talk about rural consumption, our estimates suggest that the decline in rural consumption was lesser in the first quarter, but there was still a weakness in rural consumption. Urban consumption growth, on the other hand, grew at a slower pace. So overall, that is what made us believe that real private final consumption growth in Q1 could be similar to Q4 or what it was in FY24 full year as well. That is one. Second, government expenditure, private capex, yes. So we are seeing recovery in private capex. Again, I mean, we don't. Corporate capex last year was very low. The growth in corporate capex was very weak. We are hoping that would not be the case this year. Government capex, on the other hand, was very, very strong last year. We know from the budget estimates that is not going to be the case this year. So it is very likely that government capex will be offset by corporate capex this year. So we could see some shift in terms of private capex growth looking better than government capex this year. But again, overall investment growth, overall manufacturing growth, we are seeing real growth to be lower than last year because deflator played a very important role in real growth last year. Nominal growth, on the other hand, we are hoping it to be much better than last year. I mean, nominal GDP growth last year was 9.6%. We are expecting it to be closer to 10.5% this year, partly supported by higher investment growth and higher manufacturing sector.
Yeah, that's the budget expectation as well. Pranjul, can you just advise me what are the numbers we should watch out for? What are the numbers our viewers should closely watch?
Yeah, look, I would really be watching out for this whole consumption versus investment debate, where we've had a strange situation in which consumption has been extremely low, investment has been relatively high for the last several quarters. Is there going to be any change in that? I think that's one thing that I'll watch out for. I would love to see some increase in consumption because over time it can drive even more investment. So that is one part I would, want to focus on. The other, I would want to focus on agricultural growth because on the one hand, quantity of produce is falling because of heat waves, but on the other hand, prices are rising. So on margin, what really happened? And I think that will be a good indicator of where rural demand could be in the next couple of months. So I would look at agriculture carefully as well. And then, of course, public services is another important player because, how much the government is spending on capex versus revenue spending. So what we see on the GVA side between construction and public services, I think that will also be an important indicator on what the government is prioritizing. So I would look at these bunch of things, but I think the consumption investment debate will be the most important one to watch.
Okay, yes, it's about time consumption picked up, didn't it? Nikhil, final thoughts, any one or two numbers which we should highlight And secondly, what's your full year number?
So full year number, Lata, is 6.5% for real GDP growth, 6 to 6.1% for real GVA growth.
Okay.
Again, the numbers to look at for, of course, is consumption and investment from the GDP perspective. From GVA side, we need to be very closely looking at what is the agricultural sector growth. A lot of workforce depends on the agriculture sector, so it is important to note what is happening in the agriculture sector. Apart from that, manufacturing sector is what we will be looking for. And lastly, I always look very closely about this. One component of the services sector, which is community, public administration, and defense sector, because that includes a lot of informal sector or unorganized sector, or a large part for which you do not get too much high frequency data.
The last
So
one, you mean the public administration, defense, and other personal services. That one? Okay. Okay.
Right. So it includes government expenditure, but it also includes a lot of other sectors.
Other personal services. Okay, fair point. And Prajul, finally, what's your full year number?
Yeah, just under 7%. And what is baked into that is that while this quarter will be rather weak, we think growth will pick up in the quarters going forward, the next 2 quarters, because the heat wave has abated, the government has started spending, liquidity is much more easier now than it was about 2 months ago. So weak growth in June, but after that some pickup. So overall, growth being just under 7% for the fiscal year.
Okay. Thank you very much. That's the expert view. More likely to come below our poll at about 6.5 and 6.6 is where Prajul and Nikhil stand. 6.5 actually, to be precise. I'm going to give the non-expert view. My view, I think, is it's going to be pretty close to 7. But let's see. This is just a toss of a coin, and we will know at 5:30. Thank you very much, Prajul and Nikhil, for sparing time for us. We'll touch base with you after the numbers come. That's it on this edition of It's the Economy. After a break, Chartbusters.
A leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS,
From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the
MSCI index changes set to come into effect today. HDFC Bank trades higher on expectations of inflows in excess of over $1 billion as MSCI raises the foreign inclusion factor.
Max Estates corrects after it launches a QIP to raise 800 crore rupees, while Prestige Estates, on the other hand, rallies on a QIP fundraise worth 5,000 crore rupees.
Sugar stocks are surging as the government lifts curbs on ethanol production from cane juice, B heavy molasses and C heavy molasses for the 2024-25 sugar season.
Vodafone Idea trades slightly under pressure ahead of its curative petition hearing in the Supreme Court over its AGR dues that are scheduled later today.
And SpiceJet is under pressure after the DGCA puts the airline under enhanced surveillance after an engineering audit reveals deficiencies. 150 cabin crew staff have also been placed on furlough as the airline copes with a lean travel season and a reduced fleet size.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me for the entire of the week is Hormoz Fatakia. Hormoz, well, a good start to the series, September series. Things looking good. I think the big cue later today will be the MSCI rejig. Last few days, we have seen the Midcap index do a relative underperformance. And today as well, we have a bit of a bounce back that we're seeing in the mid-cap space. So let's see how it ends.
Mid-caps have been an underperformer, right? But the Nifty has been, it's been all about the large caps all through this week, right? 11 days of gains, now into the 12th day for the index. 25,230 is where we are. We made a high of close to 25,260 earlier in the day. The 25,285 is the level that I am watching out for, and that's because if we get there, we'll be 4,000 points from the lows of the budget in just a month. So that is the kind of recovery that we've seen on the index. But of course, plenty of corporate conversations lined up as well.
Well, that's right. Let's get straight to the first corporate then. GPT Infra, the company recently raised close to 175 crore rupees by the QIP route. To understand what are the plans, what's the way ahead, how will it be used, well, we're joined by Mr. Atul Tantia, the ED and the CFO of the company. Hi, Atul. Good morning. Good to see you win. Well, there's been a lot of interest in the stock, and now you've gone ahead and you've raised money by the QIP. 175 crores is what you've raised. You've said it'll be used to pay down the debt. So give us a couple of numbers. The rough interest per annum is around 30 crore rupees. What was the debt? What does it come down to? What does it mean in terms of interest savings?
Sure. Thank you. So the debt currently on the balance sheet is about 190 crores. The interest number includes the finance cost in terms of the bank guarantees, which is typically the higher number for us. And so this reduction of debt will reduce the finance cost by almost 15 crores, which is almost 50% of what we had spent last year. This will directly flow to the PBT and help us in reporting better numbers in terms of the PAT.
Okay, and the debt that you said was 190 crores, it comes down to what?
It comes down to about 50 crores.
50 crores, got it. Just one more question. You know, the promoter holding, as I see last reported, is around 75%. So the promoter holding will come down a little bit. But also it appears that part of the shares of the promoter holding is pledged or it's encumbered. Could you clarify on that?
Sure. So the part of the promoter holding is pledged to the working capital bankers of the company, which is led by SBI. This is towards the working capital limits of the company, and it is not for any other reason that it is pledged. This, as with the QIP route, as the debt pays down, this, as per the discussion with the bankers, this will also get reduced.
So by the end of this fiscal year, should we see the promoter pledge free, or say it's a story of FY26 when, you know, because from a share market perspective, you don't want the promoters holding to be pledged. So is there a plan to make it pledge free? If yes, by when?
There is a plan to make it pledge free. I think by end of FY25, we should see part of the pledge getting released, and FY26, we should see it fully getting released.
Right, you're getting fully releasing promoter pledges by FY26 is what you're saying, Atul, if I'm getting that correct, right?
Correct.
Right. So getting to the business aspect of things now, Atul, I wanted to talk to you about your order book currently at around 3660 crore, if I'm correct. Could you share a breakup of that? How much have you received in terms of order inflow so far in FY25, and what's the pipeline looking like?
Sure. So in terms of FY25, we received about 825 crores of new orders. This includes a large contract from RVNL for construction of the elevated corridor over the Kona Expressway in Calcutta. We do multiple bridge contracts for NHAI, RVNL, railways, and the likes. In terms of the order pipeline is quite strong, and we are continuously bidding for new contracts. With the infusion of funds via the QIP route, our net worth will improve, and we'll be eligible to bid for much larger contracts. And that is the plan going ahead as well.
What will be the change in the size of the contracts, if you could quantify that, and also if you could tell us what is the what are the projects that you are L1 on currently as well?
So in terms of our current eligibility, we are able to bid for contracts up to 1,000 crores in our own name. The largest contract that we have on our order book is about 820 crores from NHAI for construction of a bridge over Ganga and Prayagraj. With this infusion of funds via the QIP route, we'll be eligible to bid for much larger contracts, about 1,200, 1,300 crores as such. L1 status, we normally don't declare, we declare as and when it is disclosed by the clients. So we will disclose that going forward when we come to it.
All right, Atul, I understand that you're guiding for a revenue growth of 20-25% for this year, but the start has been soft. In the first quarter, you grew only by around 2.5%. Do you stick to that guidance number? And also give us a sense on the breakup. You know, the infrastructure mix currently is around 93% of the mix. How do you see this mix evolving in the time to come?
Sure. So the current quarter, you have to be, the first quarter of this financial year, you have to be mindful, was an election quarter. With the elections, especially the migrant workers tend to go back to their native villages to vote, etc. So that leads to some disruptions. That is why the first quarter was slightly muted. We continue to hold on to our guidance of growing by almost 25% for this financial year. Rather, I should say for the next 3 financial years from till FY27 at least. And that is the number that we are quite confident of achieving as well. In terms of the segment revenues, 93% last year was the infrastructure business and 7% was the manufacturing of concrete sleepers. We expect that to be around 88 to 90% to be infrastructure and 10 to 12% to be the concrete sleeper business.
And by when would that happen, Atul?
So this financial year itself, we will see consumer business is picking up as well. So this financial year, we expect consumer to be around 10 to 12% and infrastructure to be 88 to 90%.
And what about the margins in the railway sleepers business? I'm assuming you enjoy higher margins in that business, right?
So the Indian business for railway congress sleepers enjoys a similar margin of about 13%, which the infrastructure business enjoys. The international business is at a slightly higher margin. So on a blended basis, we would say that the margin in the congress sleeper business is about 14 to 14.5% compared to 13% for the infrastructure business in India.
Got it. So blended margin I missed for the year. What are you guiding for?
Pardon?
Blended margin for the year. What are you guiding?
Okay, so blended margin, we have been always sticking to a hurdle rate of EBITDA of 13%. And we are guiding for a 13% EBITDA margin on a blended basis for the full financial year. That is a number that we are comfortable with. And that is a number that we have achieved over the last decade as well. So that is what we are guiding going ahead as well.
Okay. The other aspect is, it's good to see you're generating operating cash flows as well of more than 100 crores on a per annum basis. So that's good. Your working capital days have been gradually coming down. A few years ago, I think it was around 180 odd. That's come down to, I think, 105. Where does that number stabilize at?
So we expect working capital days to be around 90 to 100 days. It's a healthy number given the kind of contracts that we do, especially bridges contracts, which have milestone-based payments. And that is the number that we would be comfortable with. We should be able to achieve that in the next couple of quarters.
Give us a sense of your international business, Atul, especially Africa. What percentage of your order book comes from the continent? And there were some reports of some disruptions in Ghana as well. How are things shaping up on ground over there? And what is the kind of growth that you're expecting from the international business?
So in terms of the order book, about close to 175 crores, which is about 5 to 7% comes from the international business. We have 3 factories in Africa, one in South Africa, another in Namibia, and the last one in Ghana. These are for the manufacture of railway concrete sleepers in those respective geographies. They do supply to the local railways there. We are catering to a large market there. The market is very, very, I would say small compared to what it is in India, but it is a higher margin business for us. In terms of the political stability in Ghana, it's quite stable. It had faced its own issues with respect to IMF default, but that is something that they have kind of resolved. Our project is funded through the European International Bank, so we don't see any challenge with that.
Okay. All right. Atul, we appreciate you joining in. We're going to hold you to these numbers. Post the QIP, interest cost comes down by 50%. You're confident of growing by 20-25% for this year. Working capital days comes down. And margins hold steady at around 13%. I appreciate you joining in and giving us all of those details. For the time being, though, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda De of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu, take it away.
We are talking about RateGain Travel Technologies, the travel-focused SaaS or software as a service player that had a softer start to the current fiscal. In the first quarter of FY25, while overall revenue grew by 21% year-on-year, the performance of the distribution business was sluggish, marked by several one-offs. However, data as a service, which is DaaS, and the digital marketing business, which is MarTech, had put up a strong show. The company nevertheless managed a decent operating margin and is confident of maintaining the full-year guidance riding on a strong order book. RateGain has raised 600 crore capital and has enough resources to pursue inorganic opportunities. This remains a key watch given RateGain's success in turning around acquisitions. The current soft patch might just be the right opportunity to add the stock for the long term.
Okay, Madhu, thanks a lot for that. Well, on that note, though, we'll slip into a short break. On the other side, we'll have Jal Irani of Nuvama Institutional Equities, who will be joining in with the key takeaways from Reliance AGM. Stay with us.
Startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Beyond our schools, I'm happy to share that through Reliance Foundation, we aim to provide world-class early childhood care and education for over 10 million children from disadvantaged communities across India. This program aims to build capacity development models and provide learning resources for students and teachers all over India.
I was at ISB. It's the rare occasions when she was not instructed.
Jal, good morning. Thank you so much for joining in. What do you make of the slew of announcements that were made yesterday by Mukesh Ambani when it comes to new energy or the O2C business, the prospects that they've laid out for the new energy business? What do you make of those announcements?
So I think the market has been seeking clarity, especially on the new energy business, and certainly this AGM provided a good direction towards that. I think the most important statement that the chairman made is that the new energy business within 5 to 7 years could become as large and equal in terms of profitability to the O2C business, which is the cash cow oil to chemicals business, the refinery and petrochemicals. Now, the magnitude of this is immense because this is the largest profit bucket on a attributable consolidated profit after tax. The O2C business contributes more than 50% of its bottom line. So if Reliance is going to replicate this within the next 5 to 7 years, not only is it going to be immense in terms of profits, but notably this business is also green and clean. So therefore, unlike petrochemicals and refining, which arguably gets not a fair or not a valuation as high as some of the other businesses, this shall get a valuation which will be significantly higher. Besides, also, notably, the new energy business is actually significantly linked to especially the O2C business, and will, as a result, the entire company will be net carbon neutral by 2035. So even their existing O2C business, which is the largest profit, will turn green, and there'll be a valuation re-rating there as well. So by far, I think this was the most significant announcement.
All right. Hi, Jal. Good morning and good to see you in. Nigel on this side. So you have spelled out, what impressed you and the way ahead as well. But can you quantify some of that? How do you see the business evolving? If you had to put a couple of numbers, what is it currently? And how do you see it evolve in the next 3-4 years on various verticals? That'll be helpful.
See, essentially, the chairman has quantified it for you. So that's actually the number. But if I mean, it's a new business globally. It's a EV moment to the world, and India has got the opportunity to actually be the Middle East in this business, one of the lowest cost and one of the largest in the world. And the way I look at it is Reliance is actually strategizing very wisely to be the Tesla of this industry. This is something that they have over the last 5 to 6 years, very significantly put the pillars and building blocks in place. They bought out about a dozen leading technologies and key players across the world. And that is beginning to actually now translate into actual capacities. The first, which the chairman specifically said, is going to be the 10 gigawatt PV module facility starting by the end of this year. Now, for that itself, they had bought out a company called REC, which is a leading technology company in the space in the world. And Reliance will be commissioning the HJT technology, which even the Chinese are barely beginning to roll out, and a small portion of the Chinese are beginning to roll out. So Reliance will be cutting edge technology. And to put 10 gigawatts into perspective, while India's current module capacity is about 50 gigawatts, production is only about half of that. And this 10 gigawatt, when it's get commissioned in true Reliance style, they will ramp up very quickly to full utilization. And not only that, the efficiency of these modules will be amongst the highest in the world at 26%. The efficiency of most modules at the moment is 20% or potentially even less. So therefore, by far, so this is the first thing one can expect. And shortly after that, they'll be commissioning multi-gigawatt size electrolyzers, which will be using the solar power energy that they produce to convert into green hydrogen, and simultaneously setting up 30 gigawatts of battery facilities all this is by next year and the years that follows, 25 and 26. Now, 30 gigawatts is completely off the graph. It is all this is very essential to provide round-the-clock power. So not only the cost is going to be very significantly lower, but also they'll get round-the-clock power. And as the chairman actually highlighted, they've also got the land and the port facilities to become an exporter of green ammonia eventually. So that land being a very critical part, which has also been allocated, including the Deen Dayal land port facility for exports, basically. So these are some of the broad timelines that one would be looking at in the space.
You know, Jal, there were some targets that were laid out for both Jio and for the retail business for doubling their revenue and EBITDA over the next 3 to 4 years. Do you see that as achievable considering the way both the businesses are growing and at the pace at which they are growing, or do you see that happening much before the 3 to 4 year timeline that has been set out?
Well, essentially, these businesses are no longer in the early stage anymore. Investments are in place, and now they're in a phase of operational leverage. So essentially, what happens with every unit of volume increase, you get a margin increase as well, because your fixed costs are not going to increase at the same pace. So therefore, the profit growth is potentially going to be higher than top line growth, and top line itself is growing significantly into double digits, mid-teens at least. And with for example, in Jio itself, the tariff hike which has been taken at the moment significantly flows through to the bottom line. So they should achieve fairly strong growth in those areas as well.
All right, Jal, we leave it at that. Thank you so much for joining in and sharing with us your thoughts on the Reliance Industries AGM and the targets that the company has laid out going forward. Jal Irani there of Nuvama Institutional Equities. Incidentally, Nuvama has also laid out its highest price target on the street for Reliance Industries, which is at 37.86. The stock currently 0.5% low, but continues to remain above the mark of 3,000. Take a short break. Back with more on the markets and specific stocks on the other side. Stay tuned.
Go beyond academic learning to promote complete development, including social emotional skills, critical thinking, and physical well-being. As part of our work with the Integrated Child Development Services, Reliance Foundation developed and refurbished 100 Anganwadis in Varanasi last year.
Reliance Retail recorded gross revenue of 3,06,848 crores, a growth of 17.8% over the last year. We continued our trajectory of strong profit growth, registering an EBITDA of 23,082 crores, up 28.4% year-on-year, and net profit of 11,101 crores, up 21% year-on-year. At 8.5%, the EBITDA margin continued to show improvements and grew 70 bips year-on-year. Our stores witnessed over 1 billion footfalls, and we have had more than 1.25 billion transactions across our channels. Registered customer base crossed a milestone of 300 million customers, nearly the population of the US. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Jio TV Plus brings all your entertainment, live TV, on-demand shows and apps together in one easy-to-use platform. With Jio TV Plus, you get access to over 860 live TV channels with all leading channels in stunning high definition, plus the best content from apps like Amazon Prime Video, Disney Plus Hotstar, all in one place. And we're optimized Jio TV Plus for super fast channel switching experience. Switching between your favorite channels is now faster than ever, so you won't miss a single moment of action.
What makes Jio TV Plus really unique is how it combines content from over a dozen OTT apps, hundreds of live TV channels, and a vast library of on-demand movies and shows, all with a single login. You no longer need to juggle multiple apps or remember different passwords. Jio TV Plus handles it all. Also, a powerful recommendation engine offers personalized suggestions based on your viewing habits, making it easier than ever to find something you will love. And if you miss a show, Catch Up TV lets you go back up to 7 days and catch up on what you missed. With our upcoming Play Pause feature, you will soon be able to pause live TV and pick up right where you left off whenever you are.
Back with us here on Chartbusters. The Nifty remains around the mark of 25,220, but the bigger takeaway is that it is in the green and in the green for the 12th straight day. And one stock that may ensure that it remains in the green for the 12th straight day is HDFC Bank, and that is likely to see inflows today worth up to $2 billion, considering the MSCI adjustments that will take place towards the closing of the trading session. Currently 0.5% higher at 1650. It has done precious little since the MSCI announcements were made. The stock has been absolutely flat since the 13th of August, since from the day the announcements were made. But the stock that is doing well today, though, is RVNL, and that is the stock that is also an MSCI inclusion and is likely to see inflows of anywhere around 200 to 220 million as well. At the highest point of the day, 3% higher. It has also signed an MOU with Patel Engineering for some construction work. So closing in on 600 is RVNL, and also pull up Dixon Technologies. That is another stock that is likely to receive some inflows courtesy the inclusion in the MSCI indices. Currently 0.8% higher, slightly off the highs of the day, but above the mark of 13,000. And lastly, the Nifty Pharma Index is what I wanted to highlight. The top sectoral gainer in today's session, comfortably with gains of over 1%. At the highest point of the day is Nifty Pharma. Also in the green is the Nifty Realty Index. But with that, it's a wrap on this edition of Chartbusters from Nigel, me and the team that put this show together. Thank you so much for watching. Trading Hour takes the action forward.
It's all about making TV work for you.
But that's not all. We're elevating digital entertainment with advanced interactive features. Imagine watching a live cricket match or the Olympics and being able to pull up stats, buy tickets, or switch camera angles, all without leaving the action. That's the power of Jio TV Plus.
Jio TV Plus is also designed to be a truly social experience. With integrated social features, You can share what you're watching with friends, join live watch parties, or discuss your favorite shows in real time. This is the future of TV, and we are excited to bring it to your living rooms.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage. With current
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar, and with me Sonia Shenoy, and the markets continue to inch up. This is the 11th straight day of gains for the market. It's been a steady morning so far. The Nifty is above 25,200. Mid-caps are outperforming, and this week so far, the Nifty has seen a rally of 1.6%, while the mid-cap index has seen a gain of about 1.3%. Today, you are seeing that outperformance from the broader markets, though, after sulking a bit over the last couple of days. The big winners today, now the top Nifty gainer is Bharti Airtel. Here today, there are a couple of news flow. One, Bernstein raised the target price on Bharti Airtel to 1740 versus earlier 1600 rupees. So there is that increase in target price boosting the share price of Bharti Airtel. And secondly, remember yesterday in the AGM, Chairman Mukesh Ambani spoke about how they want Jio's revenues to double in the next 3 to 4 years. Well, implied in that, according to analysts, is that the assumption that there has to be tariff increases. Otherwise, it's a tough target, right? How do you double your top line in 3 to 4 years? So the street is also baking in certain tariff increases, which should benefit Bharti Airtel, considering that it has about 37% of the revenue market share. So that's another added, positive for Bharti Airtel. Hi, Sonia.
Hi, Reema. Absolutely. And the market as well, right? Overall, looking really good at this point in time. And despite everything, the market building on to its gains and sitting at fresh record highs. So lots to talk about as we begin the day this morning. First up, we have SpiceJet, which is under pressure after the DGCA has put the airline under enhanced surveillance after an engineering audit revealed deficiencies. Sudarshan joins in now with more details on that. Sudarshan, over to you.
That's correct. So SpiceJet stock is under pressure. The stock has fallen up to 6% on the back of two news flows. First is company has placed 150 cabin crew members on furlough for 3 months, and the reason company has given is this step is taken in response to current lean travel season and reduced fleet size with long-term stability of organization in the mind. The second news is Aviation regulator DGCA has put the company under enhanced surveillance, and the reason DGCA has given is special audit conducted on August 7-8 has revealed certain deficiencies in the operation, and that's the reason it has been put on surveillance to ensure safety of operations. Now,
if you talk about the recent earnings that company has announced for Q1 FY25 and Q4 FY24, company has reported profit for second straight quarter, but revenue continues to see a decline. And total assets as of June 2024 was up 17% year-on-year, and total liabilities had fallen almost 14%. Now liabilities are more than rupees 6,300 crore higher than the total assets. Also, auditor's note was there with the earnings. What does auditor say? It says accumulated losses as of June 2024 amount to almost 7,700 crore, and this indicates the existence of material uncertainty, and it casts significant doubt about company's ability to continue as a going concern. And apart from earnings, company had also approved fundraising up to rupees 3,000 crore via QIP, and which is expected to be completed this month. But will the QIP money enough? Company in its statement had said fresh infusions should enable the airline to expand and unground its fleet, enhance operational abilities, and settle liabilities and improve market competitiveness, and funds will stabilize overall operations.
Thank you very much for that. The other stock that we're tracking today is Vodafone Idea. Now, the stock is not doing too much, but it's on our radar because today the Supreme Court is going to hear the curative petition filed by the company on its AGR dues. The company had said that there were certain arithmetical calculations in the principal component of the AGR. They even requested for a waiver of the penalty. So therefore, the AGR dues which are on the company are about 70,000 crore rupees. According to the company's calculation, the actual AGR amount should be lower by about 30 to 35,000 crore rupees. And that's why the curative petition has been filed. Now, if it is successful, then it provides a lot of cash flow relief for the company. Remember, from H2 of next year, the company, the 4-year moratorium which is granted for these AGR payments will come to an end, and the company has to make big payouts, 29,000 crore rupees, and from FY27 we're talking about 43,000 crore rupees of annual payments. So if there is that AGR relief, maybe 50% of the dues come down, then this cash flow outflow, this cash outgo that's anticipated from next year will come down. That said, I just want to caution that historically, instances of curative petitions being heard, and even being successful are fairly rare. But analysts point out that considering that the government is largest shareholder in Vodafone Idea, and if Vodafone Idea has to be a viable, competitive third private player, then this perhaps is a necessary step, this kind of relief for the company. Any positive news flow on this curative petition benefits Bharti Airtel too, and even Indus Stars. But there are two other triggers. We spoke about how, perhaps tariff hikes are going to be in the offing on a more frequent basis compared to what they've been. We've just had a tariff hike, so don't expect anything for the next 12 months. But, as the AGM pointed out, if Jio has to double the revenues in the next 3 to 4 years, maybe tariff hikes are baked in. And secondly, there is that MSCI India rejig too, and the expectation is that Vodafone Idea gets added, and that could result in inflows in the stock.
Okay, since we're talking about Vodafone Idea, the Telecom Minister Jyotiraditya Scindia has said that the union government will not interfere in Vodafone Idea's affairs. Speaking to Money Control, Scindia added that the government would like to have a competitive telecom sector. Remember, the centre owns about 23.8% stake in Vodafone Idea. Take a look.
Vodafone Idea has got its own professional management, and therefore what happens in the financial and operational workings of a company is their business and not our business as a ministry. At this point of time, as I mentioned, it is the management of the company that has to decide what practice to follow. We would like a competitive telecom sector. And as the Ministry of Telecom would like, at the end of the day, the best quality of service and choice, as you mentioned, to customers.
Well, apart from telecom, pharma stocks are also in focus on the back of a Citi note. Ekta is here to get you up to speed with all the details there. Ekta, over to you.
Well, yes, the Nifty Pharma Index is going from strength to strength, and we do have a very comprehensive report which is coming from Citi today with regards to a lot of pharmaceutical stocks. So for Aurobindo, they have a sell call, but they've raised the target price to 12.85. They believe that the street is building a 9% top-line growth over FY24 to 26, which is a bit stretched according to them. Dr. Reddy's sell call, but they've raised the target price there as well. According to them, earnings may fall disproportionately post-Revlimid generic if in case the company does not streamline their cost structure. Gland a sell call, but they've raised their target price to 14.20. They've cut the FY 25 to 27 estimated EPS by 16% and 7% respectively, reflecting the competition in the US baseline products and softness in generic prices. Lupin sell, but they've raised the target price there to 1700. FY 26 is expected to be a stronger year according to them. Zydus, they have a sell and a target price of 900. Now coming to the buy, Sun Pharma, they've maintained their buy, but they've raised their target price as well to over 2,000 odd rupees by raising their multiple to 37 times versus 30 times. Cipla, they've maintained a buy. They've raised the target price to 1870. They say it's their top India pharma pick. Valuations have moved up and still appear comfortable according to them. And lastly, Torrent Pharma, buy with a target price of 3,940 odd rupees.
Thank you very much for that. We will slip into a break. We'll come back and discuss commodities on the other side with Manisha Gupta. Stay tuned.
that are 1/4 of the global average and just 10% of those in developed countries. In 8 years, Jio has grown to become the world's largest mobile data company. Today, Jio is a 490 million strong family, reflecting the immense trust and loyalty of our customers. I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the board of directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. When Reliance grows, we reward our shareholders handsomely. And when our shareholders are rewarded handsomely, Reliance grows faster and creates more value.
In terms of earning growth, we see a moderation in earning growth for this year, and maybe for next year, a mid-teens kind of growth. But overall, we don't think market is an overbought position, and is a more or less fair valuation, we do say. So more and more FDI, more and more FI and trade partners will come in next 5-6 years. For next 5-6 years, we do see a good investment in industrial side, especially on power side, railways, defense. So it's a much broader and longer theme. And Chinese players and Korean players are not present in India as well as in US and Europe. So complete opportunity for India and export opportunities also for India is very, very high comparatively. For next 6 to 7 years, the overall power.
Welcome back to Trading Hour on CNBC TV18. Looking good for the market, continues to be at record highs, building on to its gains. But one sector that's in focus today is sugar, because the stocks are surging as the government has lifted curbs on ethanol production from cane juice, B-heavy molasses and C-heavy molasses for 2024 and 2025 sugar season. Manisha is here to explain this to us. Manisha, over to you.
Well, thank you so much for that. Yes, it's come as a very strong, big news in the month of December when the government did put in all those restrictions. It was very jittery for overall industry, which has invested a lot when it comes to distilleries and for ethanol blending as well. But government, in its latest notification that came in last night now, says that they are removing all restrictions when it comes to making ethanol, whether it is from cane juice, B-heavy or C-heavy molasses. Well, that has been a big positive, but that's not the only one, because the government in another notification also says that ethanol distilleries are now allowed to participate into auction with Food Corporation of India, which it does for private traders. So it's not a different stream for them, but they can also put in their tenders within this e-auction. Now, this is a positive in the sense that the industry will now be allowed to participate into this. And 23 lakh tons is the cap that has been put in. Also, you can e-auction the kind of ethanol that you are permitted to produce as via OMCs on what they will buy from you. But there is a catch here. One, the whole e-auction selection procedure or process is a long drawn one. And the second is the kind of pricing that FCI has put isn't really profitable for many of these ethanol makers. So a couple of things that the markets do hope that will seek some clarity on. One is the ethanol pricing increase that hasn't been changed yet for the new season. So that is something that the industry is waiting for. And the other one is the sugar MSP. Well, that has been an ask since 2019. So these are a couple of things. If they also come through, then all the pieces of the puzzle will just fit in proper.
Okay, but even before the pieces of the puzzle fit in, the stocks are very excited. Triveni Engineering, 8.5%. Dhampur, Sri Renuka, up nearly 6-7%. Thank you, Manisha, for that. In fact, let's get our viewers the conversation that we had with the management of Sri Renuka's earlier today. Listen in.
No, in fact, whether we like it or not, all these changes are going to be relevant once the next crushing season is started. Because cane juice as of today is not available because crushing is just not there. So I would say October onwards, it should start impacting the operations and operations big time. We are actually looking at an increase of closer to what the maize ethanol price is. Say, for example, as far as cane juice is concerned, which is about 65 rupees a liter, we want it to be jacked up to closer to 72 or 73 rupees a liter. And secondly, for the B-heavy, we want it to be suitably increased to about 66, 67 rupees. So that we hope the government would take suitable decision in the matter.
Okay, thank you very much for that. Even the likes of Global Spirits and Triveni Engineering are rallying hard today. We'll slip into a short break on that note. We'll come back and discuss market technicals. Mitesh Thakkar will join in on the other side.
Including generation and transmission, could be around 50 lakh crore.
Investing.
Welcome back. Some buying has come in NIIT Limited, the company that provides corporate learning. NIIT Limited is up 5%. It's been a bit choppy for the company. Last week, it rallied hard because of the promoters buying. Ramesh Damani, bought some shares, 8 lakh shares in the company. But after that, it saw a bit of a correction, and today it's up nearly 5%. The other one is Unicommerce eSolution, blockbuster debut on Dalal Street, but it underwent a bit of a correction over the last couple of days, profit booking. But today, Unicommerce eSolutions is up nearly 5%. Let's welcome Mitesh Thakkar on the show now to get in a few market technicals. Mitesh, markets continue to climb higher bit by bit. Is there a trade on any of the indices? And what would your stock calls be?
Yeah. So I think both the indices look good in health, and one which can be traded right now is the Bank Nifty. take a stop just below today's low, which is about 51,300. So we'll take a stop at about 51,280 and look for a target of 51,700, 5800 on the upside. So maintain a positive bias. On the stock side, I have a buy on City Union Bank with a stop at about 170 or 116.5 and look for targets of 182. And one stock which is reversing with a lot of strength is Shree Cement. So buy here with a stop at 25,000 for targets of 26,000.
Okay, thanks a lot, Mitesh, for that. Appreciate it. Let's slip into a short break. On the other side of the break, we'll get you more market updates and get you up to speed on all the latest stocks that are in the news. Stay tuned. Welcome back to Trading Hour on CNBC TV18. Well, there are plenty of stocks at 52-week highs, so just thought, mention some of them to you. A lot of the pharmaceutical stocks have been at fresh highs. So today as well, there's Divi's, there's Cipla, Torrent Pharma, Lupin, Apollo Hospitals. All these pharma names are sitting at fresh 52-week highs. Some of them are building on to their gains. Some of them are coming off their day's highs. But the trajectory for these pharma stocks in the last 6 months has been amazing. In fact, a lot of these names, if you look at, something like a Divi's Laboratories, if you just pull up, say, a one-year chart, you'll see the kind of trajectory it's had. This is, of course, today for Cipla. Divi's there in the last 1 month, it's up about 4%. In 15 days, it's almost, a big rally. In 12 months, about 40% move. So big moves coming in pharma. But trading of Tata Motors DVR shares will stop from close of trade today. To discuss more on this, we have Sriram Velayudhan of IIFL Securities who's joining in. Sriram, thanks a lot for joining in. First, if you can just explain to us what does this really mean for an average shareholder?
Yeah, hi. Good morning. So as you pointed out, yesterday was the last day to trade DVR, Tata Motors DVR, to get the benefit of shares of Tata Motors. So what happened was the scheme of cancellation of DVR being similar to what happens in case of mergers. There was an index adjustment in Nifty and Sensex, because Tata Motors is a part of both the indices. When DVR gets cancelled, the holders of DVRs will be issued shares of Tata Motors. First September is for this situation. So as a result of issuance...
Sriram, I think, there is some issue with the phone line. We can't hear you very well. Can you just repeat what you were saying?
Sure. So what I said was, as DVR shares went X, at the same time there was a pick up in Tata.
Okay, I think we have a really bad line, Sriram. So unfortunately, we'll have to connect again. Hopefully, we'll get you back on a better line. But thanks a lot for joining in. So that's on the Tata Motors DVR. Well, for now, just wanted to once again point out a couple of more stocks that are doing pretty well at the moment. We've spoken about a lot of these pharma names. Even IT is coming back in a big way. So HCL Tech is at a fresh 52-week high today. Something like a Persistent Systems has been gaining a lot of ground. You have Info Edge, which is at a fresh 52-week high as well this morning. And then in the pharmaceutical space, something like a Dr. Lal Path Labs, Krishna Institute of Medical Sciences. So these are two spaces that are coming back, whether it's IT or pharma. But I think Sriram is back with us. Sriram, sorry, we're getting you at a better line. If you can just, explain to us once again what the impact of this DVR shares being suspended, what does this really mean?
Sure. Now, as DVRs, as yesterday was the last day to trade DVR, yesterday was also the last day for holders to buy DVR to take a benefit of the DVR cancellation. Now, as a result of DVR cancellation, the holders will be issued shares of Tata Motors. Now, this being similar to a merger event, the weight of Tata Motors in Sensex and Nifty indices were to be adjusted, because as shares of Tata Motors will be issued to the holders of DVR, Tata Motors being part of both Sensex and Nifty, the passive fund tracking fund managers had to adjust the weight of Tata Motors. So roughly this event aggregated Nifty and Sensex was a $250-260 million inflow event, as a result of which we ended up seeing a bump up in price of Tata Motors towards the end of yesterday's trading.
Okay, fair enough. That's well explained. Also, today is the big liquidity event where the MSCI August index rejig can bring in $5.5 billion of inflow, according to you. Just take us through what we should expect.
Yeah, sure. So this is easily one of the biggest inflow event India per se that we will see in recent that we will be seeing in recent years. Now this is as a result of 7 additions in the standard index, and also on the back of a weight up in a few names like HDFC Bank, Bharti, Coal, ICICI General Insurance. Of this lot, HDFC Bank is by far the highest. We are anticipating inflows of $1.8 to $2 billion towards end of towards days close today. But we have to be cognizant of the fact that as India's weight in emerging market goes up, this is at the mercy of this is on the back of the weight down in other EMs like China, Taiwan, South Korea, and others. So all this has led to a big inflow for India in the emerging market pack. This should be close to 5.1 to 5.5 billion net inflow for India. This really is big.
Okay, that's a big one. Sriram, thanks a lot for joining in and explaining that to us. Appreciate your time here. That's IIFL Securities. Let's shift focus now to a CNBC TV18 exclusive. Parikshit Luthra caught up with Saugata Gupta, the MD and CEO of Marico, and began by asking him about the demand trends and how they see growth going ahead. Listen in.
We are expecting gradual improvement in volume growth as we step into the next few quarters. Also, the anniversarization of all our price drops are taking place this quarter. So hopefully in terms of the revenue growth will be ahead of volume growth, and we aspire to at least start hitting double-digit revenue growth as we go into the second half. I think there are green shoots in rural. I think the worst is over for rural, and some of the steps which the government has taken, coupled with a more or less satisfactory monsoon, ensures that the rural growth will gradually improve. inflation is broadly under control, and so therefore, if there are no black swan events, we believe that there would be a slightly better volume growth as we move into the balanced 3 quarters of the year.
So any price increases that you're likely to take across the portfolio that could come in?
We have taken some price increases in Parachute around that. So therefore, which will give us, as I said, this year, a kind of a revenue growth which could be higher than volume growth. And that's why we are reasonably confident that we should be, getting into double-digit revenue growth in the back half of the year. I don't see any significant price increases as of now, unless there are any black swan events with respect to crude or any other material. But I think things seem to be under control.
Right. Speaking about your international business, and it's just not just for Marico, but for other companies as well, the global environment is quite volatile right now, both in India's neighborhood and in the Middle East. How do you see all the developments impacting your international business right now? And could there be some impact in Q2?
Look at it, I think, if you look at from COVID, which is 2020, and then Ukraine happened, I believe black swan events are now embedded as a part of risk management. And therefore, we have to be, resilient to face these kind of factors, geopolitical or otherwise, across the globe. I think fortunately for us, we have a very solid, strong international business. If you see, with a track record of significant profitability growth as well as double-digit revenue growth in most of the quarters in the last 3-4 years. And I also believe and we have coped with these kind of ups and downs in most of the businesses. So, and I strongly believe that, that our resilience is pretty high. So as far as the medium-term aspiration of delivering double-digit revenue growth, as far as the international business is concerned, is very much intact. Some of the places where we had issues, I think broadly the businesses have come back on track, and therefore we hardly see any significant impact in this quarter.
All right, so you're not seeing any significant impact, and your growth outlook remains intact. In terms of exports, give us a sense of the kind of growth that you are targeting. Any new geographies that you would like to aim at?
Most of our operations are, based out of countries. We have factories and overall operations out there. Very little is exported. Whereas obviously we do cater to the Indian diaspora in some of the Western markets where we are not present as an organization. But I must say that our international business is extremely robust. We also, because of our digital brands and some of the new initiatives, I think international business continues to grow. What is also interesting is, I think, because of there is always a route back to Indian traditional habits like hair oiling is again getting popularity in some parts. In fact, there was a recent article in one of the big Western newspapers about hair oiling as a category. So we are pretty, I think, optimistic about it. Having said that, I think we will restrict ourselves into emerging markets of Asia and Africa, because where we have a right to win, while we will continue to perhaps export some of the some of our products into some of the, whether it's in Far East or whether it's in US and UK and some of the countries of Europe.
Right. Now, in terms of deploying additional capacity or investments, which aspects of your business or segments of your business would you like to invest most heavily in FY25?
I think we have pretty comfortable capacity. I think obviously we have a significant aspiration in foods, and this is where we are developing, I think, just not manufacturing capability but long-term supply chain capability, because as you know, food supply chain, it is not only capex intensive a little bit, but also there is a huge emphasis on stock freshness, given the shelf life of food is different from some of our other products. So we are gearing up significantly in our capability, and this is one area we will obviously continue to invest. As far as some of the digital brands are concerned, obviously they have a different operating model. We intend to not keep it we want to keep it far more an agile operating systems, and they are not necessarily very capex intensive, but we want to run it as a far more agile because they have multiple SKUs, they have far more shorter innovation cycles, and they operate with far greater agility and complexity compared to our business, which has a different kind of scale and complexity.
Right. So that brings me to my next question. Any new launches that you would like to probably give us a sense of, at least, with which you'd like to capture a greater market share?
Continue to have significant new product launches in food. Food is something which is a area where we have grown 4x in the last 4 years. We intend to double in the next 3 years, and this is something which is a strategic part of our diversification, because we believe that the total addressable market expansion available at Saffola is extremely critical and extremely big opportunity for us. So you will continue to see launches in foods. We are testing out certain things. Equally, we have a very, very action-packed agenda in some of our digital brands. And as far as the other core is concerned, yes, I think innovation is something we need to, we need to increase the momentum in some of our core brands also. But having said that, I think the diversification journey as far as we are concerned with premium personal care, with food and digital is very much on track. And we are so far tracking ahead of our aspirations this year.
In terms of growth plans for digital first brands of Marico, what would be your plans for the next 5 years?
I think we need to get into a 1,000 crore plus business over the next 3 years and we are not only looking at growth, but we are balancing with profitability with double-digit EBITDA. I think 2 of our brands, Beardo and Plix, are on a high growth momentum with run rates greater than 200 crores, and therefore they have the ability in the next 4 to 5 years to hit 500 crores. And I'm, I think, very, very optimistic. And we will continue to look for both organic and inorganic opportunities as far as digital business is concerned. 3 years, 4 years from now, we would like to be known as not only a very solid FMCG company, but a very, very successful digital consumer company also.
So you're talking about becoming a strong digital consumer company. So can we assume that if there are acquisitions that Marico is eyeing, that would be in digital first brands?
We look at everything. Having said that, I think we now have a working model that works for digital is concerned. I think we are a strategic investor of choice for a lot of founders who are doing exciting work, and therefore we are always on the lookout for it. Having said that, if there are opportunities and core opportunities in food, opportunities, some of the international markets, yes, we always look at it. But having said that, I think one of the things we believe in is that acquisitions or inorganic growth can't substitute organic growth. It can be best an accelerator and not an escape button for not doing organic growth.
Interesting conversation there, but for now, we need to slip into a very short break. We'll come back with more on the markets on the other side. Welcome back. Now, yesterday, Reliance's 47th AGM has brought some exciting news for cloud storage users in India. Jio is offering new Jio AI cloud welcome offer that promises up to 100 GB of free cloud storage to Jio users. This will be effective from Diwali. So to talk more about how disruptive is this going to be, because with this step, they're going to take on global giants like Amazon, Google, and even Apple. We have with us Neil Shah of Counterpoint Research joining in. Neil, first to just set the context, right? Jio is going to provide you 100 GB of cloud storage free. What is the current pricing of other cloud storage providers?
If you look at Google, first of all, thanks for having me here. And if you look at Google, the base tier, which is like 15 GB is for free. But if you add the 100 GB tier, it's close to 130 rupees. And similarly, per month, and for Apple, it's 75 rupees for 50 GB. So essentially, Jio is giving away 100 GB for free to the users, and which is a very strategic move from Jio.
Why do you call it strategic? What is it that Jio aims to, how does it benefit?
So there are multiple benefits for Jio. Obviously, one is getting more users onto their platform. It's a good way of Jio to get them integrated within the cloud, collect their data, all the backups and everything, which can help Jio to train the AI. And that is what most of the providers do. So if you use Gmail, and it's free, it's because nothing is free in this world, and Google uses that data to build a profile around for you, and then targets ads as well as cross-sell other services. So technically, this free tier is an entry for Jio to get more users on the platform, to help it train its AI, and eventually pass on more benefits and services to the users and monetize it.
Okay. You spoke about, so it makes sense for an existing Jio user who's already a part of the ecosystem to switch to Jio Cloud. But what about someone like me? Now, I have an iPhone. My data already gets stored on an Apple Cloud. Do you think it's possible, it's going to be easy for customers who already have a Google Cloud account, an Apple Cloud account, to switch to Jio Cloud? What's going to be, how is that road going to be?
That's a great question. And that is where most of the friction is for Jio at this point. Having a 100 GB free tier is good for attracting, but how Jio can integrate it different apps and different OEMs is going to be difficult. And it's going to be challenging as well at the same time. If you look at all the hygiene apps like WhatsApp, right? By default, everything is uploaded to either iCloud or is it uploaded to Google if you're an Android phone. And with more tiers, actually Google and Apple are bundling more services like music or Apple TV Plus and so forth. So at some point, Jio will have to have a deeper integration for the Jio Cloud within different applications as well as OEMs. So there is less friction for users to upload their data to the Jio Cloud. So far, it's going to be a long road, a difficult road for Jio to convince users to use two cloud providers at the same time.
But we know from past experience that Jio was able to disrupt the telecom market when it launched in 2017. It forced the competitors to bring down the pricing. Right. Do you think in this case it's possible that the price of cloud storage, you spoke about how for a similar service with Google Cloud, you need to pay 130 rupees per month, which means effectively for the entire year, you're paying about 1,500 rupees. Do you think there's a possibility that pricing of cloud storage comes down in India from here on?
I think you make a very valid point, and that is what we have seen, right? So if you look at Ola, Bhavish Agarwal said, I'm going with Ola Maps, I'm not going to use Google. Suddenly Google slashed Google Maps pricing by 70%, right? So we could see such moves from competitors, but only difference here is the Google Cloud and iCloud, Apple iCloud, are deeply integrated into the platform, right? And you can't get away with it unless there is something from the policy side that you have to unbundle and allow multiple cloud providers to be equally distributed within the platform, right? And obviously we have seen Competition Commission of India going after Google and Apple to unbundle most of their applications and services, right? So there could be some reprieve in future, but for now, the only way Google and Apple can give answer is by reducing price a little, but still they have more leverage than Jio at this point.
One word answer, yes or no. So do you think Jio Cloud is going to be as disruptive as the telecom business was?
It's too early to say. As I said, it's too early to say. They have to integrate it deeply within the overall platform to make it more viable and usable.
Okay, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. Let's slip into a short break on that note. Markets are still fine. The Sensex is holding up with a gain of around 0.3%. The Nifty also building on to its gains and sitting at record highs. Right now up almost about 80 odd points. Let's slip into a short break. We'll get you more on the markets on the other side.
But it looks like Jack Smith doing more of what he does, which is filing these absurd lawsuits in an effort to influence the election. The president doesn't have some level of immunity in how he conducts his office, in the same way that judges have to have immunity, police officers have to have immunity. There has to be some recognition that people can't be sued for doing their job. So help me God.
Welcome back to Trading Hour on CNBC TV18. As we were telling you earlier, this market is not doing too badly, actually. It's doing pretty well at the moment. So the Nifty is building on to its gains. And there's plenty, if you look at the flows as well, right? Both FIIs and DIIs bought in the cash markets yesterday. The global markets have been pretty stable at the moment. And if you look at individual stocks as well, a lot of stocks trending higher as we speak. Some of these defense names have started to come back in action. So HAL has been picking up a bit of pace this morning. And in terms of big movers, you have a lot of the sugar stocks, of course, Triveni, Sri Renuka, that are big movers at the moment. But some of these PSU names have also come back in a big way. Then you have names like Uno Minda, Finolex Cables, MCX. MCX has also been gaining quite a bit of ground lately. Something like a City Union Bank also picking up quite a bit of pace. Look at MCX, by the way, 5% higher as we speak. And big gain in the last 1 month. MCX is up almost about 25 odd %. This entire piece has been looking very good. So that's one pocket. Real estate is also coming back. Prestige Estates, by the way, is a big mover this morning. That stock is up almost about 6.5 odd %. The Nifty Realty Index has been sort of stop and start for the last few days. But today, Prestige Estates is back in the news. But Zepto has pretty much been shaking the quick commerce landscape yet again with a fresh $340 million top-up to take its total fundraising in 2024 to over $1 billion at a valuation of $5 billion. The funding comes as the 3-year-old startup expands rapidly and prepares its balance sheet for a possible IPO with a realistic timeline of 2025 or 2026. In an exclusive chat with Shireen Bhan, the co-founder and CEO Adit Palicha said that the sweet spot to hit the public markets will appear once the company starts to generate significant free cash flows. Listen in.
How IPO ready do you feel today? And what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
I honestly think it's just like a matter of, when do we see, the right sweet spot of, hey, we're inflecting. We think that we're going to get into, harvest significant amounts of, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, it's a commercial strategic call. Yeah. I think that happens in, probably sooner than even I anticipated. Yeah. And, we're a fast company, so we take a call to go public, we'll go public very quickly. But yeah, I think 2026, potentially even late 2025 is a realistic timeline. And our focus would be build excellence on controls and make sure that you have a high, it's not about profitability today. Yeah. It's about, do you have, because, break-even-ish is not what people are betting on. They're betting on, can you generate $300, $400, $500 million of free cash flow in like a reasonable period of time? And so once we see that inflection point, we'll say, that's the right time to go public.
I know you're doing the rounds of the investor conferences, Adit, Goldman Sachs, Motilal Oswal. What are the questions that they're asking you? Are they excited about the anticipated IPO?
Look, I think, fortunately there is excitement. I think, obviously the public guys have less detail on our bottoms-up numbers versus the private guys do. I think, one thing I'd say for sure is that, meeting the ecosystem 2021, when we were just getting started versus 2024, I feel like there's just a much deeper understanding of what quality internet companies look like and what bad internet companies look like. And the questions that are being asked are much deeper, right? So today you'll have discussions on, okay, if the atomic unit of your business is the store, what's the return on equity mechanics of the store? What's the return on equity mechanics of every customer that you're acquiring? What's the CLTV to CAC on that? So you're having really thoughtful, deep conversations. And we've really been, excited about the way the public markets, not just like understand our business, and I think, obviously they're richly valuing this space, but it's not coming from just like some random thought process, right? It's actually coming from like an understanding of, the mechanics of this business financially, but more importantly, the value for customers.
And a growing conviction in the fact that this business will actually work and take off, because that wasn't the case 2 years ago.
For sure. Look, I think I would say it's half the business model, but also half the execution, right? I think like folks are, there would have been a very real world 2 years ago when people had skepticism on this business model, and it would have failed. Like if we didn't execute, and it's not just Zepto, it's all the players in the space that did well. We've really just executed a very difficult business model, and we're getting rewarded for that.
Okay, interesting chat there, and you can catch excerpts of this exclusive interview with Adit Palicha, co-founder and CEO of Zepto, all day today only on CNBC TV18. Well, the end of the month is almost here, and it's time now to look ahead to what the auto sales numbers might look like for the month of August. Sudarshan joins in with the expectations. Sudarshan, it's going to be a busy weekend for you.
That's correct. So auto companies will be reporting the month of sales for the month of August on Sunday and Monday, and overall volumes for the sector are expected to be tepid for the month of August, and we may see two-wheelers and tractor segment outperform or might be doing relatively better than passenger vehicles and commercial vehicles. As per analysts, inventory levels remain elevated 40 to 50 days, and they expect this can normalize as demand picks up during festive season, as this time festive season is a little longer than we had last year. Another headwind that sector is facing an increase in commodity costs. Commodity cost for passenger vehicles is up 20 bips month on month, and for two-wheelers, commodity costs are up more than 100 bips month on month. Now, talk about some positive factors. Rural sentiment. Analysts believe rural sentiment is turning positive. And second positive factor is monsoon rainfall has been 7% above normal so far. Considering all these factors in two-wheelers, Bajaj Auto sales are seen rising 10% YOY and 11% month on month. Hero Motor sales are seen flat year-on-year, but rising 16% month-on-month. For TVS Motors, sales are seen rising 10% year-on-year and 8% month-on-month. For Royal Enfield, sales are seen falling 6% year-on-year and down 1% month-on-month. In four-wheelers for passenger vehicles and commercial vehicles, Maruti Suzuki sales are seen falling 5% year-on-year and expected to be flat month-on-month. For M&M Auto, sales are seen rising 2% year-on-year, but on month-on-month, it's seen falling 1%. For Tata Motors and Ashok Leyland, both these companies may see sales falling both month-on-month and year-on-year. For tractor segment, M&M tractor sales may rise 6% year-on-year, but on month-on-month, it may see a fall of 12%. For Escorts, sales are seen rising 1% year-on-year and 4% month-on-month. So we'll see how the real numbers pan out, but as far as stocks are concerned, most of the stocks have seen an up move in the recent past in line with market, and the sectoral index Nifty Auto sector remains near record high.
Okay, thanks a lot for that. So that's a big barometer to estimate what the trend of the industry, trend of the economy is. The auto sales had come out in less than 48 hours from now. But the Indian economy is expected to have grown by 6.8% in the first quarter of the current fiscal. That is during the April, May, June months. That's according to a CNBC TV18 poll. The numbers will be announced today at 5:30 p.m. Lata Venkatesh is here with a preview. Lata, over to you.
Yeah, that's right. Our poll indicated that the GDP may have grown in the April-May-June quarter by 6.8%. And this is over a high base of 8.2% year ago, April-May-June. And the previous quarter, that is Jan-Feb-March, the GDP was 7.8. So either ways, it is low. In fact, if it actually comes at 6.8, it will be the slowest GDP growth in 5 quarters. The last time we grew below 7% was in Jan-Feb-March of 2023, that is FY22. Now, the GVA estimate, gross value add, the poll indicated will come at 6.4, which is rather low. But there is a very small percentage of people who believe that the GVA could be higher. It so much depends on how much subsidies the states have given. If some of the states have given more subsidies, the GVA could be even higher than the GDP. The agriculture part is expected to have grown by 2.9%. Industry is still expected to be strong, growing by about 8%. And services are expected to be softer at between 6 and 6.5%. The services were soft because, if you remember, April, May, June were both election months and, more importantly, very hot months. It was an El Nino summer, and therefore a lot of services could not be rendered in that kind of a heat. Full year GDP, most economists believe, will be below 7%. But of course, they will modify their numbers after they see the first quarter. The Reserve Bank, you must remember, expects the GDP to have grown by 7.1%. And for the full year, they are highest on the street at 7.2. But we will know at 5:30 on August 30th what the actual numbers are.
Okay, thanks a lot, Lata, for that. Well, then let's now cut across to the Global Fintech Fest, where RBI Governor Shaktikanta Das is speaking.
By combining proactive policy making with innovation and technological advancements. Collaboration between policymakers, regulators, and innovators is defining element of India's fintech journey. The success stories in our fintech space, like Aadhaar, UPI, and the DigiLocker, are results of such collaborative efforts. Initiatives like Account Aggregator Framework, Unified Lending Interface, that is ULI, Open Credit Enabled Network, that is OCEN, and several others are expected to redefine credit access, particularly for small businesses and individuals. The Reserve Bank's regulatory frameworks have facilitated new and innovative businesses to grow in an orderly manner. These regulatory initiatives reflect our commitment to support innovation with prudence. Our collaborative approach is visible in the fact that we have held large number of interactions over the last 1 year with the fintech sector players. For example, the various departments and officials of the Reserve Bank have held about 750 bilateral interactions and held about 50 structured meetings with the fintech players. As we march towards India at 100 in the year 2047, I urge every participant at this GFF and others who could not attend, and hopefully, and I'm sure, they will attend the future editions of GFF event. I would urge each one of you to continue dreaming, innovating, and pushing boundaries. Thank you. Namaskar.
धन्यवाद. थैंक यू गवर्नर सर. अब हम हमारे सम्माननीय भारत के यशस्वी प्रधानमंत्री डिजिटल इंडिया के शिल्पकार श्री नरेंद्र मोदी जी से विनम्र अनुरोध करते हैं कि वे ये सभा को संबोधित करें. वी रिक्वेस्ट प्राइम मिनिस्टर ऑफ इंडिया ऑनर टू एड्रेस दिस ऑगस्ट गैदरिंग.
नमस्कार. आरबीआई के गवर्नर श्रीमान शक्तिकांत दास जी, क्रिस गोपाल कृष्णन जी, मेंबर्स ऑफ रेगुलेटर्स, फाइनेंस इंडस्ट्री के लीडर्स, फिनटेक और स्टार्टअप वर्ल्ड के मेरे साथी, अन्य सभी महानुभाव, देवी और सज्जनों, ये भारत में त्योहारों का मौसम है. अभी अभी जन्माष्टमी हमने मनाई है और खुशी देखिए, हमारी इकोनॉमी और हमारे मार्केट में भी उत्सव का माहौल है. इस फेस्टिव मूड में ये ग्लोबल फिनटेक फेस्टिवल हो रहा है. और वो भी सपनों की नगरी मुंबई में. मैं देश और दुनिया से आए यहाँ सभी मेहमानों का अभिनंदन करता हूं, स्वागत करता हूं. यहां से आने से पहले मैं अलग अलग एग्जीबिशंस देख करके आया हूं. काफी साथियों से गप्पे गोष्ठी करके आया हूं. हमारे नौजवानों के इनोवेशन का और फ्यूचर की संभावनाओं का एक पूरा नया संसार वहां दिखाई दे रहा है. चलिए, आपके काम के लिए मैं शब्द बदलता हूं. एक पूरी नई दुनिया दिखाई दे रही है. मैं इस फेस्टिवल के आयोजकों को सबको बहुत बहुत बधाई देता हूं. साथियों, यहां बड़ी संख्या में विदेशों से हमारे मेहमान भी आए हैं. एक समय था जब लोग भारत आते थे तो हमारी कल्चरल डाइवर्सिटी देखकर दंग रह जाते थे, हैरान हो जाते थे. अब लोग भारत आते हैं तो हमारी फिनटेक डाइवर्सिटी को देखकर भी हैरान होते हैं. एयरपोर्ट पर लैंड करने से लेकर स्ट्रीट फूड और शॉपिंग एक्सपीरियंस तक भारत की फिनटेक क्रांति चारों तरफ दिखती है. पिछले 10 साल में फिनटेक स्पेस में $31 बिलियन से ज्यादा का निवेश हुआ है. दस साल में हमारे फिनटेक स्टार्टअप्स में 500% वृद्धि हुई है। सस्ते मोबाइल फोन, सस्ते डेटा और जीरो बैलेंस जनधन बैंक खातों ने भारत में कमाल कर दिया है। आपको याद होगा, कुछ लोग पहले पूछते थे, पार्लियामेंट में खड़े होकर के पूछते थे और अपने आप को बहुत विद्वान मानने वाले लोग पूछते थे। सरस्वती जब बुद्धि बांट रही थी तो वो रास्ते में पहले ही खड़े थे। और क्या कहते थे? वो पूछते थे कि भारत में बैंक इतनी ब्रांचेज नहीं है, गांव-गांव बैंक अवेलेबल नहीं है, इंटरनेट नहीं है, यहां तक पूछ लेते थे बिजली भी तो नहीं है, रिचार्जिंग कहां होगा, फिनटेक क्रांति कैसे होगी, ये पूछा जाता था। और मुझ जैसे एक चाय वाले को पूछा जाता था। लेकिन आज देखिए, एक दशक में ही भारत में ब्रॉडबैंड यूजर 60 मिलियन यानी 6 करोड़ से बढ़कर 940 मिलियन यानी करीब 94 करोड़ हो गए हैं। आज 18 वर्ष से ऊपर का शायद ही कोई भारतीय हो जिसके पास उसकी डिजिटल आइडेंटिटी आधार कार्ड नहीं है। आज 530 मिलियन यानी 53 करोड़ से अधिक लोगों के पास जनधन बैंक खाते हो गए हैं। यानी 10 साल में हमने एक प्रकार से पूरी यूरोपियन यूनियन के बराबर आबादी को बैंकिंग सिस्टम से जोड़ा है। साथियों, जनधन, आधार, मोबाइल की ट्रिनिटी ने एक और ट्रांसफॉर्मेशन को गति दी है। कभी लोग कहते थे कि कैश इज किंग। आज दुनिया का करीब करीब आधा रियल टाइम डिजिटल ट्रांजैक्शन भारत में होता है। पूरी दुनिया में भारत का यूपीआई फिनटेक का बहुत बड़ा उदाहरण बन गया है। आज गांव हो या शहर, सर्दी हो या गर्मी, बारिश हो या बर्फ गिर रही हो, भारत में बैंकिंग सर्विस 24 घंटे 7 दिन 12 महीने चलती रहती है। कोरोना के इतने बड़े संकट के दौरान भी भारत दुनिया के उन देशों में था जहां हमारी बैंकिंग सर्विस बिना किसी दिक्कत के चलती रही। साथियों, अभी 2-3 दिन पहले ही जनधन योजना के 10 साल पूरे हुए हैं। जनधन योजना विमेन एम्पावरमेंट का बहुत बड़ा माध्यम बनी है। जनधन योजना के चलते करीब 290 मिलियन यानी 29 करोड़ से ज्यादा महिलाओं के बैंक खाते खुले हैं। इन खातों में महिलाओं के लिए सेविंग्स और इन्वेस्टमेंट के लिए नए अवसर बनाए हैं। इन्हीं जनधन खातों की फिलॉसफी पर हमने माइक्रो फाइनेंस की सबसे बड़ी स्कीम मुद्रा लॉन्च की। इस स्कीम से अभी तक 27 ट्रिलियन रुपए से अधिक का क्रेडिट दिया जा चुका है। 27 ट्रिलियन। इस स्कीम की करीब 70% बेनिफिशियरी महिलाएं हैं। जनधन खातों ने महिलाओं के सेल्फ हेल्प को भी बैंकिंग से जोड़ा। इसका फायदा आज देश की 10 करोड़ रूरल विमेन को मिल रहा है। यानी जनधन प्रोग्राम ने महिलाओं के फाइनेंशियल एम्पावरमेंट की एक मजबूत नींव रखी है। साथियों, पूरी दुनिया के लिए पैरेलल इकोनॉमी एक बड़ी चिंता का विषय रही है। फिनटेक ने पैरेलल इकोनॉमी पर भी चोट की है और बधाई के पात्र आप लोग हैं। आपने ये भी देखा है कि कैसे हम भारत में डिजिटल टेक्नोलॉजी से ट्रांसपेरेंसी लेकर आए हैं। आज सरकार की सैकड़ों स्कीम्स के तहत डायरेक्ट बेनिफिट ट्रांसफर किया जाता है। इसमें सिस्टम से लीकेज बंद हुई है। आज लोगों को फॉर्मल सिस्टम से जुड़ने में अपना लाभ नजर आता है। साथियों, भारत में फिनटेक की वजह से जो ट्रांसफॉर्मेशन आया है वो सिर्फ टेक्नोलॉजी तक ही सीमित नहीं है। इसका सोशल इंपैक्ट बहुत व्यापक है। इससे गांव और शहर की खाई को ब्रीच करने में मदद मिली है। कभी हमारे यहां बैंक की सर्विस लेने में ही एक पूरा दिन लग जाता था। एक किसान के लिए, एक मछुआरे के लिए, एक मिडिल क्लास परिवार के लिए ये बहुत बड़ी मुसीबत थी। फिनटेक ने इस समस्या को दूर किया। कभी बैंक सिर्फ एक बिल्डिंग तक सीमित हुआ करते थे, आज बैंक हर भारतीय के मोबाइल में सिमट गए हैं। साथियों, फिनटेक ने फाइनेंशियल सर्विस को डेमोक्रेटिक बनाने में भी बड़ी भूमिका निभाई है। लोन, क्रेडिट कार्ड, इन्वेस्टमेंट, इंश्योरेंस जैसे प्रोडक्ट सबके लिए आसानी से सुलभ हो रहे हैं। फिनटेक ने एक्सेस टू क्रेडिट को भी आसान और इंक्लूसिव बना दिया है। मैं एक उदाहरण देता हूं। आप जानते हैं भारत में स्ट्रीट वेंडर्स की एक पुरानी परंपरा है, लेकिन वो फॉर्मल बैंकिंग से बाहर थे। फिनटेक ने इस स्थिति को भी बदल दिया। आज वो पीएम स्वनिधि योजना से कोलेटरल फ्री लोन ले पा रहे हैं। डिजिटल ट्रांजैक्शन रिकॉर्ड के आधार पर उनको बिजनेस बढ़ाने के लिए और लोन मिलता रहता है। कभी शेयर और म्यूचुअल फंड जैसे प्रोडक्ट में इन्वेस्टमेंट बड़े शहरों में ही संभव था। आज गांव और कस्बों में भी इन्वेस्टमेंट के इस एवेन्यू को बड़ी संख्या में एक्सप्लोर किया जा रहा है। आज कुछ ही मिनटों में घर बैठे ही डीमैट अकाउंट खुल रहे हैं, इन्वेस्टमेंट रिपोर्ट्स ऑनलाइन मिल रही है। आज बड़ी संख्या में भारतीय रिमोट हेल्थ केयर सर्विस ले रहे हैं, डिजिटली ऑनलाइन पढ़ाई कर रहे हैं, स्किल्स सीख रहे हैं। ये भी फिनटेक्स के बिना संभव नहीं था। यानी भारत की फिनटेक क्रांति डिग्निटी ऑफ लाइफ, क्वालिटी ऑफ लाइफ उसको बेहतर बनाने में भी बड़ा रोल निभा रही है। साथियों, भारत की फिनटेक क्रांति की उपलब्धि सिर्फ इनोवेशंस के लिए ही नहीं, बल्कि एडॉप्शन लेकर के भी है। भारत की जनता ने जिस स्पीड और स्केल पर फिनटेक को एडॉप्ट किया है, उसका उदाहरण कहीं और नहीं मिल सकता। इसका एक बड़ा क्रेडिट हमारे डिजिटल पब्लिक इंफ्रास्ट्रक्चर डीपीआई को भी जाता है और हमारे फिनटेक्स को भी जाता है। देश में इस टेक्नोलॉजी को लेकर ट्रस्ट पैदा करने के लिए अद्भुत इनोवेशन किए गए हैं। क्यूआर कोड्स के साथ साथ साउंड बॉक्स का उपयोग ऐसा ही इनोवेशन है। हमारे फिनटेक सेक्टर को सरकार के बैंक सखी कार्यक्रम का भी अध्ययन करना चाहिए। और मैं सब फिनटेक के वाले नौजवानों को कहना चाहता हूं, ये बैंक सखी है क्या? मैं अभी जलगांव आया था एक दिन, तो मैं ऐसी बैंक सखियों से मिला तो बड़े गर्व से कहती, मैं एक दिन में 1.5 करोड़ रुपए का कारोबार करती हूं। क्या कॉन्फिडेंस! और एक गांव की महिला थी वो। हमारी बेटियों ने गांव-गांव में बैंकिंग को, डिजिटल अवेयरनेस को जिस प्रकार फैलाया है, उससे फिनटेक को एक नया बाजार मिला है। साथियों, 21वीं सदी की दुनिया बहुत तेजी से बदल रही है। करेंसी से क्यूआर कोड तक की यात्रा में सदियां लग गई, लेकिन अब हर रोज हम नए इनोवेशन देख रहे हैं। डिजिटल ओनली बैंक्स और नियो बैंकिंग जैसे कंसेप्ट हमारे सामने हैं। डिजिटल ट्विंस जैसी टेक्नोलॉजी डेटा आधारित बैंकिंग को नेक्स्ट लेवल पर ले जा रही है। इससे रिस्क मैनेजमेंट, फ्रॉड डिटेक्शन और कस्टमर एक्सपीरियंस सब कुछ बदलने वाले हैं।
investing.
Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Nigel D'Souza. Well, it's turning out to be a session where we are seeing some amount of follow-on buying, but we are seeing the mid-caps participate more, something which was opposite to yesterday's trading session. So we have the mid-cap index, which is up around 0.7% at this point in time, and the bank Nifty, which is up around 0.5%. In fact, for the week, the Nifty or the frontliners have really taken it forward with a gain of around 1.7% at current reckoning, and the mid-cap index up around 1.2%. But today, we have a lot of stocks buzzing, a lot of news to focus on as well, Nigel.
Well, that's right. The markets are trading well in the green, but stocks and sectors, they're going to be in focus. And to help us out with how he's positioned with regard to his portfolio, we have with us in the studio Balaji Vaidyanath Narayan, the director at NAFA Asset Managers, who joins us in the studio. Hi, Balaji. Welcome to Bombay, and thanks a lot for coming down to the studio. Well, you all manage an AUM, I think, of little over 500 crores or thereabouts, and your performance has been quite good. But at current reckoning, how are you all positioned, with regard to your portfolio? The street seems to be very, very bullish on a couple of themes like banking. So how are you all playing that? And what's the call on PSUs now?
Thanks, Nigel, for having me on your show. It's a pleasure to be here to making my TV debut. Current positioning is we're not extremely bearish in the markets. We are still able to find a lot of value, especially in the mid-cap and the small-cap space. So currently we have cash levels of about 8-10%. And as far as financials are concerned, we continue to be underweight on financials. And we've been underweight on financials for the last 2 to 2.5 years. And I think that is going to continue for some more time.
And the PSUs?
PSUs, we are zero on PSUs, actually.
Oh.
So, yeah.
You have an interesting fund, the NAFA Emerging Blue Chip Fund, but majority of your holdings is within the mid-cap and the small-cap space, I think around 90% if I'm not mistaken. Do you think that now it's probably time to sort of rejig the portfolio considering the kind of gains that we've seen in the mid-cap specific stocks?
So it's more like a self-fulfilling prophecy. Just because mid and small have gone up, therefore you go to large. That seems to be like a consensus thing that's playing out, Ekta. But what's happening is that if you look at the constants of Nifty, it's painting a little worrying picture, right? So the current blue chips, the ownership is very, very less. But what are the actual blue chips in India? So you have Apple, you have Amazon, you have Alphabet, you have companies like Meta, which has a 25,000 crore turnover. Apple will touch 70,000 crore turnover this year. I mean, these are all numbers that are greater than Cipla, Sun Pharma, Bajaj Auto, Hero, and so on and so forth. The real growth is on the large caps is happening outside of the Nifty. And the actual growth in the mid and small is happening within the market. Whereas in the early 2000s, this scenario was complete reverse. So you could be in the top 30, 40 names and make a lot of money. And the mid and small were untouchable because of lack of corporate governance, a lot of unorganized space. And now it's the complete reverse, right? So mid and small, the corporate governance has improved. More and more sectors are getting listed in the mid and small space. So the opportunities are more over there. And the real blue chips are growing outside of Nifty. So that is a problem. So two-wheeler penetration in early 2000 and two-wheeler penetration now is very different. Four-wheeler penetration in urban India in early 2000 and four-wheeler penetration now is very different. But in the Nifty, you have the same stocks. But the large cap growth is coming outside Nifty. That is a problem.
So a bit of a reverse in comparison to what we saw in early 2000, where bulk of the growth was coming in, from the Nifty constituents.
Yes.
Let's talk about a couple of themes, and Castrol is a stock that actually went to sleep for many years. It was actually an underperformer. But that's come back into play, and that's something that you'll have in the portfolio. So I want you to run us through that. And the other one, I think, is Heritage Foods. There was that political tailwind that played out. But how much of the good news is in the price on both these two names?
So Nigel, in terms of Castrol, right, so we have it in the portfolio. And our thought process behind Castrol was not actually the Castrol India numbers. I mean, we all know it's a very cash-rich, zero-debt MNC and stuff like that. But we were tracking Hertz. Hertz is a global global car renting company which is listed with $1 billion market cap. In 2021, Hertz came and announced that they're going to move entirely into electric vehicles. That's when Tesla actually hit $1 trillion market cap.
Okay.
Within 24 months, Hertz came back and said that, we are giving up 30% of our EV fleet within 24 months. So that's like a 180-degree shift. So the reason is high maintenance. This is as per the company, right? So high maintenance costs. A EV car is 30% more heavy than an ICE car. Therefore, the tires wear out faster. And Tesla, the OEMs themselves were reducing the prices of their end products, which means the second-hand market for their cars were coming down. Therefore, we are switching it back to ICE.
Yeah.
So Castrol was weighed down by terminal value questions. If lock, stock, and barrel people move towards EV, what happens to lubricants and things like that. Similarly, if you look at, say, Ford and Mercedes, they have publicly gone ahead and said that they are actually scaling down on their EV plans. So this gave us the confidence that Castrol was trading at a 4-5% dividend yield then, throwing out a lot of cash as dividend. So it was like a heads I win, tails I don't lose much kind of a scenario. Secondly, Nigel, at that point in time, couple of MNCs actually came and sold their India stakes. Whirlpool, Timken, ZF. In the case of Castrol, this issue happened way back in 2016 when their parent British Petroleum sold the stake in 2016 itself. So the probability of further supply coming in Castrol was very limited from the parent side.
So parent holds how much now in Castrol?
51%.
So that's why, okay, got it.
So this gave us the confidence to get into Castrol. And also this emerging trends as an idea, it's a bit overrated, Nigel. So if you look at the worst performing ETF in the US, it's the lithium and battery tech ETF.
Oh.
If you look at the worst performing ETF second worst performing ETF is copper ETF. If you look at the price of all the plant-based meat stocks, they've all taken a huge beating.
Yeah.
People don't talk about blockchain anymore. So, these buzzwords, they have a shelf life of 18 to 24 months. And then, as a French writer said, the more things change, the more they remain the same. So Castrol was such an idea which we picked up in our...
So how much of the good news is in the price for Castrol?
So the company is becoming very aggressive now, right? They want to capture the lost market share from their competitors.
Yeah.
They have also hired Shah Rukh Khan as brand ambassador, you must be knowing that. And they are currently also EV ready. So they are, the EV cars are factory filled with Castrol liquids. Yeah. And the biggest adjacency, if it happens, is the data center opportunity. As of now, the revenues are zero. But their parent, British Petroleum, has spent a lot for the data center R&D. So those things can play out.
So, I just wanted to actually touch upon what you said. And that's my next question. Then how are you deciding which stocks to pick within the mid-cap and the small-cap space? Themes, I understand that you're probably going to veer away from themes. But within that entire portfolio, what is your recommendation, or how do you choose your mid-caps and small-caps? What is the time frame of investment? When do you think is a good time to pull out?
So we typically look for 16 to 20 quarters in terms of at least giving time for the management to perform. In terms of how we look at the companies, we typically look for companies which are present in product categories that are growing at 300 to 400 basis points above the nominal GDP growth of the country. So that can happen for two reasons. One, it's a cyclical reason. Sometimes it's a secular reason. Secular reason is when the consumer buying behavior for product and service change. So for example, furniture, right? So 25 years back, our grandparents actually involved a carpenter and made a very custom furniture, and work order was given, and then the products used to come after a couple of months. It used to be heavy and bulky, had a very long shelf life. That's how furniture was being bought. But now with women participation in the labor force also picking up significantly, there is paucity of time. People are very happy with people are very happy with factory-made, ready-made designs. And a lot of that furniture is made out of MDF, medium density fiberboard. So if you look at the industry data, your medium density fiberboard has the potential to grow above nominal GDP for a long period of time. Western economies are also pointing to that. So 80% of their furniture is made with MDF, whereas in India, 80% is still plywood. MDF is just starting to scratch the surface. So there is a long runway.
So how do you play it? MDF?
So Green Panel is the largest listed MDF manufacturer in India.
Okay.
By the end of this fiscal, they'll become the second largest in Asia.
Okay. All right. We're running a little short on time, Balaji, but I just wanted that one number. Heritage Food has run up considerably. But in comparison to its peers, how the valuation shaped up?
It's still trading at a discount to Dodla, and obviously the leader is Hudson. But they seem to be kind of increasing their value-added product mix quite significantly.
Okay. I'm just going to probe you on one more question. You mentioned you're not a big fan of themes. You don't have any PSUs in your portfolio as well. Can we tie the two together and say, are you a believer in the defense and the railway sort of themes which have been playing out?
Defense is a huge sector to kind of give a very blanket call about it. So things like MRO, maintenance, repairs, operations, these still have a lot of potential. But a lot of these defense companies, the narratives have far overtaken the numbers. So you could see some amount of time correction happening in these sectors.
Okay. All right, Balaji, appreciate you joining in and giving us your quick take. We look forward to chatting up with you in the time to come.
Pleasure. Thank you.
Well, for the time being, we'll slip into a short break. On the other side, we'll focus on JBM Auto. Remember, they won that big order just yesterday. Stay with us.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy?
Welcome back. Well, for the markets, it's doing well in terms of the broader markets. Just want to point out that there are 2 stocks which stand out today from the entire pharmaceutical space, which is Orchid Pharma. That stock has given over 100% returns this year already, and it's gaining around 7% in today's trading session. And the other one is Wockhardt, which has given returns of over 140% this year. That stock is gaining around 3% in today's trading session. So both the stocks are managing to see some amount of traction on the upside. But let's talk about one particular broader market stock, which has given returns of around 30% this year. JBM Auto, which is in focus. The company's arm, JBM Electric Vehicles, has signed an agreement with Leafy Bus to supply 200 electric intercity luxury buses. The deliveries are expected to be completed within the next 24 months. To decode this, we have Nishant Arya joining in to talk about that. Nishant, hi, welcome to the show. So just give us a few details with regards to this 200 bus order that you've got for electric intercity luxury buses. When does it start? What are the margins like?
So we will be delivering these buses after 2 months. So we will start delivering them, and we will be completing this over a period of next 2 years. So definitely the margins would be more than 12% EBITDA, which we are anyways consistently looking at delivering from our electric bus business.
All right. Hi, Nishant.
This will be one of the largest orders as well in the country today, which have been placed for the intercity market, as the market is definitely transitioning to luxury intercity buses, where we have positioned ourselves as the industry leader, and order has fructified, and definitely we'll be looking at executing many more such orders in the coming months.
Okay. All right. Hi, Nishant. Good day. Good to see you in. So congratulations on this order. Give us a number, though. Since it's a luxury bus, how much do you get per bus? I think normally we work with around 1.5 crore, if I'm not mistaken. How does the price of this bus compare with what you normally do?
So approximately, you can say about 1.8 crores per bus.
So it's around 360 crore order. Around a 360 crore order approximately?
Correct.
Got it. All right. You know, earlier when you joined us, you had given us this guidance that you will be delivering 2,500 EV buses in FY25. Was this baked in? Part of this order will get executed in that 2,500 EV buses, or is this incremental?
Yes. No, this is part of that only.
Okay. All right. Tell us about what the pipeline is looking like now, Nishant, considering that you've got this particular order. You do have a manufacturing unit in Delhi NCR. So give us a sense in terms of what's the incremental pipeline in terms of order inflows that we could expect and what you might even be bidding for.
So currently, our order book is more than 5,000 buses. With this order, it would go to almost 5,500 buses, which is there with us. And definitely, as I shared, that this year we'd be looking at about 2,500 buses, and rest of the buses would get carried forward to the next financial year. And we would be looking at delivering all the buses in the next financial year out of the 5,500. And definitely what we are targeting to do is that not only number of buses, but the value proposition substantially with such kind of luxury products we are bringing to the market.
Okay. So what is the monetization plan, say, for the EV segment? Because earlier you have mentioned that you could probably look to list the EV business. Give us a sense in terms of what the timeline would be. Is that something which is still on the cards that you are considering? Is the business big enough for you to do that?
No, we are not looking at monetizing the EV business on an immediate basis anywhere. There is no such plan. But definitely, we are always looking to see how we can enhance value for the shareholders on a constant basis, but there is no plan in the pipeline as of now.
Is there a plan to acquire SML Isuzu?
So I would not like to comment on market speculation.
But any other inorganic plans that you're looking at, or this one at all? You know, because the street believed that that was on the cards. You want to deny it?
No, so there is no inorganic plan now, which is definitive in nature and where we can really take up anything as of now.
Okay.
Just a quick word before we let you go. If you could just reiterate what the growth rate is for the EV segment, how much are you generating in terms of revenue right now, and what is the growth rate, and what do you end FY25 with?
So if you see FY23, we were about 550 crores. And FY24, we were at about 1750 crores. So the growth rate was more than 3x. And this year, we are targeting about 3,000 crores from the EV business. Because the first quarter was a bit slower since elections were going on and multiple states were not looking at executing projects because of code of conduct and other things. So therefore, it was much slower than what we would have liked it to be. So therefore, this year would be about 3,000.
Got it.
So
Nishant.
Significant growth over last year. Yeah.
All right. So EV we've got. What about the hydrogen bus? There were some plans on that front?
Not that I know.
All right. No, just trying to clear the air. So it's EV itself, no hydrogen bus, right?
Right. And whatever I'm talking is all EV buses. Right.
Okay. All right. Thanks a lot, Nishant, for stopping by and filling us in with all of those details. Market seems to have liked what you said. From the time we started the interview, I think the stock has moved a little bit. Maybe an intraday chart should come up for you on the screen. I think the graph is not updated, but the ticker is telling us the picture. The stock has moved up by close to around 1% or thereabouts. Maybe, in fact, we'll fire that yet again. For the time being, though, we'll slip into a short break. On the other side, Manisha Gupta will be joining, and she'll be joined by Mr. Deepak Balani, the Director General at Indian Sugar Mills Association. Stay with us.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Welcome back. Post that positive commentary coming in from JBM Auto. We have seen that the stock has spiked up in the last few minutes, so the intraday chart should come up for you on the screen. The Nifty is doing well. Yes, we're holding with good gains, but plenty of movers actually from the broader markets. Case in point being Page Industries. Just take a look at the stock go. It's spiking up as we speak. A big up move is what we're seeing out there. IRCTC as well moved into the fast mode. It seems that stock has moved up. And Vodafone Idea has come in for some mild profit taking currently at the low point of the day. But as promised, Manisha Gupta joins us and she's got a special conversation on the sector of the day, sugar.
Manisha.
Oh, well, absolutely. That is buzzing. And how? And we have with us Mr. Deepak Balani. He's Director General at India Sugar Mills Association, ISMA, that is. Mr. Balani, hi, thank you so much for joining us. And clearly, a couple of notifications overnight and have done wonders for the mood and euphoria in the sector right now. The first one first, and all the restrictions that were put in the month of December seem to have been done away with. How is the industry looking at that one?
Yeah, hi, Manisha. I think we got a very good news last evening, and ISMA welcomes the decision by the government to lift the restriction on ethanol production. I think it is a right step by lifting the restriction from for ethanol production from juice, B heavy and C heavy. I think this will be a significant relief for the entire industry. We have seen a one-time occurrence where the restriction was put in place last year, December. But I think this will give a lot of confidence to the industry to go as per their planning on ethanol production. I think there are three things which are coming up very clearly from this decision. I think this shows that the government is very confident about meeting the ethanol blending program of 20% by 25-26. We are hopeful that we'll be achieving 18% in 24-25 and subsequently 25-26 or 20%. I think this also shows that the government is committed towards reducing the carbon footprint and also willing to walk an extra mile to meet the net zero target by 2070. I think it will also, very importantly, this will enable the millers, the industry, for making the timely payment to the cane farmers. I think this decision is also going to benefit a lot of farmers across the country. Finally, the decision is also reaffirming a smart stand and smart study, which was basically based on various yield estimation and the crop estimation, that the next year crop is going to be good and we will have sufficient stock to meet both the domestic demand and absolutely unhindered ethanol diversion. I think having said that, Nisha ji, I feel this is just the half done. As said by many people, I think this is just the work in progress. We are now expecting the correction in the ethanol price, which has actually not happened in 23-24 as well, and 24-25, even after the FRP has been increased. So now we are expecting the government to take a call on revision or correction of the price of ethanol, specifically from the sugar feedstock, juice, B heavy, and we are hopeful that this will...
Mr. Balani, also, just coming to ethanol, and while you've said that the ethanol prices have not been hiked since 23-24, 24-25, but what about the sugar MSP? I mean, that hasn't been hiked from 2019. Are you pushing equally strongly for that?
Yeah, absolutely. As you know, we have both ISMA and the Federation, we had done a complete pan-India weighted average of the cost of production, which we have already submitted to the government at around 41 rupees 66 paisa. We basically have also worked out a formula for calculation of MSP vis-a-vis FRP. And this is as per the past practice in 18-19 and 19-20, when it was 29 and 31 rupees. As per the formula, the MSP which we have proposed is 39.14. And we are hopeful that the government will take a decision on MSP soon and will enhance the MSP to around 39 rupees.
All right. Mr. Balani, that's all about sugar and ethanol. But when it comes to grains, and as you pointed out, that the ethanol pricing needs to be changed itself from sugar. When it comes to grains, and there was a second notification that came in the evening as well. This was about Food Corporation of India e-auction, where the distilleries can also take part of now. But the pricing of that, and we've spoken to various millers since morning today, the calculation of that also is not feasible, does not work. So would you say, apart from sugar, the ethanol pricing from rice, from grains, from maize, etc., also needs to be perhaps reworked?
No, I believe we talk about mainly sugar feedstock. So my still focus will be at least to get the cane juice price of ethanol to at the level of maize to around 73 rupees, which basically that is exactly what government has done. Around 5 times the ethanol price was revised, and there's an absolutely set formula. So we have also given a formula, and we are expecting the cane juice ethanol to be revised to 73, followed by B heavy to around 67, and C to 61, around 60-61. But having said that, I think the rice decision of additional permission to use FCI rice for ethanol production, I feel this will also help our sugar mills who have dual feed distilleries.
Mr. Balani, but the e-auction does take time. It's a long procedure and the calculations are not exactly profitable. So while you are pushing for all of this, are you also pushing for the rice grain ethanol?
We are still working on, we are trying to understand how the entire procurement will take place, Manisha ji. I think we will come back to you sooner once we have studied this order and also discussed with our millers.
As you mentioned, these are a couple of positives that we've seen the industry already see right now. Going forward, when you look at the September quota that has been made available for festivals, isn't so high. It's kind of neutral if you look at the number as compared to last year as well. So what is your sense of demand going forward for the festival season? And would you say that there's enough availability?
Yeah, there is enough stock. As you know, the closing stock in by end of September, we will have almost 85 to 90 lakh tons. And everyone knows that we have sufficient sugar stock in the mills. So I think there is no reason that the prices will go high. In fact, in last 15-20 days, we have seen that the demand has slightly gone down. And I think government has done a right decision and given a reasonable quota of 23.5 lakh tons. I think this will help in stabilizing the prices. Having said that, 70% of the entire sugar is purchased by the bulk consumers and only 30% goes to the retail consumer. So I don't think this will have any inflation effect on the retail customers as well as sugar prices are concerned.
Also, Mr. Balani, with the kind of government initiatives that we have seen come in for ethanol and the support back into this, would you say that the export demand that the industry had been making for some time can be put aside for time now?
No, I don't think so. See, as I said, we have a very high closing stock by 30th of September. And next year projection looks to be very good. And even if we take the domestic consumption of 285 to 90 lakh tons next year and ethanol diversion of around 45 lakh ton, we will still have 20 lakh ton of sugar exports. And I think you know that the global market is slightly elevated because of some incidences in Brazil. So I think this is a very good window. This is a beautiful opportunity for the government to allow exports of around 20 lakh tons so that it could give at least some relief to the industry.
My final question is, since we are talking about 18% blending next year and 20% year after, and that would perhaps mean 9.9 billion litres, would you say that with the kind of availability that we have, whether it comes from grains or sugar, we would be there on track?
Yeah, I think for 18% we'll require 900 crore litre, and going forward 20% will require around 1,000 crore litre. At the moment, sugar industry has a capacity of around 850 crore litre. So with 80% efficiency and some diversion to ENA, we still have the capacity of producing 550 crore litre. So I don't think that there would be any problem in meeting the 18% or 20% target. The sugar industry at least is ready to provide 55% of the ethanol for 18% or 20% blending. But I think the very important factor, one has been addressed, is the sugar diversion towards ethanol. I think what is now needed is the correction in prices.
All right, so that will really define. While the numbers seem to be working fine, the trend seems positive as well. But the ethanol pricing is one thing that the industry is sitting and watching, waiting for right now, and that would ensure that we get the desired numbers there. Mr. Balani, as always, thank you so much for joining us. With that, that's all the time that we have on the show. Business Lunch will take all the action ahead.
At exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour, live on YouTube at CNBC TV18, weeknights at 7 p.m.
Stocks push higher into uncharted territory after scaling to a new high today. Healthcare, real estate as well as energy are the key gainers, even as FMCG and capital goods are the soft spots in trade.
Sugar stocks are having a sweet day today after the government permits the use of sugarcane juice, BNC molasses for ethanol production. Allowing grain-based ethanol producers to buy rice from the Food Corporation of India may not, however, prove to be a booster.
The MSCI indices August quarterly review is set to draw near $5 billion in inflows into the Indian equities. The MSCI Standard Index will see 7 new additions and 1 deletion, while HDFC Bank alone is likely to see buying of $1.5 billion.
The aviation regulator puts SpiceJet under increased surveillance on safety concerns. This even as the airline places 150 employees on a furlough for 3 months owing to the lean season, reduced fleet size, and for the organization's stability. The stock slides in today's session.
And Prime Minister Narendra Modi tells attendees at the Global Fintech Fest that the best for the industry is yet to come, but flags cyber frauds as a risk that can temper growth and must be checked. Hello and welcome to Business Lunch on this Friday afternoon. I'm Nisha. With me, as always, is Hormaz. So, Hormaz, it's a green on the screen day. And looking good, Nifty 50 continues to be at record smashing levels. So let's take stock of market at lunch hour today. Nifty 50 holding strong with 0.35% gain at 25,230 odd levels. And it is a record breaking day yet again for Nifty 50. When we talk about Sensex, it's sitting with a gain of over 250 points. Bank Nifty is the one which is outperforming the key indices by a slight bit. It is holding on with 0.5% gain. So it is led by some of the blue chip banks that we are seeing such a momentum in the market. 0.75% up on the mid-cap universe. And that is the one which is stealing the show today. And that's also impacting the strength of the market with advanced decline ratio heavily in favor of the advances today. On my screen, the pharma major Cipla as well as PSU Power Grid and some of the auto companies are the ones which are doing well in trade from Nifty 50. Hormaz.
We've been saying that it's been a green screen for 12 days now. and that's a record of sorts. So Sudarshan just told me that this is the longest winning streak for the Nifty in 30 years, on over 30 years actually. The last one, the 12-day winning streak that we had was way back in 1993. So it's good going for the Nifty. Actually, good is an understatement, but yes, great going for the index now above 25 to nearing 25,250. Final trading day of the week. No surprises for guessing. You're going to end the week on a positive note, and these gains are likely to be accentuated as well, considering the MSCI inflows that will kick in towards the closing parts of the trading session today. Almost $5 billion being poured into the markets towards the close of trade, and leading that pack within the MSCI adjustments will be HDFC Bank, and that is the one that is going to be receiving inflows of anywhere between $1.5 billion to almost $2 billion in today's session. Pull up HDFC Bank as well. I'll tell you what that is doing. It started off higher, cooled off. It's now nearing the lowest point of the day, but still holding on to some of the gains. Also need to keep an eye out for some other names like RVNL. That is also receiving inflows to the tune of nearly $220 million in today's session. RVNL is also in the news because it has signed an MOU with Patel Engineering for various projects, and it has also won an order for almost 200 crore rupees. It is the order that it has won is RVNL. But we'll focus on the MSCI index REGIC first, with inflows of nearly 5 billion, as I just mentioned, as part of the August review. Vivek is joining in with more details on which other stocks other than HDFC Bank are likely to receive a lot of flows. Vivek, over to you.
Well, that's right. Like you mentioned at the start of the show, one of the reasons why we're seeing a 12-day-long winning streak as far as the headline indices are concerned is in anticipation of this over 40,000 crore, $5 billion inflow that we've been mentioning and highlighting since the last couple of days. Now, change is effective September 2nd. So in the last hour of the trading session today, you will see the actual inflows and outflows and the actual additions and deletions of the constituents. So which are the, first of all, the most important thing to keep in mind is that India's weightage as far as the emerging market increases to almost 19.8% from 19.2% in the May review. This weight increase comes in at the expense of weight reduction in China, Taiwan as well as Korea, and India, simply on the back of its outperformance versus its emerging market peers, is seeing its weight up quite significantly, and that is leading to the increased inflows as far as the entire day is concerned. Now, the MSCI Standard Index, look at the additions: Zydus Life, Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, RVNL. These are the stocks that will be included into the Standard Index. Significant inflows in each one of them. One deletion, that is Bandhan Bank, outflows of a little over $100 million expected there today. Now, along with that, like you mentioned, HDFC Bank close to $1.5 billion of inflows today. And another important development as far as the Adani Group stocks, post this particular review, MSCI would be treating all the Adani Group stocks at par with the other group stocks. So there could be some changes as far as the November review is concerned for the Adani names.
All right. So some of the stocks that have been mentioned, Hormaz, over there by Vivek, and inflows carry a lot of weight. A lot of inflows come into those particular stocks which have been included. So this MSCI index REGIC is going to mean a lot when it comes to the money flow as well as some of the stock momentum. Stock momentum
indeed, and Vodafone Idea is the one that I wanted to highlight because that is the stock that is almost at the lowest point of the day before I walked into the studio today because of the Supreme Court verdict that was lined up in today's session as well. There were some arguments made in court as well, and Vodafone Idea now 2.5% lower, trying to recover from the lows of the day, but that is also expected to see inflows as it is also part of the inclusions in the MSCI indices. So we'll keep an eye out on Vodafone Idea as well. But the one segment that has been doing very well in today's session are sugar stocks, and those are also buzzing in today's session after the government permitted use of sugarcane juice, BNC molasses for ethanol production. Vamakshi is joining in with more details. Vamakshi, it's a sweet day, I guess, for sugar stocks.
Well, absolutely, it's a sweet day for sugar stocks indeed. The first notification that came in from the government, they said that they've lifted the restriction and have now allowed ethanol production from cane juice, B heavy molasses and C heavy molasses for ethanol supplier 2024-2025, which means that this will be effective from 1st of November. This is a big relief and a big positive for the sugar industry. And why is that? Because the distillery segment was doing very well until the ethanol policy that came into effect in the Q3 of FY24. Ethanol production also generally receives a better margin profile as compared to sugar sales. So this is definitely a big positive for all these sugar companies. We have Balrampur Chini, Shri Renuka, Dalmia Bharat, Dhampur Sugar, Bajaj Hindustan, Awadh Sugar and Triveni Engineering, and many such names that are in focus today on the back of this development. But there's another notification that came through, that is on the grain-based ethanol manufacturers. The government has permitted the sale of up to 2.3 million tons of rice from Food Corporation of India, or FCI. This move is sentimentally positive for Global Spirits, India Glycols, as well as Triveni Engineering's grain-based ethanol. But why is it only sentimentally positive? That is because the companies are unlikely to reap any benefit, as the last e-auction price was 31 rupees per kg for rice as compared to an earlier price of 20 per kg. Ethanol from FCI rice also currently is priced at 58.5, while maize-based ethanol is priced much higher at 71.9 per kg. This still renders maize ethanol to be relatively more profitable as compared to FCI rice-based ethanol. So therefore, analysts largely believe, that is, this is coming in from Elara Securities, and they believe that there may not be any financial benefit to the grain-based ethanol manufacturers. Other than that, we also have Praj in focus today, and that is because the company offers end-to-end solutions to set up bioethanol plants. Approximately 10% of global ethanol production market share is what the company has, excluding China, of course. So just to sum it up, positive for sugar companies, neutral for some of the grain-based ethanol manufacturers, and positive for Praj Industries.
All right, Vamakshi, thanks so much for giving us the whole host of stocks which are being impacted by the government's measures, and also how much is the impact on an incremental basis and on a material basis. All right, moving on to the aviation space, and SpiceJet is under pressure today after the DGCA puts the airline under enhanced surveillance after an engineering audit reveals deficiencies there. Sudarshan, our colleague, is right here with all the details and the impact on the company. Sudarshan, tell us.
That's correct. So SpiceJet stock is under pressure, has fallen up to 6% in 2024, or say like from 52-week high that stock had hit in February, it's down almost 20%. Now, what are the reasons? So it's on the back of two news flows. First, company has placed 150 cabin crew members on furlough for 3 months, and the reason for it is company says the step is taken in response to current lean travel season and reduced fleet size with long-term stability of the organization in mind. And the second news flow is aviation regulator DGCA has put airline under enhanced surveillance, and DGCA says special audit conducted on August 7 and 8 revealed certain deficiencies in the operations, and that's the reason it's been put on surveillance to ensure safety of operations. Now, apart from this, if you look at the recent earnings that company has announced for Q1 FY25 and Q4 FY24, company has reported profit for second straight quarter, but revenue continues to see a decline, as well as total assets as of June 2024 were up 17%. At the same time, total liabilities had fallen 14% year on year. But liabilities are now more than rupees 6,300 crore, that is higher than total assets that company has. Even in the auditor's note that had come along with Q1 earnings, auditor says accumulated losses as of June 2024 amounts to almost 7,700 crore, and this indicates the existence of material uncertainty, and it casts significant doubt about company's ability to continue as a going concern. Along with earnings, company had announced fundraising of up to rupees 3,000 crore via QIP. So the key question is, will the QIP money be enough? As far as company is concerned, it believes that it is enough, and it says fresh infusion should enable the airline to expand and unground its fleet, enhance operational capabilities, settle liabilities, and improve market competitiveness, and funds will stabilize overall operations of the company as well.
More turbulence for SpiceJet. Darshan, thanks a lot for that update. Moving on then, the Supreme Court judges also heard Vodafone Idea's curative petition over its pending AGR dues earlier. Ashmit is now joining in with more details. Ashmit, tell us what transpired there.
Well, a couple of aspects to clarify. One, it's not a verdict, it'll be a hearing of a curative petition. And two, as far as curative petitions are concerned, they are heard in chambers. In-chamber hearing essentially means that not open to the public, not open to the media, and also not open to the lawyers. Now, that is something that Vodafone Idea as well as Bharti Airtel were concerned about. They appeared this morning before a bench of the Chief Justice, and they said that given the scope of what they call are arithmetic errors, which are patently available, which are patently visible, and also pointing out, given as how the impact of this judgment that it will have on the telecom space, they had asked for an open court hearing, a hearing in the open court which will allow access to the public and also importantly allow access to the lawyers to help argue their matter. Now what's critical now is the apex court has not given any indication as to which way it's leaning, whether or not to allow an open court hearing, but that in-chamber matter continues to be scheduled at 1:30 p.m. That's when the apex court will take this case up. It'll be, again, just to remind our viewers, it'll be behind closed doors, and that's when the bench will be considering. There are two possible outcomes. Now, one is that this curative petition gets dismissed outright. The other is that the Chief Justice and the bench decide that this matter warrants further hearing and then leave it open to an open court hearing to decide the fate of this curative petition. For the benefit of our viewers, in this curative petition, the essential point that telecom companies are seeking to drive home is there are clerical errors, there are administrative errors, there are computational errors in arriving at that final demand. These arithmetic errors need to be corrected. That's one key argument. The other, they argue, is that when this penalty was levied on the AGR amount, they were not even given a hearing. This was a violation of principles of natural justice, and they want a relook of both these aspects. So critical this will of course begin to get more clarity once the apex court concludes its proceedings in the curative petition.
All right, thanks so much, Ashmit, for getting us all the details. All eyes would be on that AGR petition. And Hormaz, you were talking about Vodafone Idea as a stock. It is under pressure. And of course, AGR dues petition being heard is a positive development. At least a resolution could be clearer. Whether or not they get some sort of a waiver in that will be a huge amount. But apart from the MSCI inclusion, what's also impacting this company is another tariff hike being built in. The previous tariff hike will start showing results from the next few quarters. And on the other hand, it has also to raise funds from SBI after doing an FPO worth 18,000 crore rupees. So they've got the equity right. They need to ramp up their fund and the capital for expansion and also for debt servicing by taking a huge amount of loan and have a total corpus of 45,000 crore rupees. So there are many points which are really impacting, all of them in the works. So there is tentativeness that is seen in this particular counter, but one by one, clarity will emerge and therefore the stock will settle going forward. So this is one stock to be watched out for. But when we talk about this particular case, the AGR case, the Telecom Minister Jyotiraditya Scindia has said that the union government will not interfere in the Vodafone Idea's affairs. And speaking to Money Control, Scindia also added that the government would like to have a competitive telecom sector in the country. And remember that the centre owns about 23.8% stake in Vodafone Idea. Here are the Telecom Minister.
Vodafone Idea has got its own professional management, and therefore what happens in the financial and operational workings of a company is their business and not our business as a ministry. At this point of time, as I mentioned, it is the management of the company that has to decide what practice to follow. We would like a competitive telecom sector. And as the Ministry of Telecom would like, at the end of the day, the best quality of service and choice, as you mentioned, to customers.
Well, more news from the aviation space. The Vistara Air India merger will go ahead after Singapore Airlines received approval from the government for foreign direct investment as part of the planned merger. Vistara is now set to run flights as an independent entity till the 11th of November. Danish is here to tell us more. Danish, one step closer to the merger.
Well, the decks have been cleared for the full merger of Air India and Vistara as Singapore Airlines has received the regulatory approval for FDI and Air India. Post this approval, Singapore Airlines will hold 25% stake in Air India. And with this, the brand Vistara is fully set to merge into Air India from 12th November onwards. For bookings and travel till 11th November 2024, nothing changes, but for Vistara flights on or after 12th November 2024, the flight numbers will change to Air India. From 12th November onwards, all Vistara aircraft will also be handled by Air India. From 3rd September specifically, customers that want to book flights departing on or after 12th November via the Vistara website will progressively be redirected to Air India's site to complete their bookings. On the other hand, the aircraft, schedule and operating crew will be unchanged until early 2025. This merger was in the making since November 2022, and after the merger is completed, Air India is expected to have a market share of 20%.
Thanks so much, Danish, for all the details. It's an important consolidation of all the aviation companies for the Tata Group. With that, we'll slip into a short breather on the show. But post that, we'll talk about the CNBC TV18's poll on first quarter GDP growth expectations ahead of the official release today. Let's find that out right after the short break. Stay tuned.
Beyond our schools, I'm happy to share that through Reliance Foundation, we aim to provide world-class early childhood care and education for over 10 million children from disadvantaged communities across India. This program aims to build capacity development models and provide learning resources for students and teachers all over India. Our efforts go beyond academic learning to promote complete development, including social emotional skills, critical thinking, and physical well-being. As part of our work with the Integrated Child Development Services, Reliance Foundation developed and refurbished 100 Anganwadis in Varanasi last year.
Reliance Retail recorded gross revenue of 3,06,848 crores, a growth of 17.8% over the last year. We continued our trajectory of strong profit growth, registering an EBITDA of 23,082 crores, up 28.4% year-on-year, and net profit of 11,101 crores, up 21% year-on-year. At 8.5%, the EBITDA margin continued to show improvements and grew 70 bips year-on-year. Our stores witnessed over 1 billion footfalls, and we have had more than 1.25 billion transactions across our channels. Registered customer base crossed a milestone of 300 million customers, nearly the population of the US. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Jio TV Plus brings all
Welcome back. Now, the Indian economy is expected to have grown by 6.8% in the first quarter of the current fiscal. That is during the April, May and June quarter. That is according to a CNBC TV18 poll. The numbers will be announced later today at 5:30 this evening. Lata Venkatesh is here with a preview.
Well, the poll did indicate 6.8%, which is quite low compared to the 8.2 year ago same quarter, that is April, May, June quarter. And even the quarter ago, Jan, Feb, March quarter was a good 7.8. In fact, if it does come at 6.8, this will be the lowest in 5 quarters. The last time, and the first time in 5 quarters that we're doing even below 7%. That was, you know, the Jan, Feb, March, the October, November, December of 22, we had done 6.8. Now, why is it low? Agri is not going to be all that bad. It's about 2.9%. But industry will do well at around 8%, and services is expected to do between 6 and 6.5%. Services is the one that is the drag because part of the services were impacted due to the elections, and even more so because of you know, a particularly hot summer. It's an El Nino summer, so a lot of hotel and hospitality services didn't do well, and of course even manufacturing got impacted because of the elections and the government's lower capex. The full year GDP, according to the Reserve Bank, is going to come at 7.2. In fact, the Reserve Bank has a fairly strong 7.1% assumption even for the current quarter. So we will have to see. A good number of economists are even expecting 6.5 to 6.6. And then there is the RBI sitting at 7.1. We have to see where exactly the truth lies. So interesting number at 5:30 today.
That's right. All eyes would be on that. Thanks, Lata, for giving us a heads up on what to expect today. But all eyes would be on the GDP numbers. With that, we'll slip into a short breather on Business Lunch. More news on the other side. Don't go anywhere.
Live TV, on-demand shows and apps together in one easy-to-use platform. With JioTV Plus, you get access to over 860 live TV channels with all leading channels in stunning high definition, plus the best content from apps like Amazon Prime Video, Disney Plus Hotstar, all in one place. And we're optimized JioTV Plus for super fast channel switching experience. Switching between your favorite channels is now faster than ever, so you won't miss a single moment of action.
What makes JioTV Plus really unique is how it combines content from over a dozen OTT apps, hundreds of live TV channels, and a vast library of on-demand movies and shows, all with a single login. You no longer need to juggle multiple apps or remember different passwords. JioTV Plus handles it all. Also, a powerful recommendation engine offers personalized suggestions based on your viewing habits, making it easier than ever to find something you will love. And if you miss a show, Catch Up TV lets you go back up to 7 days and catch up on what you missed. With our upcoming Play Pause feature, you will soon be able to pause live TV and pick up right where you left off whenever you are ready. It's all about making TV work for you.
But that's not all. We're elevating digital entertainment with advanced interactive features. Imagine watching a live cricket match or the Olympics and being able to pull up stats, buy tickets, or switch camera angles, all without leaving the action. That's the power of JioTV Plus.
JioTV Plus is also designed to be a truly social experience. With integrated social features, you can share what you're watching with friends, join live watch parties, or discuss your favorite shows in real time. This is the future of TV, and we are excited to bring it to your living rooms.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists
Welcome back. You're watching Business Lunch. Now, speaking at the Global Fintech Fest, Prime Minister Narendra Modi commented about India's growth in the fintech space, and he hoped that India's fintech innovation would be a remarkable feat in raising global ease of living. Listen in.
मुझे विश्वास है भारत का फिनटेक इकोसिस्टम पूरी दुनिया की ईज ऑफ लिविंग बढ़ाएगा और मुझे मेरे देश के युवाओं की टैलेंट पे इतना भरोसा है और मैं कहता हूं बड़े विश्वास से कहता हूं आवर बेस्ट इज येट टू कम ये आपका 5वां समारोह है ना तो 10वें में मैं आऊंगा
The best is yet to come. Some inspiring words from the Prime Minister. Well, I guess we should say the best is yet to come on our channel as well. So we call time on this edition of Business Lunch from Nisha, me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage. With current data prices that are 1/4 of the global average and just 10% of those in developed countries. In 8 years, Jio has grown to become the world's largest mobile data company. Today, Jio is a 490 million strong family, reflecting the immense trust and loyalty of our customers. I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the board of directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. When Reliance grows, we reward our shareholders handsomely. And when our shareholders are rewarded handsomely, Reliance grows faster and creates more value.
Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Reema Tendulkar. Reema, it's another day of green across the screen. Like you can see, all 4 indices, the Nifty Bank, Midcap Index, Small Cap Index, all of them trading well in the green.
11th day of gains now for the benchmark indices. We'll talk more about it. These are the top headlines at 1:30. Stocks push higher into uncharted territory after scaling to a new high. Healthcare, realty, energy are the key gainers, even as FMCG capital goods are soft. Mid-caps outperform.
Sugar stocks jump after the government permits use of sugarcane juice, B&C molasses for ethanol production. Allowing grain-based ethanol producers to buy rice from FCI may not, however, prove to be a booster.
Prestige Estate surges after the company launches a QIP to raise 5,000 crore rupees at a floor price of 1755 rupees per share.
The MSCI indices August quarterly review is set to draw nearly $5 billion in inflows in the Indian equity market. Midcap stocks Zydus, RVNL, Dixon Tech and Vodafone Idea are buzzing ahead of the MSCI rejig effective in the last 30 minutes of close.
And Torrent Pharma surges in trade after the US FDA issues an EIR with voluntary action indicated status to the company's Indrad plant. Lupin hits a fresh all-time high after Nomura recommends a buy call and raises the target price.
Well, first up, we have to address, how well the market has been doing. In anticipation, one of the aspects for the strong up move that we've seen across the last 12 trading sessions. In fact, if you look at it, the benchmark indices, that is the Nifty, has actually gone ahead and outperformed both the mid-cap and small-cap index, at least in the last 12 trading sessions. Nifty, in the last 3 decades, for the first time, has seen 12 straight sessions of gains. What is it that's doing well today? Across the space, you're seeing quite a lot of positive momentum. A couple of stocks on the radar, just in the last half hour. Look at names like United Spirits, that surged to the day's highest point. Look at names like Radico Khaitan, that's also gained. And, we'll get to that a little later in the show as to why exactly these stocks are doing well. But quite a lot of positive momentum in the FMCG space. Look at a name like AU Small Finance Bank. That particular stock is up almost 5% in the session today. Be interesting to see what exactly is the trigger over there. But this is the special show, Midcap Movers. Hormaz is standing at the wall to take us through all of the other midcaps that are moving in the session.
Finally, some rebound coming in for the broader markets after all the pressure that we saw over the last couple of trading sessions. The mid-cap index near the highs of the day, so no prizes for guessing. We'll start off with the gainers, and leading the charts today is AU Small Finance Bank, and that is up the highest point of the day now, 6% higher for the stock. Among the top gainers on the mid-cap index, Prestige Estates, as we just mentioned, the launch of a QIP, also nearing the highs of the day, 6% higher there as well. MCX, and as Vivek just highlighted, Radico Khaitan, now almost 6.5% higher at the highest point of the day as well. A sector that is having a very sweet day today is sugar, and almost every single sugar name is trading with very healthy gains of anywhere between 5 to 7%. Yes, they have all come off the day's highest point, but still continuing to hold on to significant gains. Some other stocks that are doing well in today's trading session, which is Pharma. The Nifty Pharma index is at a record high in today's session. Natco, Laurus, Alchem. At the highest point of the day is Alchem, now all trading with gains of 3.5%. So good going for the pharma index as well. Volumes, stocks that are doing well on heavy volumes today. Phenol-X Cables is one of them. Tata Elxsi seeing a bit of a bounce back after that 2-day sell-off that we saw. And Garden Reach, of course, after the order win that they signed earlier this morning, 4% higher there for the stock as well. And lastly, some stocks that are seeing some profit booking in today's trading session. NBCC is one of them. Remember, there's a board meeting tomorrow to consider a bonus issue of shares. Capri Global is the one, also down to the lowest point of the day, and Vodafone Idea, of course, continues to remain in the news, down 2%. Back to you guys.
Thank you very much for that. Let's take the discussion on the markets forward and where we are headed. Uncharted territory, record gains, record levels for the markets day after day. Samit Chavan of Angel One is now with us. Samit, how do you go about the markets? Okay,
I'm sorry, Rima. I think we have Hemant today. Good afternoon, Hemant. Apologies for that. Welcome to the show. First up, what I want to ask you is, when was the last time you saw the Nifty see 12 consecutive or notching up 12 consecutive sessions of gains? And what is the view from this point on?
A very good afternoon to you, Vivek. Thank you for having me on the show. It's always a pleasure. Yes, 12 consecutive days is quite an achievement, especially now that the Olympics are over. The weeks is at 13.5, which is fair enough. As long as we don't cross 15, Vivek, things are hunky-dory. Bank Nifty, which has been underperforming, is turning for the better. 51,400 is the level we need to sustain above. We are probably trying to do that. Once that happens, we'll see more participation from the Bank Nifty. And frankly speaking, now the downside has been capped with the Reliance bonus announcement. Now, in terms of sentiment, weighted Reliance is significant. It's huge. So that bonus has capped the downside for the Nifty. So frankly speaking, we seem to be setting the stage to make further highs. I'll just take 30 seconds more. There are at least half a dozen stocks, Vivek, which have been consolidating for 3 to 4 years. HDFC Bank, Kotak Bank, Hindustan Unilever, SRF, Asian Paints. I mean, and there are a couple more. US for blue chips, 3.5, 4 years have done nothing. Imagine if these stocks give a breakout in this bull market. Sky's the limit. Scared to even imagine where it's going, but yeah, the further upside seems like a distinct possibility.
Just for the near term, Hemant, afternoon, what would the stock calls be?
Okay, hi Rima. Not extreme near term. For a change, I have slightly longer term calls today. 6 months, 8 months, 12 to 15 months. Firstly, a buy call on Bajaj Finserv, Rima. Very interesting stock, very interesting scenario. 35 months of consolidation. Read my lips. 35 months of a consolidation. That's huge. It's a blue chip. And now it's on the cusp of giving a breakout. I'm saying cusp, weekly, monthly charts are happening. The market's not yet over. So a buy call on Bajaj Finserv, it's a conditional buy call, keeping in mind that we've just moved $250 in the last 12 trading sessions. So buy on Bajaj Finserv on declines, conditional, 1740, 1710, stop loss 1630, target of 2,000 and 2,300. Time frame would be around 12 to 15 months, Rima. And the second stock where there's a buy call is Tata Communication. We've been consolidating for 10 months. The indicators are turning positive. It is setting the stage for an upside breakout. So once again, this is a conditional buy call because we have moved a bit in the near term. So buy on Tata Communication at 1940 and 1910. Split your purchases. Stop loss 1860. Target of 20 to 50 and 2,500, Rima. 8 to 10 months. So these are medium term or longer term buy calls, Rima.
Thank you so much, Hemant, for joining us and giving us, both your view on the Nifty as well as the stocks to look out for. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
In terms of earning growth, we see a moderation in earning growth for this year, and maybe for next year, mid-teens kind of growth. But overall, we don't think market is an overbought position, and is a more or less fair valuation, we do say. So more and more FDI, more and more FI and trade partners will come in next 5-6 years. For next 5-6 years, we do see a good investment in industrial side, especially on power side, railways, defense. So it's a much broader and longer theme. And Chinese players and Korean players are not present in India as well as in US and Europe. So complete opportunity for India and export opportunities also for India is very, very high comparatively. For next 6 to 7 years, the overall power sector investment, including generation and transmission, could be around 50 lakh crore.
Welcome back. The big story is the kind of rise that we've seen in sugar prices across the board. And this is after the government has permitted the use of sugarcane juice, BNC molasses for ethanol production. Now, earlier today, we had a chat with two companies who benefit, Sri Renuka and Balrampur Chini, for their perspective. Listen in to what they had to say.
Now, for the season 24-25, the FRP is standing at 3,340 rupees. So there is formula and mechanism already in place. We have just requested the government to continue with the same formula. So, and whatever little increase they can consider on account of increase in the conversion cost. So that is on the pricing front. For Balrampur Chini Mills Limited, you will be knowing that this ethanol year will begin from 1st of November. So we will have only 5 months of production coming in this year, and thereafter it will get spillover into the next year. In any case, the impact of this relaxation will be felt in the next year only as far as the volumes are concerned. I think it should be in the region of around 22 to 23 crores liter.
No, in fact, whether we like it or not, all these changes are going to be relevant once the next crushing season is started. Because cane juice as of today is not available, because crushing is just not there. So I would say October onwards, it should start impacting the operations and operations big time.
Well, on the back of that particular development, all the sugar stocks are abuzz in the trading session. But this is a special segment, Midcap Spotlight. Rima, you're focusing on ITI, which is buzzing on the back of some order wins.
Yes, so ITI is a telecom manufacturing company. It's government owned, so government has about a 90% holding in ITI. And today they announced that they've bagged their first EVM order. EVM stands for electronic voting machines, and this has come from the West Bengal government, from the State Election Commission of West Bengal, and they're going to be supplying 500 sets of these EVMs to West Bengal. Size of the order is not known, but the street is excited at the prospect, the opportunity, because it's the first time that the company is supplying EVM orders. And they said in their press release that they're exploring the business prospects for manufacturing and supplying EVMs with the other election commissions of other states. Now, the stock price performance, if you see, now year to date, it's done absolutely nothing. Though in the last 1 year, it has seen a rise of close to about 160%. Now, financials of the company have been under pressure, though recently it looks like maybe things would be improving. So ICRA in May had upgraded the rating on ITI because the company is now able to service its debt. They've seen a pickup and improvement in normalization in debt servicing. But just a quick word on the financials. Well, the revenues for the company have been coming down. Over the last 5 years, revenues have fallen from 2,000 down to 1,260. The company has made EBITDA losses for the last 2 years, and even on the bottom line, there was a big loss of 569 crore. But as ICRA pointed out, there is a pickup in the debt servicing, so we'll have to wait by to see how that plays out. The reason why the performance has been a bit under pressure: one, there have been delays in revenue execution by the company. Two, there was a higher share of low margin orders. That also hurt them, particularly at the operational level. There was a sharp rise in operating costs. And fourth, even the finance cost has been going up for the company. So these are some reasons on the financial bit of how the company is performed. But today, the excitement is surrounding that a new category has opened up for ITI. It's the first time they've supplied to West Bengal, but we'll have to see if this is meaningful in terms of an opportunity in the future.
So EVM is a new segment that the company will be in. Remember, even Bharat Electronics has a sizable EVM order book. You know, in the last elections, they were one of the companies that supplied EVMs. But Rima, you're also looking at Bharti Hexacom today. Citi has initiated coverage on the stock?
Yes, so Citi has initiated coverage on Bharti Hexacom with a buy rating, and their target price stands at 1,405. So reason number one why they're bullish is they like the telecom space. They're saying they're positive on the telecom space because of the recent tariff hikes that we've seen. Two, there is improved likelihood of future tariff hikes. Third, waning competitive intensity. And fourth, steps taken towards 5G monetization. Just in the near term, Citi prefers Vodafone Idea and Indus Towers. On both these two stocks, the Citi had opened up a 90-day catalyst watch in July. Over the longer term, a 1-year time horizon, they prefer Bharti Airtel, then followed by Bharti Hexacom. So as I said, it stems from their bullishness for the telecom sector, reason number one, and particularly for Hexacom, they do expect financials to be strong. So they're penciling in a 19% and a 26% EBITDA growth over the next few years, and debt levels will come down because the cash flow generation has been strong. Remember, this is one of the recent listings. It listed only in April. So over the last few months, we've seen a lot of initiating coverages, and 9 out of the 10 brokerages who track it currently are bullish on the stock. There's only one hold. There is no sell rating. The hold call is by Jefferies, and the highest target price is by Ambit of 1580.
I think, one important trigger to watch out for would be, what is the kind of lock-ins that investors have, and, when will that selling come, and whether the market can absorb. But given the fact that there are so many bullish calls, it does appear as though that's
the issue price was 570.
Wow.
It listed at 750. Wow. So since from the issue price of 570, though, it's doubled.
More than doubled,
and even from the listing price of 750, the stock is up about 60-65%.
Well, very good returns, Bharti Hexacom. But we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Paytm is a big mover today. So Paytm has suddenly shot up close to about 2.5%. For the last 3 months, the stock has been climbing higher. Pull up a 3-month chart of Paytm. But outside of that, generally the color on the global market screen is also green. So if you pull up frontline European indices, the CAC is now up 0.5%. The DAX is again of close to about 0.1%. The FTSE 2 is higher, and Asia 2 closed up in the green. I think Hang Seng was up nearly 1.5%. So there has been, largely a risk on across the global markets, and that's lending the green color to the Indian market too. But we're watching out for some of these spirit companies in India, because Pernod Ricard, the global company, which has presence in India too, though not listed, released their numbers.
That's right. So, first let's understand, for which time period did they actually release the numbers. The time period is FY24, but their year or their financial year ends in June 2024. So what we're trying to understand is, number one, what is the kind of sales that Pernod Ricard see? The India sales grew 6% on a year-on-year basis, with the company saying a mid-single-digit growth in the price as well as the volume mix. Now, along with that, the commentary there is quite strong. They're saying strong, broad-based and accelerated performance underpinned by strong consumer demand. And they also mentioned something that both Radico Khaitan as well as United Spirits have been mentioning in the recent past, that sales are actually premiumizing. Now, what this indicates is that, number one, you look at the Q1 performance of both United Spirits as well as Radico Khaitan. United Spirits in this particular Q1 actually saw 10% revenue growth. Radico Khaitan saw a lot higher revenue growth, almost in the early 20s. And in this particular segment, that is the P&A, that is the prestige and above segment, this indicates that both Radico Khaitan as well as United Spirits have actually gained market share compared to Pernod Ricard. And on the back of that, once this particular news did come out, analysts actually have penciled in the kind of market share gains. So if you look at United Spirits today, up almost 2%, a sharp recovery from the intraday lows, and Radico Khaitan too is doing quite well. At one point of time, it was higher by almost 4.5%. That's the reason for the up move, Rima.
Okay, that's United Spirits now up close to about 1.7%. Radico is the big mover. But let's get chatting. Let's move on then, because real estate major Shriram Properties has unveiled a brand new identity, SPL Next, which will see the company cater to younger audiences and focus on the mid-segment real estate market, especially in areas like Bengaluru, Chennai and Pune. The company's CMD Murli Malayappan spoke to CNBC TV18's Jude Sanit on his plans to double sales, triple revenues and quadruple profits over the next 3 years. Here's a slice of that conversation.
As an organization, now having built a huge track record and extreme level of capability, and also the most trusted real estate developer in the country. Earlier, before this current regulatory regime, for the honest, trusted people in real estate was a challenge. Today things have changed. Today, honesty and trust provides a huge opportunity. Right. Hence, we are looking at using this opportunity, how we can scale up in the next 3 to 5 years' time. Hence, we have set a target for ourselves of, doubling our sales value, tripling our revenues, and quadrupling our profit in the next 3 years' time. It's a very high probability.
Right. So this revenue guidance of 3,000 crore in the next 3 years, what do you think will be the key growth drivers to helping you get there?
As you know, most of the revenues coming from the projects which are sold in the last 2-3 years' time. We have a huge predictability of revenue coming through. So next 2 years of revenue, close to about 2/3 of revenue is coming from the sales which has already happened. Okay. So there is a clear predictability of the revenue coming through. We need only focus on execution, construction and delivery, which also we have scaled up nicely. And also the growth, what we are looking at in markets like Bangalore, Chennai, and also we are expanding to Pune now. This year we are expanding to Pune. So all this will help us to scale up nicely to the reach these numbers.
Right. Now that you bring up these markets, I have to ask you, what is their expansion roadmap looking like? Chennai, Bengaluru and Pune are 3 markets that you're focusing on. Pune, of course, you will be making your debut. What kind of projects are you looking at? What kind of quantum of square feet are you looking to build in these cities? And essentially, will you be doubling the existing built-up area or the existing inventory that you have with regard to your projects? What is that plan likely to be?
Currently, we have presence in Bangalore, Chennai, Coimbatore, Vizag, Kolkata, and entering into Pune now.
Right.
So Vizag and Coimbatore is a small market. Kolkata is providing a good amount of opportunity for us. Now this next addition is Pune. These cities, particularly Bangalore, Chennai, Kolkata and Pune, will contribute quite a lot to our new growth. And in terms of doubling the inventory, we have currently about 42 million square feet in our portfolio, having delivered about 28,000 homes. We are looking at doubling our new pipeline. We are looking at least another 20 million square foot to add in the next 2 years' time, which can get delivered in the next 5-6 years' time. So that's the roadmap we have.
Any new investors expected to come on board? What will that arrangement or the partnership be like? Are you in talks with anybody? If you could bring us up to speed on these developments.
ASK, Blackstone supported ASK, looking at a platform, next platform.
Okay.
This is not the first investment. They have already made one, I think 4 investments they already made.
Yes.
Made some successful
They have
exit,
a substantial portfolio.
successful exit, and they are looking at another platform, continuing with this another one. Apart from that, we have got, Mitsubishi. They chose to partner only with the Shriram properties in the entire country.
Okay.
And we are in discussions with them also to expand our joint venture probabilities.
Well, a very interesting conversation there with Shriram Properties, brand relaunch as well as, very aggressive targets in terms of the P&L as well. But one stock we'd just like to discuss is Zydus Life Sciences. Some time ago, you saw a flash on the screen saying that the company's Jarod facility had received a warning letter from the US FDA. Just to give some context, on April 24, the company had received 10 observations after an inspection by the US FDA, and this particular facility post that 1 month after that received an OAI or an official action indicated from the US FDA. So the warning letter is largely along expected lines. Also remember, Zydus Life Sciences today in the last hour will see MSCI related inflows of over $215 million. So that will keep the stock quite active in the session. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.
But it looks like Jack Smith doing more of what he does, which is filing these absurd lawsuits in an effort to influence the election. The president doesn't have some level of immunity in how he conducts his office, in the same way that judges have to have immunity, police officers have to have immunity. There has to be some recognition that people can't be sued for doing their job.
You're watching Your Stocks here on CNBC TV18. I am Hormuz Fatakia in the Mumbai News Center. Good going for the market so far. They are gearing up for the MSCI adjustments that will take place in the last few minutes of the trading session today. Well on course for yet another weekly gain. Well on course for the 12th straight day of advance for the Nifty. And that would mean that this would be the longest winning streak for the index since 1993. So it's great going for the index into uncharted territory. At new highs is the Nifty, nearing 25,250 now. Joining us today on the show is independent market expert Shahina Mukaddam and Vaishali Parekh, who is the head of technical research at Prabhudas Leeladhar, to answer all your queries. Ladies, good afternoon. Thank you so much for joining in. Well, we'll start off with a query from Harshit, who is writing to us from Kolkata. He is holding 35 shares of Kalyan Jewellers at 549 rupees a share. He wants to know the prospects of his holdings. Now, Shahina, I'll start off with you. There has been a lot of developments that have taken place in Kalyan Jewellers, if I got the stock correctly. Yes, it was Kalyan Jewellers. There were promoters increasing their stake in the company as well at a time when promoters have been selling left, right and center. What's the prospects looking like for this stock going forward, say over the next 12 months?
Well, I think the overall sector looks interesting, but Kalyan Jewellers is a bit expensive compared to its peer group. So what I would suggest, if there is an investor, he can part book profits because the overall sector is doing well over the medium to longer term. So he can hold part of it, but because it is expensive, he can switch. He can switch to something which is more reasonable in the same sector or some other sector. But I think he should part book profits.
Partly book profits is what Shahina is suggesting. Well, Vaishali, what are the charts suggesting now for Kalyan Jewellers? It's now trading above the mark of 600. Do the charts indicate more upside going forward?
Very good afternoon, all of you. Yes, so I think it is just in a consolidation. I don't see there is any exhaustion right now, but I would say keep a trading stop loss of 600, because if the momentum still picks up, I think it can go to about 630, 650 levels.
Interesting momentum still, if it does exist, can go up to 650. Is Kalyan Jewellers are trading with gains of 1% in today's trading session as well, around levels of 615 is Kalyan Jewellers. Moving on then, Rohit Dalal is writing to us from New Delhi. He's holding 250 shares of GAIL at 129. Now he wants to know whether he should hold or he should book profits. The stock is at 237, is making substantial gains on his investment. Now, Shahina, GAIL is one of those stocks, is not among the usual PSU suspects that we talk about when we talk of PSU stocks, but it's been a silent mover. It's given handsome returns to this gentleman as well. Should he book profits here, or do the prospects for GAIL look even more brighter within the oil and gas space?
I think the prospects look good for GAIL. After a long period of consolidation, now with gas prices having moved up, and they are increasing their, average rates. They have taken a slight increase earlier, and I think probably they will take another increase in a couple of months. So this is positive for the profits overall, and I think GAIL looks good at current levels, so it's a hold.
It's a hold, looking good at current levels is GAIL. Vaishali, what are the charts indicating? The stock hasn't done much in the last month or so. It's barely moved from the levels that it currently is, but it's had a good year so far, say around 40% gains. Does the chart suggest more upside, say to levels of around 250, 260 in the near term?
I do think so, because actually the long-term trend is also intact and it's a gradual moving stock. So currently it is at a support of a cluster of moving averages. So I think even for the fresh entry, this makes sense, because the risk-reward ratio also turns out to be favorable. 225 acts as the stop loss, and one can look for a target of 255, 260 from here.
Fresh entries also making sense at current levels is Vaishali's recommendation. 237 on GAIL, seeing further upside are the charts. Now, Ishita Patel is writing to us from Surat. Now, she is holding 150 shares of Genus Power, which she had purchased at levels of 364. Now, she wants to know if she can hold on to those shares for now. Well, Vaishali, what are the charts indicating here? The stock has been a stellar mover this year. It's almost doubled or even more for this year so far. Does the charts indicate a further up move, considering the up move that we've already seen so far?
So today's candle is not very convincing, and indicators are also showing a little bit of an exhaustion. So I would say keep a stop loss of 435, 440. If we break these levels, I think this is a damage to the trend. Till then, I think just stay put.
Till then, just stay put. Well, Shaina, well, the stock has been in the news over the last 10-12 trading sessions. It's won orders worth almost 11,000 crores so far towards the end of August. It made some announcements towards in the last 10-12 days. What are the prospects here with this entire smart metering space itself, right? Be it the likes of Genus Power or even HPL Electric. Is Genus Power the top pick within this space, or do you prefer any other stock within the smart metering segment?
Well, I think in the smart metering space, it is one of the leaders, and the stock has given you a phenomenal return if you look at a period of about 2 years. Despite that, it is slightly expensive as of now, but at the same time, considering the orders it has on hand, considering that they have got an EBITDA margin of close to about 16-17%, a decent growth. Q1 numbers also were good. I would say continue to hold.
Interesting. Continue to hold. Genus Power, an outperformer over the last 12 months, 24 months, all of them. It's been stellar returns over the last couple of years for Genus Power. Well, moving on then, we are bullish as a bank on growth opportunities in the credit card space, says Parag Rao. By the way, before we move on, I request the ladies to stay on. We'll ask you more queries. But Parag Rao, the Group Head of Payments and Consumer Finance at HDFC Bank, spoke to my colleague Ritu Singh, and he also said that the RBI action on unsecured loans are a good, prudent measure. Listen in to a slice of that conversation before we return with more queries.
For a growing economy, I think credit is important, very important to sort of, it's a lifeline for growth. Okay, and I think what was necessary in a diverse country like India was a platform which helped lenders to get onboarded, okay, get access to customers in a simple protocoled way, get access to relevant kind of information which helps you underwrite on the side. And of course, I think the regulated entities would need to also work on building their algorithms to underwrite digitally, so on and so forth. So I think that's a starting step, and I would choose to call this digital public infrastructure, as in line with the other digital infrastructure which have been built up. So I think and that's a big thing. If you've seen the progress of UPI is an example of digital public infrastructure which has opened up the floodgates of expanding digital transactions. The belief is this platform will also do the same thing for credit, and so I think it's a good thing. It's early days as regulated entities and banks start changing or working on their protocols to sort of onboard. We'll start seeing, I think, progress building up, but I think it's a good thing which has happened.
Could you give us a sense of, in the credit card space, for instance, how are spends increasing, the cards in force, etc. You've, of course, been able to gain your market share, in the period since the RBI action. But, now if that sustains and, what's driving the growth?
Well, we're bullish as a bank on the growth opportunities in the credit card space. I've said this before, that I think this whole UPI base is sort of a precursor to creating a large pool of customers who are used to transactions. At the current rate on UPI, it's a direct to account. But then credit cards have always been a sort of aspirational product as the next step once you sort of get onto the base level of transactions, primarily because of the rewards and the credit period, and of course the good image which credit cards have. So you have today 400 million odd customers doing 14 billion transactions a month, and these customers are ripe for taking the next product, of course in phases, and as a result of which, even if you see in the last 2 to 3 years, you've seen a good steady growth of credit card numbers, and of course spends growing on and on. We do believe that all form factors will continue growing. Credit will also get the benefit of this huge pool of customers which are only going to grow. UPI itself, while today it's at 400 million active customers, I think the next plan is to really look at the next milestone of probably 1 billion, 1 billion customers on board. And so therefore, I think the headwinds for growth on the credit card business are really good. We're a dominant player in this space. We have the distribution, we have the underwriting capability, I do believe we have good products, and we'll continue working on that. The idea is to obviously continue being dominant in this space.
Sure. While you are a dominant player, the recent action from RBI on increasing the risk weights for unsecured lending, we've seen that, sort of slow down the credit card growth across banks, and because of some of the retail stress rise that they're seeing in that portfolio. What about HDFC Bank? Are you going to go more calibrated on that front as well?
So we look at, in an asset product, every couple of years you see a cycle. You see a cycle of growth, and then there's a cycle of correction, if you may call so. That's typical to this product category. Measures like these, which only the way we look at it is, I think only, and I'll talk about the bank what we do, but measures like this, in our belief, I think are good, prudent measures. I'll tell you, in a high growth economy, okay, it's very easy to sort of start disbursing loans and etc. Okay, and in our learning, I think the thumb rule we ought to do is when the times are good is when you make the most mistakes. Okay, so you got to be, in fact, even more prudent and careful in times of growth. This is a good time of growth, and some of the measures I think are to ensure that there is calibrated growth in the asset space, not meteoric growth. I think that's only good for the industry. No one likes bubbles. Okay, so I think so this measure, I think, on the RBI, I think, is timely and good for all the players. And so to the extent that growth is now calibrated, I think it's good. Okay. We always, as a bank, followed a very calibrated approach, a measured approach to this thing. During good times, we didn't spurt up. During bad times, neither did we clamp down. We've always been steady. That's been our learning in this space, and that's the reason why we've always had, I think, the credit performance of all our portfolios, I think, probably the best in the industry. So we continue our strategy. For us, it's no difference. Okay. It's no difference. We continue in our calibrated measure. We pick and choose our customers well. We want to be a long-standing player in the asset space and probably the most profitable. Okay. And we'll continue doing that.
Back with us here on Your Stocks, we still have Shaina Mukadam and Vaishali Parekh to answer all your queries. Moving on to the next one then, Shrikant Bagade is writing to us from Hyderabad, and he is having 100 shares of Chennai Petro, which he purchased at 310 rupees. Now he wants to know the future prospects of his holdings. Now, Shaina, this gentleman has made a substantial return on his investment, almost 3x from his buying price. Chennai Petro shares went up to almost 1270, now currently back to 970. Is the risk reward favor the buy side right now, or do you prefer the larger OMCs over Chennai Petro?
No, Chennai Petro does look interesting even at current levels. It's at an attractive valuation level. They have done reasonably well in the first quarter also, if you saw, about almost 16% growth in revenues. And I expect with crude oil prices remaining stable, they should do better going forward. So it's a hold.
It's a hold as well. Vaishali, what are the charts indicating? Do you see potential to go back to that record high of 1275 that the stock had once made?
So it could probably right now, actually, what I'm seeing from the indicators and the stock itself, I think it is maybe time-wise erosion. There is some pause. There is no trend right now. It's flat. But I think the support levels are intact. So I think maybe once the momentum picks up, it can very likely retest. But well, you just asked whether OMCs are good. My view is positive, very positive on the OMCs as well.
Which among the three then do you prefer? Which is the strongest that looks on the charts then?
So if you have a look at Hindustan Petroleum, I mean, yesterday it has given a breakout. It was just trying to come out of its range. And I think even the weekly chart, we are seeing a decisive breakout. So I think there is a likelihood of a very strong trend formation. We can look for a target of 460, 480 from here.
Interesting. And Morgan Stanley came out with a note saying prefers HPCL, is coming out of an investment cycle currently. So bullish calls coming in for HPCL, currently nearing the highest point of the day, 422 on the stock. Moving on then, Ravi Ramani is now writing to us from Mumbai. He's having 120 shares of REC, which he purchased at 447. Now, he's a long-term investor, wants to know whether he should hold or sell at current levels. Now, Shaina, it was the best performing stock on the PSU index last year, almost 250% in a year, in the last year that it saw. It's difficult to predict these kind of returns, but do you see the prospects for REC being brighter, even for PFC for that matter, considering the emphasis that is being put onto this sector right now from the government?
Yeah, you're absolutely right. The stock has given you a phenomenal performance. If you even stretch the chart a bit, it's like, multi-bagger in a short period of time. Having said that, I think despite that, if you look at pure valuations, still it does not look too expensive. If you go on a price to book, it's about 2.3 times. EV by EBITDA, it's about 11 times. And given the fact that the government is pushing renewable energy, they're doing very well in renewable energy. The loan portfolio in that segment is growing pretty aggressively. And in the first quarter, they reported something like 250% growth in renewables. So I believe at current levels, an investor can continue to hold for the longer term.
What about you, Vaishali? What are the charts suggesting? The stock went to a record high, saw a bit of a correction, and now is heading back towards those levels. Now, that's been the case with the PSUs, right? What are the charts indicating now? More upside in store?
Yes, I think so. Because as a disclaimer, we have recommended REC as well as PFC to our clients. And technically, I would say REC has just got into a new round of momentum. 600 acts as the near-term support. And I think the way we are seeing this, the sector moving high, and REC in particular, it can do 660 to 680 as a trading strategy. And likewise, even PFC has got into a new round of momentum just in the recent past. So it has made a good uptrend and it's likely to continue. So even for PFC, we would say 530 acts as a near-term support and 600, 620 could be the next target.
Interesting. PFC and REC, they're stellar performers on the PSU index over this year and the last as well. Now, Rinkesh Patel is writing to us from Surat. Now, he's holding 30 shares of Indigo, which he purchased at around 27.30. Now, he wants to know if he can hold the shares for the long term. Now, Shaina, considering the situation of the aviation space, it does look like Indigo's numero uno position, if you can call it that, is not going away anytime soon. Does that reflect on the stock price as well going forward? Because that's possibly the only pure play airline that is left now, which is listed.
Yeah, but it is going to get good, tough competition coming in from Air India with its merger with Vistara. So to an extent, I think while Indigo is, the leading market share, and they are trying to improve their overall streamlining their revenues, improving yields. Even valuations, if you see at current levels, is just about 6 times EV by EBITDA. So these are the positives. On the negative side, airline stocks in the very long term, it's very difficult to make a call about it because, very few of them succeed. Couple of negatives and you see what is happening to SpiceJet. So to that extent, I think these stocks need to be constantly reviewed. Things are in its favor now because you have jet fuel price also stable, but continuously monitor and hold with a stop loss.
Do you believe that the potential further promoter stake sales are going to be another overhang on the stock as well, Shaina?
It's moving out, I mean, they're able to reduce, the market seems to be absorbing the stake sale, and a bit of it is already out of the way. So I think I would sort of discount it a bit. I think the current price discounts it. But I think, the overall issues that remain with airline stocks for the very long term, you have to keep that in mind.
Keep that in mind, the issues with the aviation stocks as well. Vaishali, what are the charts indicating? The stock is nearing its highs now. 49.50 is the high that the stock has made. It's at 48.50. I'm sure there is still potential to go to that level, but what beyond that? Do you see levels of 5,000 and beyond on the charts?
Well, it looks very likely because still there is no exhaustion, there is no fatigue, there is a good momentum set in. So I guess the next target would be first 5,000, 5,200.
5,000 and 5,200 on the charts for Interglobe Aviation. Well, moving on then, Rahil Raheja is writing to us from New Delhi with an investment query. Now, he's asking if he can buy L&T shares at current levels. Vaishali, what are the charts indicating here? Is this a good buy at around 3,700?
I would say so because actually L&T has not really participated for a very long time, and it has been in a very broad-based consolidation. So I think this is a must-have, not for a trading strategy, but to hold for a longer term because we hardly see any movement as far as trading is concerned. But technically, I would say that yes, 3,600 acts as a very good support. And once we see some strength and move going on, this can go towards 4,100 to start with.
What about you, Shaina? Are there any targets that you're projecting for L&T as well over the long term? Because the biggest infrastructure company in the country, what do the prospects look like? Is this a buy at the current levels, even as the stock has not done much this year?
I would say so. I would see from here on, we can still see an upside. Maybe a 4,000, 4,100 in the medium term, considering that they have got a very strong order book, over 9 lakh crores. And also, if you see the first quarter numbers were pretty healthy, 15% plus in terms of revenue, EBITDA. The international, markets are doing pretty well for them. Actually, they did well for them already in the first quarter. The order book is coming in pretty good from that segment. So I would say that, it's a quality portfolio stock you can hold.
Quality portfolio stock is L&T. Shaina, Vaishali, thank you so much for sparing time this afternoon and joining us to answer our viewer queries. The markets, well, they are continuing to do well, gearing up for the final hour of today's trading session. The Midcap index is at the highest point of the day. What is also at the highest point of the day is the Nifty Pharma index, 1.5% higher, trading at a record high is the Nifty Pharma index, and from the lows, the 52-week low that it had made in October of last year, it has seen 3 stocks that have gained over 100% from those levels. 23,200 on the Nifty Pharma. Gearing up for the final hour of trade. That's all we have on the show, but do write into your email us your queries as well, and we'll address them with our experts. Closing bell for the final hour of trade. Thank you so much for watching.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or rupees 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
A positive start for the Hang Seng. It's trading with gains of over 1%.
Our poll indicated that the GDP may have grown in the April-May-June quarter by 6.8%.
And we're a fast company, so we take a call to go public, we go public very quickly.
Daily upper Bollinger Band, we are headed there, 25,300 or so.
The stock level as far as sugar in the country is concerned is adequate.
This is actually a very high liquidity net inflow event for Indian equities.
25,250, 225. That's about 1/3% higher.
Five eyes are willing to buy anything if you offer them a 3% discount. But if you ask them to come into the market, they don't like it.
Markets continue to inch up. This is the 11th straight day of gains for the market. The Supreme Court is going to hear the curative petition filed by the company on its AGR due.
जनधन बैंक खातों ने भारत में कमाल कर दिया है.
All 4 indices, the Nifty Bank, Midcap index, small cap index, all of them trading well in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Nigel D'Souza. And Surbhi, slow and steady wins the race, right? This is the 12th consecutive day of gains for the markets. This week we've seen the Nifty rally 1.7%. And I think the hallmark over the last few days has been the lack of volatility. It's been so steady for the markets. You know, we have that little bit of a gap up opening. We build on it. In fact, the India VIX too has now fallen to levels of 13.5%. So there has been a decline in the VIX. So steady and, you know, positive every day.
No, not a bad week at all, Reema. Yeah. In fact, for the week as a whole, the large caps have put on well over 1.5%. Mid caps were underperforming in the the earlier part of the week, but today that trend has turned around. So, you know, people don't have to complain because the mid cap index is showing a nice outperformance after several days. It's up with a gain of about 1%, whereas the Nifty is tracking a gain of just about 0.3%. Now, of course, I mean, from a trading perspective, traders will nitpick and say this is not a great day because we've not built on the opening gap. So if you look at the Nifty, the graph has virtually been unchanged. So the bulls have not had a chance to, you know, participate in any uptrade, so to speak, at an index level. But you look at stocks. I mean, today, for instance, has been all about sugar, and a lot of those sugar companies are still tracking and retaining a bulk of those gains. So whether it is your Triveni, Dhampur, Renuka, Balrampur, so, you know, whoever got the positioning right ahead of the event has been really smiling away because sugar has turned out to be a pretty sweet trade over the last 1 or 2 sessions. Back on the Nifty, some of the gainers include names like the Bajaj twins from the financial services space. They've had a good week, actually. quietly but surely. Bajaj Finance, today's gain is 2%. Now look at the weekly gain on Bajaj Finance. After a long time, 6-7%. There's money shifting here, and that's something that you cannot ignore. Even on Bajaj Finserv, for that matter, I mean, today we are looking at a gain of 1.5%, 9% for the week. That's the gain. So again, for me, this week has been about a little bit of a shift in positioning. More towards sort of maybe a little bit of a portfolio rotation, more towards large caps, towards some of the underperforming names like the ones that we've just highlighted, and perhaps some trim off in the areas of your portfolio where you have seen good profit. But all in all, I guess not too many people would be complaining with what we've seen today or over the week. Hi, Nigel.
And if we end in the green, it'll be what? Which day of the winning streak?
12th.
12th, right?
Yeah.
Never seen it before.
At least I haven't seen it.
It's never happened. It's happened in 1993 last time.
Okay.
Wow,
so that's 3 decades back.
It's a start, and on Editors Roundtable, I'll get further into that as well. We have never seen 12 sessions where the Nifty ended higher. The last time was 1993. We had 11. That was in 2007. But after that, we know what happened. So,
no. Nobody would want to remember that.
So this time it's 12, right? It's 12. And at that point of time, the base, 93, the base was 800 points. The Nifty, which we have done in the last 12 sessions. So the base very different. But let's see how that goes. We'll put out further details with regard to that winning streak that we've seen later on in Editors Roundtable. For the time being, let's tell you how you position yourself for the final hour of trade. Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. Good trading session if you're on the bullish side. What are you doing? Taking some money off the table? Want to have a easy peasy weekend, or are you riding your luck? Can you believe the market's good for more?
Well, I think as of now, yet not booking profits because there's no sign of weakness. And the good thing is that today the Bank Nifty has started to participate. So that's kind of giving me confidence of carrying the positions. We have had some buy calls on banking stocks earlier. Right now, I have a buy on Oberoi Realty with a stop at 1755. And look for a target of roughly around 1850, 1860 to begin with, and then we can eventually look at higher levels as well. And the other stock which I like is Ramco Cement. We earlier had a buy on Shree Cement. So Ramco is on the verge of breaking out. So this is a conditional buy. Wait for the stock to get past 830 at 840 and then take a 10, 12 point kind of a stop. So let's say 828. Look for a target of 870.
Mitesh, hi, afternoon. What about Bharti Airtel? That's been a good mover. It's up 1.5% today. This week it's seen a 5.5% gain. Does the chart suggest upside?
Which stock is this? Sorry?
Bharti Airtel.
Yeah. So on the charts of Bharti, I think, my sense is that the stock has had a very good run-up, which has been continuing for many weeks now. There will be more upside because the stock doesn't look tired as yet, and it's come out of the overbought situation when it was in consolidation between July end to about mid of August, third week of August. So I think this looks like a fresh rally. There is some call concentration at 1620 or strike, but I think once it clears that, good chance that we are looking at a 1700 kind of a target. So add on declines rather than buying here. If somebody has it, hold it. But if somebody wants to enter a fresh, anything closer to about 1560, 1555 would be the entry point, and keep a stop below 1520.
Yeah, all right, Mitesh, got that. Thanks very much. We'll come back to you in just a bit for some more ideas. Let's kick things off then by focusing on a couple of individual stocks. And the first one on our list is AU Small Finance Bank as well as IndusInd Bank. Now, both of these stocks are in focus on the back of fresh brokerage updates that have come through. Abhishek is here with the details. Abhishek, take it away.
Well, to begin with, the AU Small Finance Bank, the stock is up more than 8% in this week alone. There was a conference of Citi wherein, they did mention that they'll apply for universal banking license in September and no excess incremental cost except the name change and brand building. This was earlier guided to be by August in the analyst call that they had after their results. However, just a 1 month transfer over here. They have retained the credit cost guidance at 110 to 120 basis point for FY25, despite the fact that you are seeing stress building up in the MFI as well as the unsecured loan for the industry as a whole. They are confident that they can double their loan book in the next 3 years, and the net interest margin has been guided for 5.7% to 5.8%. In FY25, they had recorded 6% in Q1 of FY25. So, 2Q MFI FY25 behavior is similar to first quarter, and they have guided for ROAs of 1.6 to 1.8% for FY25. Remember that a few days ago, large block took place in AU Small Finance Bank, wherein Fintech Business Services, they sold about 1.72% stake at consideration of 630 per share. So the deal size was about 800 crore. The biggest buyer in that block was DSP Mutual Fund, who bought about 1.39% stake in the company. Now, Fintech Business Services is the promoter entity of Fintech Small Finance Bank, which was merged with AU Small Finance Bank. On the other hand, IndusInd Bank, Motilal Oswal note is there, wherein they mentioned that the board is likely to submit Mr. Suman Katpalia's name to the RBI by early of next month, that is September, seeking a fresh 3-year term for the current MD and CEO of the bank. So the recent approval for setting up a wholly owned subsidiary, that is AMC, reinforces confidence in the bank by the regulator and keeps IndusInd Bank hopeful that Suman Katpalia might get a 3-year term approval from RBI. So further, no penalties have been imposed on the bank by RBI so far, and management is also expecting an approval for the stockbroking arm within the next 3 to 4 months. If you take a look under Mr. Suman Katpalia's term from Q4 of FY20 to Q1 of FY25, deposits have grown by 4% on a CQGR. This is for cumulative quarterly growth rate that you have seen, and advances have grown by 3% on a CQGR basis. Current term of Suman Katpalia will end in March 2025. Market share is the key highlight, which under his tenure has increased. Deposits market share has moved from 1.49% in FY20 or Q4 of FY20 to about 1.88%, and advances, their market share has improved from 1.99% to 2.12% X of SDFC Limited for the industry. That is what I have taken into calculation. In terms of key ratios, gross NPA ratio is down by 43 basis points under his tenure so far. Net NPA ratio down by 31 basis points under his tenure. Net interest margin has remained flat. However, return ratios have improved drastically. So ROA has increased to 1.7% on a quarterly basis from 0.4% that was there in Q4 FY20, and ROE has improved to 13.5% from a lower single digit that was there in Q4 FY20. And the best part in the balance sheet is the reduction in risk. So risk weight asset to advances ratio, that's declined from 125% when he took over to right now about 112%. Back to you.
Okay, all right, Abhishek, thank you for that. So those two stocks in focus, and AU Small Finance is the one that's really flying away on the back of some of those upbeat brokerage sort of points. Let's welcome in Prakash Diwan. As always, it's Friday and he's joining us on this leg of Closing Bell. Prakash, good to have you on. So actually, I wanted to start off with financials in any case. Some of the names that Abhishek has taken, share your thoughts on that. Or also the Bajaj twins, right? Finance and Finserv. There's some very steady buying that's come back to these two big stocks this week. Your thoughts?
Good afternoon, Subhi. So I think let me take the banks first. Out of the two banks, of course, AU has enough traction and there's enough news flow to back that. But I would cautious with most smaller banks. IndusInd, of course, while it's small enough, it's big enough. It's at the same time small and big. Bank. So the way they operate, they could be slightly more nimble in terms of deposit gathering and lending aggressively. But at this point in time, all of the goodness is fully priced in most of the smaller banks. The Bajaj twins is clearly all pivoting around this the housing finance business getting listed. So that there is so much of anticipation, and given the kind of response that you are getting on good IPOs, there is no reason why that value unlocking will not be very real and significant. So that's probably what the market is looking at. But from a loan growth perspective, AUM, I think there's nothing very significant happening in terms of incremental changes. So I would be a bit skeptical allocating more money at these valuations even to the Bajaj twins. So, the market's giving you a very clear signal. Look at the mutual funds which are sitting on more than 10% cash, almost 10% cash in the equity funds. Look at HNI behavior. It's telling you that we will get opportunities if we are slightly more patient. We've been patient for quite some time. especially with financials. It'll be a very good time to buy when the book value the price to book value ratios start contracting to slightly more realistic levels. But at this point, none of these names really would be worth adding.
Okay, let's get to the other big story, and that's the rally that we're seeing in names like Radico Khaitan and United Spirits. The news here is that global major Pernod Ricard has reported their numbers, and what's the read-through for the Indian liquor stock spirit companies. Vivek joins in for more. Vivek.
Well, that's right. So Pernod Ricard overnight, actually went ahead and delivered as well as gave commentary as far as the FY24 results for them were concerned. Their FY24 ends in June of every year. So first up, let's look at what they're saying about their own Indian operations and how it's performed. Top line growth of almost 6% for them, with mid-single-digit growth as far as the price as well as volume mix is concerned. They're saying that strong, broad-based and accelerated performance was underpinned by strong consumer demand, and they're saying that sales for them is headed towards the premium segment. Now, as per analysts, the key read across for this is the fact that it appears as though the two listed players in India, number one United Spirits and number two Radico Khaitan. Remember, United Spirits saw 10% growth as far as the prestige and above segment is concerned. Radico Khaitan was slightly above or higher than that as far as the P&A was concerned, compared to Pernod Ricard's 6% top line growth, indicating that there has been market share gains as far as United Spirits as well as Radico is concerned. On the back of that, we're seeing both of the stocks today doing quite well in the session.
Thank you very much for that, Prakash. Right time to discuss, stocks like United Spirits and Radico Khaitan, but looks like market share gains continue.
Oh, absolutely. Friday evening, and this seems absolutely in place. So, I think the United Spirits growth trajectory that we've seen in the last, let's say, about a year and a half, very clearly is working as planned. There's nothing which is kind of surprising. There's nothing which is abnormal in terms of, not being able to attain. They set out for debt reduction, rationalizing the portfolio, and we've seen the results, right? The premiumization path and all. I think United Spirits will be able to finally catapult into a very large setup here in India once the global, this with Diageo, this whole FTA and all those talks that have been not going off as expected with the United Kingdom. Once that is in place, there'll be a lot of potential for these guys, optionality for these guys to be able to scale up and export from here. And I think there is a very clear edge that they have over the Radicos and over the Pernod Ricards or the market, because their portfolio is actually now getting into very high margin. Whatever they sell, they make almost double the margin that they used to sell, let's say, 2 years back. So very clearly, every top line growth trigger is actually going to translate into a very veritable trigger on the profitability side. Very positive on this. My target for United Spirits a year back, I mentioned when it was about 770, was about 2100, and which was almost 3x from there. And I still stick to that. 21 years lapsed, got it doubled, but you still have a long way to go, another 50% kind of an upside. So I wouldn't be surprised if it actually attains that in the next 12, 18 months.
Prakash, topical, right? I mean, when you were talking about a lot of stuff out there, my imagination was going wild. But that we'll save for Friday evening. Let's talk about Orient Cement. The street is expecting a deal to take place, a lot of chatter, a lot of buzz. I don't know how many people told me handshake is done next 2 days. It's been 2 months actually. So we're waiting for that deal. Appears if there was a deal, then there could be some bit of a delay or could be off. We don't know. But the stock at 400 rupees, maybe 380, 400 rupees, the upside was limited. But at around 300 rupees, how do you view Orient Cement? Because it's a good asset. It's a good asset. They've got expansion potential as well. And on the cost side as well, there are a lot of levers in place. So at around 300 rupees, it's trading at around $85 per ton, which is, much better than the 110, 115 that we saw, say, 45 days or so ago. Your view?
No, you're absolutely right, Nigel. At $85, you probably have another 18-20% as compared to the last reasonably, priced transaction that happened. But there's no reason why it should also get $100, because it's the question of who's the acquirer, how much is the the desperation for the acquirer to add size to this thing. So, I'll tell you what I have realized is in the cement side, because there's so much of an M&A expectation building up, it's not the acquired or the target companies that probably will help you make money. It is actually the ones who are acquiring who will, be benefiting, because they are finally getting into a scale which gives them a lot of weightage and muscle in terms of pricing power as and when it looks up. So I would still look at the larger ones who would potentially acquirers of these smaller units. If you had to look at smaller units, you could take a standalone like Digvijay Cement or something, has very good metrics, but it's too small. So, and then they don't want to sell at any point in time. So it's a off M&A kind of a bet. But I would go with the Ambujas of the world, the larger ones, not Ultratech maybe because it's already run up so much. But Ambujas to me still looks extremely promising.
Okay. Prakash, before we went to cement with that detour, I was going to ask you that since we're anyway talking alcohol, let me ask about ethanol, a variant of the alcohol, right? Because that's been the trade today. Now, on a serious note, I mean, the sugar stocks are absolutely going through the roof. The distillery guys, the basic sugar guys. But the issue here is that typically sugar ends up being a great trade for 2-3 days and, then it completely fizzles out. But what do you think? Are the dynamics a little different this time? Because we're getting in the festive season. There's still some hope that maybe exports will be opened up as well. Would you looking at adding any sugar, not to your diet, but to your portfolio?
No, absolutely. So just to clarify, ethanol is not as close to alcohol as the ENA is. And interestingly, some of these companies are also into that, the extra neutral alcohol, which gets completely used as mother liquor for making the bottled liquor. But
see, there's a connect. That's what I was saying, there is a chemical connect.
No, absolutely. The chemistry is the same. So you will have a CHO4 molecule doing the magic. But the whole thing is the sugar business, which went through a little bit of a slump given the election phase. Then, this whole thing of inflationary impact on sugar. But what has changed is Brazil has, for the first time, seen a lot of forest fires that have brought down the potential crop that you'll see in this harvesting season. Last time it was, more of drought and all that. This time it's a different calamity. And the other thing is that we are sitting on a surplus. So at some point in time, if the export prices remain firm, they are firming up with every passing day, there will be an impulse to allow the excess sugar to be exported without impacting the domestic prices. Festival season is a bit of a sensitive phase, but this trigger that we've seen on alcohol, this thing, and even by the way, rice, from FCI has been allowed to be used for generating ethanol, volume. So there is a very clear focus on ethanol, which I think will sustain for the next couple of years. I would definitely believe sugar, the cycle is here to stay for at least 12 to 15 months. If not, this time it's not going to flatten to deceive and just, whip her off in just about a week or month or so. I think it's much longer. So you look at the bigger ones, look at an EID apart from sugar. It has the holding in Coromandel. So, there are these good setups which you could de-risk yourself from in terms of the cyclicality of sugar. But there is a positive change that's happening in sugar, which I expect could sustain for the next 12-15 months.
Prakash, thank you very much for joining in. By the way, something's cooking up in Paytm. 13% up on that. Very large volumes. That spike has come in only in the last 1 hour. And GSPL, I think that's another stock which goes up day after day. I think, Nigel, you need to do a check on GSPL too. Today it opened down. It was down 4-5% at opening, and now it's up 4-5%. And again, pull up a 1 month chart and you would see.
For the week, 30%.
For the week, it's up 30%, but the rally started even in the prior week. I think it was on Nimesh's D Street chatter earlier this week at some corporate action, some sort of, I think that the street is anticipating. That's the 1 week chart. But as I said, the rally is extended now for, more than that. We will slip into a very short break on that note. On the other side, we'll invite Vinay Jaisingh, MD and co-head of Portfolio Management Services at JM Financial. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18 and invest.
Welcome back. It's been a good week for the bulls. Fresh highs on the street and more gains that seem to be intact, at least for now. Let's welcome in our next guest on the show. We have Vinay Jaisingh, MD and Co-Head Portfolio Management Services at JM Financial with us. Vinay, thanks so much for joining in. Great to have you on. So finally, the August roller coaster is ending, and it's ending on a rather good note, right? After the big 5th August Manic Monday scare, we've come out virtually unscathed, all-time highs. So what do you make of the market and its resilience at this point?
I think a couple of things. First and foremost, the question you'd asked us last time, how much is the cash in the system which mutual funds have? A number of 5% or 1,50,000 crores. That's a big number. So as SIPs keep on growing, even if you look at a SIP number on a gross basis, 40,000 crores, it's as good as saying you've got 4 to 5 months of stock and trade in terms of cash, which you can use and deploy in the market. So despite FIIs virtually going to zero FITD by taking out money in the last, I would say, 4 to 5 months, you've seen domestic inflows of as much as $5 billion. So that's, I think, the first big positive. The second big positive is as you're seeing the interest rates of US coming down, as you're seeing the 2-year and 10-year chart of US go to 3.8, 3.9% levels, you're realizing that the rest of the world will have a slowdown. And on the other side, the PMI numbers for India are inching up. So with an economy perspective, India is singing. If you look at the third parameter, the quarterly results which came out, there were not too many bad results which came out or underperforming results which came out. So overall, India Inc.'s profit growth also was relatively strong. So if you're singing on all the 3 counts, that's only the 4th count left, which is valuations, where on a relative basis you're trading at about 21 times 1 year forward. I'm talking about the Nifty 50, which is a little above the last 5-year average. But if the earnings momentum were to grow, India is looking as a much safer haven than the rest of the world.
Okay, all right. Hi, Vinay. Good afternoon. Good to see you, Vin. Vinay, what about on the headline index? You don't shy away from giving us a target out there. We've had a good run. How much more is in the offing, say, in the next 18, 24 months?
So if the earnings are going to grow as much as, I would say, over the next 24 months, as much as 15%, we think the upside could be as much as 10 to 12% purely, looking at an earnings perspective and a PE of 22 to 22.5 1 year forward. So marginal PE expansion, I don't see the PE expanding more. The earnings will have to be the driver. But here, Nigel, I would be a little more concerned because the rest of the world, the headwinds are a little bit stronger currently. Remember, the Japan carry trade is going against liquidity for the rest of the world, especially US. You've seen the Japanese currency appreciate by as much as, 160 has gone to about 145, so as much as 15% odd. So you're now not going to get free Japanese money or cheap Japanese money to deploy in the rest of the world. So that's going against you. And what I expect is a little bit of a toppish market world over once the interest rates in US get cut, and which could happen in the next month. So in the shorter term, I would say, volatile to marginally down, but 12% upside in the next 12 to 18 months, purely driven by earnings, I think is our base case.
The bulls will grab that after the kind of run that you've seen. Still, you get a double-digit returns. That'll be good. But earnings, as you said, that's going to be prime importance. Let's focus on the way your portfolio is constructed. You know, as I look at it, as of now, still mid and small caps, I think they are 60% of the total AUM that you manage, while 40% is large caps. Do you think that turning around? Because now the talk is you'll find more comfort in large caps. So that's not stopping the mid and small caps from running away. So would you reconstruct it?
So, we talk about this question every day. And, what our analysts remind us is in the last 10 years, at least 3 stocks have got added every year into the large cap, which were small caps. So out of the 100 stocks which were there in the large cap in 2014, 70 of them are same and 30 of them have been small or mid cap companies. You can mention a lot of them, including Trent, Varun, which have entered. So, we are more interested in finding out which are those 30 names which will enter into the large cap. Also, when we are looking at the definition of small cap, we are saying 250 plus companies in India are large. That's 100 plus 150 large and mid, and then everything else is small. But the actual definition of small cap is $3.3 billion. Now, in which state of imagination can we believe $3.3 billion is small cap? So if you look at our portfolio between 3.3 and let's say $1.5 billion, which earlier used to be mid cap to large cap, I'm just talking about 6 to 8 years ago, we've got a lot of stocks coming there. And most of the ideas we're getting where the growth is, let's say, north of 20% are happening in the mid and small cap. So we're not making it by virtue. It's just happening because of the new stock ideas we're getting or where the traction of growth is stronger.
So which are your top bets in that so-called small cap category as we classify it? What would your top bets be over there? And have you done any churn in your portfolio over the last, 1-2 months? Because so many stocks have done so well, and by virtue of that, you may want to pare down your holding in it.
No, absolutely. We've gone down a lot in defense and railway. We are virtually out of railway into our portfolio. Defense and railway were north of 15% in our overall weightage in our portfolio at one time. We've replaced them with pharmaceutical, specialty chemical names. And again, some names, which are, I would say, CapEx related, and some housing names. So this is, where we've done it. So now our incremental weightage in specialty chemicals and pharmaceuticals have gone substantially higher. We are north of 10% in that space, closer to 13-14%. Capital goods, we've replaced some of the names, which newer names. So, with defense and railway going in, we've got a couple of infrastructure names, an interesting name in metal as well, which we've added into our picture.
Which one is that? Which one is that, Vinay? I can see, metal related. There's Venus Pipes, which I think you have been riding for a while. And Gravita, the recycling play. I can see both of them. Tell us more.
Yeah, sure. We like both these names. Our analyst Mukund has got them smack on right. God bless him. As far as Gravita is concerned, the recycling play is amazing. Just think about it, right? Today, when you're using lead, for batteries, you need to use recycled lead. And there are very few companies which give you recycled lead, and coming from all the way from Africa into the country or going into Europe. So that's one part of Gravita's play. The second more interesting part of Gravita's play is it's using what it's learned in lead into lithium ion and also into aluminium, and moving forward to using it into plastics. Having said that, the company's got a guidance of like 35% PAT growth 24 to 27, and we think the company would beat it. Its return ratios are also pretty impressive at north of 25%. So we clearly like Gravita. As you said, Venus Pipes, again, Venus Pipes is something which is very strong in the stainless steel pipe and tube industry. It's getting its act right on the infrastructure play. Again, here our focus is, do we see a volume growth of 30% in the company? The answer is yes. Will that lead to, because of leveraging, a north of 40% growth in the earnings? The answer there too is yes. And the company is FCF positive. So keeping these in mind, at 25 times 1 year forward P, we like Venus Pipes as well.
Interesting, both interesting plays. And of course, Gravita has had a phenomenal journey as well, right? Stocks almost trebled in the last 1 year. So yeah, it's been quite the mover. But Vinay, as you were discussing what's gone up in the portfolio and what's gone down, what you've trimmed, in all the conversation, I don't hear financials anywhere. So what's the sense? What's the positioning now? Because there is some interest and some money definitely coming back. I mean, look at what Shriram Finance was doing a couple of days back. We were just discussing the Bajaj twins, Bajaj Finance and Finserv, very, incrementally small, but very steady moves, 8-9% up this week. So it seems there's some portfolio shift going on. But what's your stance?
So our perspective, we are underweight the financial, both lending and non-lending space. We're between 16 to 17% as against, the market numbers of 25 to 30%, depending on the index you're talking about. Out here, we like housing finance names, apart from ICICI and Axis. The housing finance names which we like are Chola Financial and India Shelter. I think, the government has shown you in the budget the action is going to be a lot more in housing, the way they've increased the PMAY volume growth. In the case of Chola Financial, you also get the advantage of, being the holding company. So bigger discount on Chola investment, in our analyst Pooja's numbers. Chola Financial Holding is trading, trading at a 45% holdco discount. So we think sooner than later, the holdco discount between Chola Investment and Chola Financials will also reduce. So Chola Financial has a bigger edge there. On the other side, India Shelter is trading at about 2.5, 2.6 times 1 year forward book. Again, both of them happen to be mid and small cap companies, not large cap. So, if I may say it, my apologies. But, we're seeing a lot more earnings growth trajectory coming in small and mid cap, even in the financial space than in the larger banks. But yes, valuations for the larger banks, are way below their last 5-year average, be it HDFC Bank, Axis, or Kotak. But here we are betting more on ICICI and Axis Bank.
Got it. Vinay, before we let you go, just a word, you were discussing Gravita and sort of recycling and all, got me thinking about all things green. So have to get your take on Ola Electric. What's been the house call here, given the run-up in the price?
So, as we had said it even last time, if Ola Electric does well, TVS will also do well. So we're looking at everywhere where you got a cheaper, stronger company, which has shown what its history is all about. And so we are playing, Ola Electric in the form of TVS. Touchwood, it's a large cap company. It's relatively cheaper than its past. The company's EBIT margins have moved up from 6-7% to 11-12%. And, we're pretty excited once rural growth comes up, the two-wheeler space. So, TVS ticks all the boxes out there.
Vinay, we'll leave the conversation here for now. Thank you very much for joining in. Enjoy your weekend. We'll slip into a break. On the other side, we'll get a check on what dealing rooms are saying in our segment D Street Chatter. Also, a few BTST calls for the weekend.
For excellence, a pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust, giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT.
Welcome back. Well, markets still holding with gains. On the Nifty, we've come off mildly from the top, but otherwise it's a good session. Par for the course. First day of a new series, and we're starting off in the green. But Nimesh joins us. He's going to give us further insights into what he's picking up. Nimesh.
Hi, Nigel. You know, if somebody would have told you that India is going to see a inflow of over $4.5 billion and the Nifty and Bank Nifty both are less than 0.5% higher, I would say it's a bit of a disappointment day, frankly. And that explains that maybe there was a bit of anticipatory move in the last few days in anticipation of this big inflow. There was a bit of pre-positioning as well. I think that's the way to read today's market. Apart from the MSCI flows, there was hardly much as far as flows are concerned, but there is a small MOC, is what I understand, in select stocks at a leading FIIs in today's market. I guess the better way to read is the fact that the broader markets have done well today. The Midcap index is up almost a percent now. So that's the space where seems to be a bit more action than the broader market, than the large cap names today. So a big liquidity event day seems to be out of the way in the next 30 minutes or so. But I guess a bit of disappointment, so to speak, the fact that despite such a large inflow, the markets not reacted very sharply.
Yeah, I guess that is true. Market has taken it in its stride. And even something like HDFC Bank, which is going to get a bulk of that money, that stock's also turned negative, at least for now. But Nimesh, as always, I know you've got plenty of chatter. So what are the stocks that you focused on today?
Well, so the first stock on my list is Paytm. Big move in that stock. Last when I checked, the stock is up 13%. And actually, surprised a lot of experts as well as to why the stock is buzzing 13%. One reason is that what we saw a couple of days back, the Ministry of Finance approval, that suggests that the regulatory overhang is likely to reduce from here on. But the bigger thing to watch would be a large block which can come in Paytm very soon. I understand one of the strategic investor is likely to sell out, so it will be a clean out trade from that investor, and that's what the book is getting built in the days to come. So expect a large block very soon is the indication as far as Paytm is concerned. The second stock is Nirlon. There is a large block in pre-open, 7% equity got changed hands. I guess the disclosure will be quite interesting as to who bought and sold. But I was just looking at the shareholder list. Some impressive holders already in the stock now. There is ICICI Pru as well as Nandan Ninikini. They own a large chunk in that particular company. The third stock is Vedanta. Again, that's buzzing in trade. A bit of commodity play as well. But I guess the management has been meeting a lot of institutional and HNI investors. A lot of HNI investors met them yesterday, and it seems like the demerger is on track. And the value unlocking is on track. So that's the reason why there is a lot of excitement in Vedanta today. The last is a couple of the OMCs, HPCL and BPCL both. There's a Morgan Stanley note and they've raised the target price in most of these names. But in general, for the last couple of days, there is very strong FI buying in the OMC names. So the stocks are not reacting for the last few days, but at least from a delivery point of view, expect high delivery volumes, and there is a very strong buy flow in all the OMC names today.
Okay, thank you for that. But GSPL, Nimesh, that's a stock that you had highlighted earlier this week, and that stock continues to move up. What have you picked up? Any latest on that corporate development?
Well, Rima, so last when we spoke, when I put it on the chatter as well, the anticipation was that maybe you're going to hear a very large corporate development in GSPL very soon. Since then, the stock is rallied 10%. Even in today's market, the stock is up 5% on large volumes. The feedback or the understanding is that maybe you get to know the announcement in the next couple of days, maybe this weekend as well. Essentially, the feedback is the corporate development will lead to a potential dismantling of the holding company structure as far as GSPL is concerned. So I'd explained last time as well, GSPL standalone business, plus they hold stake close to 54% in Gujarat Gas. Now, if you look at Gujarat Gas market cap and the current GSPL market cap, of course there is a holdco discount. So if indeed there is a deal which just breaks away the holding company, then the holding company discount will vanish. I guess that's the reason why the city is anticipating this move, and hence you've seen a big move in the last 1 week.
Okay, thank you very much for that. That's GSPL. Mitesh is now back with us for a few BTST calls that you can reverse on Monday. Mitesh?
Yeah. BTST and TVS Motors, after about 5 days of consolidation, the stock is picking up. So keep a stop at 2,800, look for targets of 2,850. And buy on HFCL, that's not a company which I typically recommend, but it's been making newer highs and still looks good. So buy with a stop at 147.5 for targets of 160.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Hemang Chani into the conversation. Hi, Hemang. Good afternoon and good to see you, Ben. Well, I want to know what you make of the telecom stocks. There's that AGR verdict which the street is a little bit hopeful about. Bharti Airtel has taken off in today's trading session. How would you approach the space?
So good afternoon, Nigel. Thanks for having me. So there are two things that we need to keep in mind. One is that in case of Bharti, there is going to be an MSCI related flows. And apart from that, as we all know that for Idea, the verdict on the AGR is likely to come about. And if there is any favorable verdict for Idea, then our understanding is that some of the incumbent players, particularly Bharti, would also stand to benefit. And you're seeing that within the entire pack, Bharti has been able to display a much better ARPU and much better operating growth. The peak of the capex is behind. So there is a definite amount of interest in Bharti at this point of time.
Any thoughts on GSPL? It's seen a 30% up move, Hemang, so far this week. I don't know if you caught what Nimesh is saying, but where do you stand on GSPL?
So GSPL, Rima, if you recollect, there was a PNGRB order a few months back, which was, on the pricing of the peak pricing, prices of the gas that the company would possibly get. So what is happening is that you might see some relief coming through from the regulator on that pricing cap front. Apart from that, when you look at the holding company structure of GSPL, because of the stake that they have in Gujarat Gas, about 54%, and the way the Gujarat Gas stock has behaved, there is a certain amount of, additional SOTP-based valuation that they are getting. And, overall, the sentiment towards that entire sector has improved, particularly GAIL, because of the higher, the more reforms that the government may announce. So GSPL is a very unique play. If you have any positive relating to holding company structure, then I think there can be some re-rating of the company.
Okay, so let's see how that plays out, because it's anticipation of the corporate announcement. It's really got the market super excited. Hemang, hi. Speaking of corporate changes and announcements, Tata Motors is in sharp focus as well, right? The DVR is getting extinguished. Yesterday, the stock rallied quite a bit. Any advice here on how to go about things till we eventually get into the demerged entities?
So I think DVR-related, news already is known to a large extent factored in. I think people are positive on the entire, space. Mainly because of the way there is a bit of a revival in the PV space, CVs holding steady. Also globally, if you look at JLR, as against the earlier expectations in the management guidance that this quarter can be subdued, the actual data point suggests that in major markets things are looking quite strong. So I think the stock is reacting to that development.
In fact, let's talk about the auto sales numbers, which are expected for the month of August later on tomorrow over the weekend. Sudarshan now joins in. Sudarshan.
So auto companies are expected to report sales for the month of August on Sunday or coming Monday. And overall volumes, as per analysts, are expected to remain tepid. We may see two-wheelers and tractor segment doing relatively better than passenger vehicles and commercial vehicles segment. And reasons for this underperformance can be two reasons. First, increased in commodity cost, and second is that commodity cost, like for passenger segment, has increased 20 bips month on month, and for two-wheeler segment, it's up more than 100 bips month on month. And as per analysts, even inventory levels are elevated at 40 to 50 days, which they believe can normalize as demand picks up in festive season, as this time festive season is little longer than what we had last year. Now, talk about positive factors. There are two positive factors. First, rural sentiment is turning positive, and second, monsoon rainfall so far has been 7% above normal. Considering all the factors, in two-wheelers, Bajaj Auto sales are seen rising 10% year-on-year and 11% month-on-month. Hero Moto sales are seen flat year-on-year and up 16% month-on-month. For TVS Motor, sales are seen rising 10% year-on-year and 8% month-on-month. Royal Enfield sales are seen falling 6% year-on-year and 1% month-on-month. In four-wheelers, passenger vehicles and commercial vehicles, Maruti Suzuki sales are seen falling 5% year-on-year and expected to be flat month-on-month. M&M Auto sales are seen rising 2% year-on-year and down 1% month-on-month. Tata Motors and Ashok Leyland may report fall in sales both year-on-year and month-on-month. In the tractor segment, M&M tractor sales may rise 6% year-on-year, but on month-on-month may see a fall up to 12%. For Escort, sales are seen rising 1% year-on-year and 4% month-on-month. So overall, we'll see how the real numbers pan out. But as far as stocks are concerned, most of the stocks have seen rising in the recent past, and even the sectoral index Nifty Auto is trading near record high.
Okay, all right, Sudarshan, thank you very much for that. So we'll watch out for all the auto sector data as it comes out when September rolls on. Well, the government yesterday permitted the use of sugarcane juice and sugar syrup for ethanol production in the 2024-25 ethanol supply year, reversing last year's ban. In a conversation with CNBC TV18, Executive Chairman of Sri Renuka Sugar, Atul Chaturvedi, commented that the effect of this change will be more visible from October, while Prashant Biani of Elara Securities welcomed the government's steps for the sugar industry. Let's listen in to excerpts from a conversation that we had earlier in the day.
No, in fact, whether we like it or not, all these changes are going to be relevant once the next crushing season is started. Because cane juice as of today is not available because crushing is just not there. So I would say October onwards, it should start impacting the operations and operations big time. We are actually looking at an increase of closer to what the maize ethanol price is. Say, for example, as far as cane juice is concerned, which is about 65 rupees a litre, we want it to be jacked up to closer to 72 or 73 rupees a litre. And secondly, for the B-heavy, we want it to be suitably increased to about 66, 67 rupees. So that we hope the government would take suitable decision in the matter. Sri Renuka, we would possibly feel that this year we could be possibly doing more than 20 crore litres. Next could be higher. Next could be higher than that. In fact, our capacity is above 25 crores, and we see no reason why we should not be in a position to achieve that.
Okay, that's the big story. And remember, 10 minutes left for markets to close, but that MSCI related adjustment is also going to start taking place from 3 to 3:30. And some stocks which are moving around, NHPC is suddenly shot up 2%. Ashok Leyland is seeing some buying, so there is some good up move seen in a couple of these names. We will slip into a short break on that note. We'll come back with more. To SaaS. From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influential.
Welcome back. You're with us on Closing Bell, and of course we're still in conversation with Hemang as we get into the last leg. Hemang, the sector of the week really has been IT, right? A stupendous move on most of the stocks. So the index itself is up 4%. Individual stocks have done even better. What's your sense? Buying anything fresh in IT now? Large cap, mid cap, anything?
So very interesting upgrades that we've seen come through, particularly for names like L&T, Mindtree, and clutch of other names. And the sense one is getting is that post the numbers and the guidance that some of the companies had given, the actual data in terms of performances of certain verticals continue to be good. Deal pipeline also continues to look good. So within the pack, what we like in terms of valuations and the growth going ahead are names like Infosys and HCL Tech, because relative to the index, they have not really performed, and the numbers and the growth outlook continues to look good. So mid-cap stocks have seen much sharper run-up, be it Persistent, Birlasoft, and some other names. But there we think that the run-up is quite sharp and the valuations are looking a bit stretched. So we would be more comfortable with large cap names.
Hemang, the other chatter this week was the NSE IPO. So we all know that BSE's higher valuations will probably rub off on NSE. But suppose NSE gets listed, what impact will it have on BSE and MCX?
Very interesting question, Rima. My understanding is that NSE by far is the biggest company, in terms of exchange, in terms of their market share, positioning, etc. So while it is unlisted, for some reasons, it's quoting at a substantial discount to BSE. BSE would be getting a valuation of about 40-45 times. NSE is, today, based on the current price of 50 to 5,300, is getting a valuation of 26 times. I think given the overall growth across the, segments, we think that there is going to be a positive rub-off both on the, MCX and BSE both, because I don't see any meaningful impact of the, this SEBI measure that may come through. The final report is yet to be out. And there is going to be a huge interest, particularly for NSE, because it is quoting at a substantial discount. It remains to be seen finally at what price they are able to launch the IPO. But I do think that there is going to be a huge interest over there.
Okay, all right, got that. By the way, looking at some more movers and shakers in the market, Godfrey Phillips The stock has gone up almost every single day this week, and even now as we're getting into the final stages, 6% higher. That takes the week's tally to 20% kind of a gain. Hemang, any thoughts here? There's a raging family dispute going on out there. The stock's just going up, up and away. What would the advice be to anyone who's interested?
So should be not tracking this one, but typically for the stocks where the floating stock is limited and you have a possibility of some kind of an M&A play or an open offer, you do this kind of action. Since we don't cover it, no really view or comment from my side.
Looks like that pre-positioning in the MSCI related stocks is really playing out. So despite an expected inflow in names like a Zydus Life or a Dixon Tech, the stocks have actually reversed in the last 10-15 minutes. Zydus Life is down 3/4 of a percentage point. Dixon has suddenly collapsed, down nearly 1%. And HDFC Bank, which is expected to see a bulk of that $5.5 billion inflow, nearly half of it, hasn't really moved at all. It's absolutely flat. Hemang, any other ideas that you're suggesting to your clients now?
So Rima, I think overall, if you see, when you look at the numbers and the current setup, 2 or 3 sectors have really surprised in terms of growth. So be it pharma, real estate, some of the platform companies. So there is a fair degree of interest in these pockets, given the overall earnings and the growth outlook that one is really looking at. So we are still positive on the names like TVs, also partly because of this MSCI related, flows that one can expect. Also, some product approvals are pending, and we think that, this company is very well positioned. Real estate continues to see a lot of momentum. So something like Brokerage property, Lodha, we think there is some more room on the upside.
Okay. Got it. And before we sign out, Hemang, finally, one more stock, and if you have any thoughts around it, given the move. Paytm, we've just been discussing the price surge. I mean, it's up about 13% today. Would you look at it in any fashion? Dinesh was telling us that there could be some sort of corporate developments, maybe the regulatory overhang reduces a bit as well. Any interest?
So Surbhi, I think the recent, this SEBI-related news, they were already known and there was some reaction. So the stock is actually adjusting to that. And apart from that, if you see the entire, companies with, platform as a theme, they are really catching up. There is a lot of interest. And if you see any M&A related activity or some, relief from the regulator, we have already seen that some approvals they've already got. But, this could be a big trigger for a name like Paytm because of the kind of interest that is there on the platform companies.
Vodafone Idea, by the way, is now at the day's low. It's a 5% cut on that. The street perhaps was hopeful for a up move in the stock, given the Supreme Court is finally agreeing to hear the curative petition on AGR dues, but the stock has tumbled now. But winding down to the day and the week, and the positive run continues for the markets for the 12th straight day. The Nifty and the Sensex virtually closing at record levels. It's 25,250 on the Nifty, a 100-point gain. The Sensex has an up move of 250 points, closer to 82,400. On the way up, you had strength in names like Cipla. Bajaj Finance has been a big mover this week with a rally of nearly 7%. M&M, Hero MotoCorp in the automotive pack, rally. NTPC, Divi's Laboratory, Bharti Airtel too was a big mover. On the way down, Tata Motor reverses part of yesterday's up move, so that's the top Nifty loser, 1.25% down. And HDFC Bank sulked, so that stock too. A bit disappointing, ending with a cut of more than 0.5%.
It's such a solid showing and such a strong close because the Nifty has pulled back in the last couple of minutes. It's again pulled back to close virtually at the day's high. So that's a solid showing of strength. The mid-cap market has seen a flourish come back, and there's so many names flying around. Torrent Power, 6%. Sundaram Finance, now 7.5% up. KEC International, 6%. Gravita, 6%. NetWeb, 6% is such a long list of winners. Paytm, we just discussed. Radico Khaitan, 7.5% up. So beyond sugar, which obviously was a very sweet spot in the market today, a whole host of other mid-cap names came up with a flourish. So the mid-cap market ending its small little patch of underperformance compared to the large cap screen. So very little to compare to complain about in the market. Bank Nifty down about, up about 0.3%, and for a change, it's actually almost keeping pace with the Nifty as well. So all in all, a very, very solid close to what has been a phenomenal week for the market again. Of course, a close again at fresh all-time highs, 25,246. Well, that's the market action. Again, the bulls in control. That's how August is sort of ending off, and the bulls are entering September in style. That's where the team of Closing Bell takes your leave, but don't go anywhere because our Friday special offering editors roundtable coming up next.
Celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Beyond our schools, I'm happy to share that through Reliance Foundation, we aim to provide world-class early childhood care and education for over 10 million children from disadvantaged communities across India. This program aims to build capacity development models and provide learning resources for students and teachers all over India. Our efforts go beyond academic learning to promote complete development, including social emotional skills, critical thinking, and physical well-being. As part of our work with the Integrated Child Development Services, Reliance Foundation developed and refurbished 100 Anganwadis in Varanasi last year.
Reliance Retail recorded gross revenue of 3,06,848 crores, a growth of 17.8% over the last year. We continued our trajectory of strong profit growth, registering an EBITDA of 23,082 crores, up 28.4% year-on-year, and net profit of 11,101 crores, up 21% year-on-year. At 8.5%, the EBITDA margin continued to show improvements and grew 70 bips year-on-year. Our stores witnessed over 1 billion footfalls, and we have had more than 1.25 billion transactions across our channels. Registered customer base crossed a milestone of 300 million customers.
Well, Dalal Street gains for the 12th straight day, its longest winning streak in over 3 decades. The Nifty and the Sensex gain for the 3rd straight week, its biggest weekly gain in 2 months. Over the next 30 minutes, we decode the week on Dalal Street, put the spotlight on NSE's plans to go public, and we'll tell you all about the big block deals this week. Hello and welcome to the Editors Roundtable. I'm Sonia Shenoy, with me Nimesh Shah and Nigel D'Souza. Also on the show today with us is Devina Mehra, the founder, chairperson and managing director at First Global. Guys, before we go across to Devina, what a week it's been for the market, right? I mean, phenomenal, the kind of run-up. At every point in time, one would have expected a sell-off to come through, but it just didn't. So I think it's been spectacular.
Well, that's right. When you have 5 sessions in a week and all 5 end in the green, that's telling you that, in fact, it was a good day. And, it was a more large cap driven. So it was good. But I like the point that Nimesh made actually towards the end of Friday, when we're expecting the entire MSCI rejig to take place, and we're talking about $5 billion, and the markets end up 50-60 points.
Exactly. So no, that also says that, as you rightly pointed out, Sonia, at the introduction, that we had 12 days of straight gains without any fall. Looks like there is a bit of anticipation of this big MSCI inflow, and that's the reason why market didn't fell in the last 12 sessions, 11 or 12 sessions. So looks like a bit of preemptive was done. Now it will be all about what for the September series. We have this big Fed, Fed meet. That can be a big trigger for the markets. In fact, Nigel is going to put a piece as well as to what rate cut means for global and emerging markets. That's an interesting data to watch actually. But in general, this market is all about liquidity, right? There is so much of domestic liquidity which is helping the markets, especially the bulls, to just carry on and just ride without any fear. So I guess some data needs to be looked at very closely now. Earnings were not that great. We'll have to see how the Fed as and when how much they do. The US elections in November will be quite tricky as well. So a lot of forward future-looking data is suggesting a bit of caution, but who are we to fight the liquidity?
No, actually, there are some ominous signs of a correction in the global markets, right? Yeah. There is talks of a recession in the US. The data that has come out, whether it's the unemployment rate that has gone up, there's stagflation concerns in the US as well. So a correction, global correction is imminent, but the timing of when it happens, no one can tell. But Nigel, you sort of analyze the market through the week?
Yeah, well, that's right. For the time being, the markets want to ignore any kind of bad news and just want to pick up the good news and just move ahead. So the global markets were in blue sky territory. We're back at all-time highs at the start of August. Everyone said, hey, what's going on? Are we going to see that big correction? And the US markets as well corrected. But we picked up from there. And in August itself, we're up more than 4.5%, which is telling you the kind of move that we're seeing. So global markets, well, we're awaiting that Fed rate cut in September itself. Now it's between 25 basis points or 50 basis points, but the street has digested that, yes, we're going to see rate cuts that will come in. Indian markets, well, we make fresh all-time highs, but there are pockets where we are seeing some bit of selling, and now we're on a 12-session winning streak. Geopolitical issues, that's being ignored for now, but that could be something that will come to fore, particularly when we have the US elections that is expected in the next 2 months or so. For me, the Nifty bank not able to conquer that 51,400 mark, that's a bit of a warning sign, because almost every day in this week we went to 51,400, but we couldn't get past that. That's where the 50 DMA is as well. So I think once we get decisively past that, then that's what will give direction, or maybe we break the 20 DMA on the Nifty bank on the downside, which is around 400 points away from current levels. What did well this week? Two opposite ends of the spectrum. Tech did well, we're up 4% over there, and Realty was up close to around 3.5%. Both those two indices, the big outperformers, but the broader markets, a bit of an underperformance. One more point, guys. Everyone's saying we're not seeing a big correction. Everything is at all-time highs. Nvidia, the stock is up 140% in this year itself. From the peak, it's down 16%. Quietly that one's corrected. Defense stocks, HAL,
exactly, correct.
Bharat Dynamics, both of them have corrected big time from the recent peak. So there are, though we are saying that the markets have not corrected, but individual stocks are going through 15, 20, 25% correction as well.
Nigel, that's exactly the point. This week, it may look good that it's a 12-day of winning streak or whatever. But for this week particularly, it's the large cap which have done well. The broader market stocks have not done that well. There is some pockets which have done well, but that's again, very limited stocks which have done well. So if you ask a portfolio investor, he will not be happy with this week's performance, especially from a portfolio point of view. The Nifty looks great because of, and we've seen this, right? After an all-time high of 25,000, generally we are going to see the large caps to drive this. So we had the big HDFC event that is now out of the way. We had a Reliance event this week, even that is out of the way. Tech has rallied 20-25% from the recent low. So now we need to focus on which sector or which leader in the large cap which can take this rally forward. So I guess that's going to be a big question mark. Maybe one of the sectors to watch could be metals, because again there is a talk of stimulus in China, so that can lead to a bit of a rally in the metal names. But I guess there are not enough levers now, even in the large caps, which can potentially throw up a big surprise. So need to see how it goes.
In fact, I just want to get Devina's view into this. She's been sitting by waiting patiently. Devina, thank you so much for joining us. So, as we were discussing, right, I mean, there are signs and perhaps a correction is overdue as well, but it hasn't come yet. So as an Indian market investor, what do you do now? Do you get cautious? Do you raise your cash levels? Or do you continue to ride this rally?
Well, hi and good afternoon to you and your viewers. If you want it in one line, I would say get out of the frothy areas of the market and get into a steadier portfolio. You need not go into cash necessarily. But there have been pockets in the market, which all of us know of, where there have been excesses, whether it is in market cap categories, whether it is in themes, whether it is in new offerings, whether of stocks or of funds, I would say, even some of the NFOs in the areas where they have come up. So those are the areas where you should take some money off the table and put it in a steadier portfolio. That would be my number one advice.
So, Devina, when you say steadier portfolio, if you can just tell for our viewers, which are the sectors that you are quite bullish on at this point in time and would like to incrementally add money into those sectors?
I missed out part of the question. So you're saying incrementally add into which sectors? Is that the question?
Correct. Which are the sectors where you feel comfortable?
So I'll tell you what we do.
Sure.
Okay. So in July, we do a quarterly rebalance of our PMS portfolio. So from base zero, where would we be if we had money today, if we had cash today? And so there are some themes which continued. So we have been overweight, for example, in autos and pharma for the past year and a half, in the beginning of 23. We added more there, auto components in particular, more than autos and pharma. Capital goods and industrial machinery, we got in much earlier than most other funds and investors, which is almost 3 years ago. In October 21, we have been cutting and booking profits, but we are still a little overweight. Sector which we were slightly overweight. We went even more overweight in the last rebalance was IT. And a sector which had kind of disappeared from our portfolios for almost 2 years was chemicals, and that made a comeback in our systems. A number of chemical stocks went up high, so that's a sector where we made fresh investments. We remain where we are underweight. We remain underweight banks, but the change of late in the last 2 quarters has been that we moved a little from the PSUs to the private sector. Still underweight, but the relative weights changed. Surprisingly, this time, a lot of the other non-lending financials our systems did not like. For example, stock exchanges or AMCs or broking related stocks. So we just because they fell so much in our rankings, we got out of most of that. So that would be the broad pattern of what we did this time, where we are overweight, where we are underweight. We are quite a bit underweight to things like energy, utilities, and things like that. So that's one more segment.
All right, Devina. Well, I'll tell you what, everyone's talking about this 12 straight winning streak. But the bulls will be hoping that history doesn't repeat itself. Because in the last 12 sessions, the Nifty has ended well in the green, which is great news, right? When was the last time that we had a 12-session winning streak? It was all the way back in November 1993. The markets went up by around 139 points on a base of around 800. And that's why the gains are around 17%. The last time around, we saw 12 straight sessions that we did have gains. This time around, because of the larger base, it's at around 4.5% odd. But I'll tell you what, that's a long time away. So let's figure out, when did we at least see a 11-session winning streak? Well, that was a long time away. In fact, it was in 2007 itself. And at that point of time, we had a good run. The markets were up by around 700 points approximately in 11 straight sessions. 3 months later, we were even higher. So after jumping up close to 16%, we built on another 18%. But from then on, things actually went southward. So post that 11-session winning streak, 6 months down the line, we had corrected by 8.5% from there. And 1 year down the line, we corrected close to around 27%. So it's been a good run, 12-session winning streak. The bulls are feeling good, but they are hoping that history doesn't repeat itself, because when we last had 11-session winning streak, well, a year down the line, things didn't look very good. Well, Devina, I wanted your view on this. We keep talking about the maturity of the Indian investors. We keep talking about the domestic flows have been rock solid. Are we getting a little too comfortable? Because if you dissect those flow numbers as well, throws up various results. What's your view, Devina? 2007, 2008, that was when I started tracking markets. But you all would vividly remember that period. Tell us more.
Yeah, so let me go back even further. You gave that 1993 example. So yes, there was a lot of market movement around that time. But you must remember that from 1994, which interestingly is also the time that the FII flows into India came started in earnest. There was a whole 9-year streak from 94 to 2003 when the net movement in the market was zero. I mean, it went up and it went down, but ultimately over 9 years, the index index movement was zero, a whole 9 years. And this, I mean, for all the people who track flows, this is also important to remember that with this fresh slew of FII money coming in, no mutual fund market, to speak of in India, no, very little retail participation. Still, it didn't move the market. But this is the postscript to that is this, that after that 9 year of no net displacement from 2003 to 2007, the market went up 6 times, which was also part of a general emerging market move, because the emerging market index itself went up 3.5 times, Brazil went up 10 times, and so on, at a time when US was struggling. So that was the move, that 2003 to 7, it was a 6 times move for the index. So yes, after that it fell. But then, this also gives you perspective as to how movements can happen. And as this is a statistic I've quoted earlier in my interviews also with you, that 2010 to 20 was again a period while, it's not as if there were zero returns, but there were very low returns. There were returns which were barely matching fixed deposit returns. So if you had put in 100 rupees at the beginning of the decade at 2010-11, you would have made only 230 rupees at the end of 10 years. As against 1980, you put in 100 rupees, that went to 700 rupees. So this was what created this subnormal return for a whole decade, just about, not even 9% at a time when fixed deposit rates were 8%. That created the room for this bull run, which is why I'm saying that for the large cap, for the mainstream indexes, I am still not negative on a sustained basis. There can be interim volatility, but I don't think we are at the high end. So, that 2007 and 93, there's a context to it. So 2007 was after a 6 times move in about 6 years. So
correct.
That was the context.
Okay. Devina, we'll just come back to you. You were making a very good point about some of these exchanges and, how they've been doing as well. The National Stock Exchange has revived its IPO plans and everyone has their eye on it. Nimesh, you have all the details?
Yes, so Sonia, as you rightly pointed out, everybody is waiting for this NSE IPO. It's going to be a big mega blockbuster IPO as and when it happens. Of course, there are a lot of regulatory challenges to it. But this week, the board of NSE had actually asked, to file a fresh NOC. Certificate from regulator SEBI to file for a fresh IPO. Remember, in 2016 they tried, and it's still not been cleared by the regulator. So again, it's as I said, it's a big event to track, and of course there is a lot of interest from retail investors as well. Interestingly, last quarter the exchange also announced a bonus in the ratio of 1:4. So again, that's still waiting the SEBI nod. Now IFL has put out an interesting note on NSE this week. And they believe that, the kind of speculative volume which has gone up in the options market, NSE faces a lot of uncertainty, largely from a regulatory point of view. So there has been a lot of consultation and there is an expectation that SEBI will come out with some regulations to control the speculation in the F&O market. Now, IFL believes that if there are stringent norms and stringent restrictions on the trading volumes, it can impact 1/3 of the NSE's volume, which would mean that the FY26 EPS can go down by 20 to 25%. So that's the kind of hit NSE can take in the near term if indeed that has to happen. Additionally, there was a recent announcement that regulator had asked NSE to provide further 2,600 crores in the guarantee fund. So that also can have an impact of close to 5% on the earnings as per the IFL note. But interestingly, I've heard only today there was a feedback that there is a fresh block on NSE at an average price of 5,300 rupees per share. So if you look at from a valuation point of view where NSE stands vis-a-vis the other exchange peers, NSE on FY26 price to earning is still quoting at close to 19 times, whereas BSE is already at 31, MCX is at 44, and IEX is trading at close to 40 times. So NSE is still very cheap compared to the other listed peers, largely because it's unlisted so far. But the other interesting thing, indeed, if it has to happen that NSE gets listed, of course, it has to get listed on the BSE. I just looked at some data on BSE 30. At the current price of 5,300, the market cap that NSE will come on will be close to 2.6 lakh crore. Right now, it would stand around 25th company in the BSE ranking. Interestingly, Nestle currently is having a market cap of close to 2.4 lakh crore. So if today, for example, NSE has to list, it will be above Nestle for sure as far as the market cap is concerned. So a lot of eyes are definitely on NSE's listing. Of course, there are a lot of regulatory headwinds and it needs to check. But IFL believes that if there is a stringent regulator interferences, then the impact on the EPS earnings could be between 20 to 25%.
Okay. Devina, you want to comment on that? Of course, this is something that's long coming. I mean, there are a lot of regulatory issues as well that NSE has been facing. But as and when the listing happens, it's going to be big, especially for shareholders, right? Any thoughts on how to approach this one?
I haven't really studied the numbers, so I would not like to comment on that. As I told you, this whole category, our systems did not like, and partly the reason could be some amount of regulatory overhang which might change the dynamics. And so I agree that this is a real risk, and as it should be, I mean, because the derivatives volumes, the way if you see over 5 years or 6 years, the way it has gone up, it doesn't make any sense. And obviously everybody is losing money, which they refuse to recognize, and because human beings don't understand probability. So you're essentially playing a lottery, and you know for certain that the expected value of doing this is negative, but you think you will be the exception. So, I mean, those things are there. Overall, I would say in the IPO market, you know, India is a capital-starved economy. So any time any window of capital raising opens, then first the good guys come, and then a whole bunch comes, which is a mix of good, bad, and really ugly. So that's what's going on overall here. I see I'm not talking about the NSE IPO, obviously, but I'm saying IPOs in general, or even fundraising in general. I was looking at the QIP data. QIP raising this year in the first 6-7 months has been as much as what it was for the whole of last year, which itself was a huge jump over 2022. So anytime there's a capital available, Indian companies probably from the company point of view, rightly so, just go and raise money. I mean, when GDR market, which people have long forgotten, opened in the 90s, and so many Indian companies went there as global depository receipts, and I looked at the data, and I found that of the entire global GDR market, it was 90-95% Indian companies. So, that's the danger when there are too many companies raising money. I even hear some analysts saying that so-and-so is doing a QIP, which is a positive, and that's not the filter to look at, because QIPs typically mean dilution and return ratios, which is not to say that QIPs never make sense, but I'm just saying that there's too much fundraising going on overall.
Yes, Devina, exactly. That's why I wanted to ask the next question to you, especially in the real estate sector. As you rightly pointed out, there are a lot of companies which are raising funds, especially in the real estate names this week. In fact, today itself, we saw 2 companies raising money by QIP and pretty large sum. In fact, the entire real estate basket has raised money or in the pipeline of raising money. Your view on the real estate sector stocks, and is there in part of your portfolio right now?
No, they are not part of our portfolio, so which is why we're not looking at it very closely. It's a risky sector, and as a philosophy, as a house, and how we manage portfolios, we first try to avoid big risk. So this is not a sector that we have ever held in great size. And, given the nature of the sector, I mean, it's no wonder that people are raising money, because, that's the way to do it in this market, that money is available. So you may as well raise as much as possible. But also, I mean, this is not really, based on of data, but purely anecdotally, I don't see
your video, Devina. So I think we're just going to come back to you in a bit. We can't hear you very well. But this was another big week for block deals worth nearly 20,000 crore rupees. Nimesh, take us through the big ones.
So, Sonia, the headline is second consecutive week of block deals worth 20,000 crores, or almost 18,000 crores this week, and we saw 20,000 crores last week as well. So, but the big headline for this week was, of course, the Indigo block. Kanwal sold, stake worth almost 11,000 crores by a block deal and still owns 13%. So that was one large block. PB Fintech, there was a large block, 1,600 crores. Welspun Living, the promoters sold and raised close to 900 crores. Nirlon was a large block today, but again, a small one though. But MedPlus was another large block of close to 850 crores this week. And a couple of other big names like Tata Technologies. There is a large block of close to 1400 crores, and I believe there could be more blocks in Tata Technologies. So these were the large blocks of this week, but I guess the big standard was Indigo from this week. Even last week, we saw some large block deals, Zomato, Ambuja Cement, Kalyan Jewellers. That's a long list. So the big headline is for second consecutive week, we've seen large block deals, but my sense is it's not going to end here. In fact, for next week, there is a long list of lineup which has already been there. I highlighted about Paytm. There could be a potential large block deal. So because of this, so much of domestic liquidity, and there is a lot of selling happening from promoters and from PE investors also. Looks like this trend is going to only continue at least till the earnings season kicks in.
Okay, well, let's do one thing. Let's take a short break on that note. We'll be back with lots more market opinion with Devina on the other side. Stay tuned.
The population of the US. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Jio TV Plus brings all your entertainment, live TV, on-demand shows and apps together in one easy-to-use platform. With Jio TV Plus, you get access to over 860 live TV channels with all leading channels in stunning high definition, plus the best content from apps like Amazon Prime Video, Disney Plus Hotstar, all in one place. And we're optimized Jio TV Plus for super fast channel switching experience. Switching between your favorite channels is now faster than ever, so you won't miss a single moment of action.
What makes Jio TV Plus really unique is how it combines content from over a dozen OTT apps, hundreds of live TV channels, and a vast library of on-demand movies and shows, all with a single login. You no longer need to juggle multiple apps or remember different passwords. Jio TV Plus handles it all. Also,
welcome back to Editors Roundtable. Well, we still have Devina Mehra with us, founder, chairperson and MD at First Global. Devina, before we let you go, you were telling us about what your view is on the markets, but if this correction does set in, then any couple of sectors or stocks or pockets in this market that you think are worth investing into now?
Yeah, I told you where we are overweight, which is auto components, pharma, a little bit of industrials and capital goods, IT. Those are the places where we continue to be overweight to a greater or lesser degree. But as I said, be careful. And I was listening to the talk on block deals. That's another area where, aggregate numbers are very high. I'm not one of those who always think that insider selling is bad, because obviously everybody does and should diversify their net worth. It's locked up mostly in one company or one group. So that's a sensible thing. But on the aggregates, when the numbers are this large, it shows froth, at least in some areas of the market.
Okay.
And real estate, I was saying, anecdotally, I don't find people being able to sell their existing flats at anywhere close to what the numbers are being quoted in the market. So,
okay. Got it. All right, Devina, we appreciate you joining in on the show. Thanks a lot for joining in, and we look forward to chatting up with you rather soon. But before we wrap up on this Editors Roundtable, we say goodbye to Sonia. It's a final Editors Roundtable. Well, working with Sonia personally has been absolutely a joy, a thrill, someone who you can always go to over the last many, many years. We're going to miss you, Sonia, but we wish you well. I recall when I joined CNBC TV18, one of the key things that you wanted was to learn from Udayan and work with Sonia.
And work with Sonia was one thing, Nigel. Yeah. For me, the maximum request which is to come to me, can you introduce to her? Can I have a coffee with her?
Absolutely.
In fact, I told her once that, Sonia, why don't we start a series where we do a coffee with Sonia? And so many people will love to pay and come to, see her. So that's the kind of craze she had in the dealing rooms and with the market participants.
Well, I absolutely agree. Well, I recall when I joined Sonia, can I take a photograph with you? That was it. But Sonia, you've been absolutely a thrill to work with. besides markets, a person that you could always go to, someone who you could always rely on, and with a calm mind. Don't get into any controversy. You'll handle it. So all the best, and thank you for everything.
Thank you so much. Thank you. I'm almost going to shed a tear, but I won't. But Nigel, it's been amazing working with you. And Nimesh, I mean, the amount of knowledge that I have got from both of you and from everyone in this team, it's been unparalleled. It's been an amazing journey. And of course, I mean, all good things come to an end. So this has as well. But I'm sure, if not in front of the camera, behind the scenes, we'll definitely catch up.
Absolutely. But I think you want to do this one last time on Editors Roundtable, so go for it, Sonia.
Oh, yes. Thank you so much for watching Editors Roundtable. You guys have a great weekend. And any weekend plans one last time?
Not me for this weekend. Unfortunately not. The week you asked me, I have no plans. And the way I plan something, you don't ask me. So I just end up not revealing my plans. So anyway,
well,
no
next
plans
week, someone else is going to ask you a weekend plan, so be ready. All right, guys, have a great weekend. Thanks a lot for watching. It's Sonia Shenoy signing out.
Recommendation engine offers personalized suggestions based on your viewing habits, making it easier than ever to find something you will love. And if you miss a show, Catch Up TV lets you go back up to 7 days and catch up on what you missed. With our upcoming Play Pause feature, you will soon be able to pause live TV and pick up right where you left off whenever you are ready. It's all about making TV work for you.
But that's not all. We're elevating digital entertainment with advanced interactive features. Imagine watching a live cricket match or the Olympics and being able to pull up stats, buy tickets, or switch camera angles, all without leaving the action. That's the power of Jio TV Plus.
Jio TV Plus is also designed to be a truly social experience. With integrated social features, you can share what you're watching with friends, join live watch parties, or discuss your favorite shows in real time. This is the future of TV, and we are excited to bring it to your living rooms.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24.
Hello and welcome to Business 360. I am Ashmit Kumar, and here are the headlines that we're tracking this evening. Sensex and Nifty hit a fresh record high once again as stocks gained for the 12th straight session. This is the longest winning streak in the last 31 years.
मुझे मेरे देश के युवाओं की टैलेंट पे इतना भरोसा है और मैं कहता हूं, बड़े विश्वास से कहता हूं, our best is yet to come.
Prime Minister Narendra Modi addresses the Global Fintech Fest, says India's fintech revolution has made dignity and quality of life better, highlights that the sector has played a major role in democratizing financial services in the country. Quick commerce firm Zepto races to $5 billion in valuation after raising $340 million. Co-founder Adit Palicha tells CNBC TV18 that the company is targeting an IPO in 12 to 24 months. That's an exclusive. Vodafone Idea argues for an open court hearing of its curative petition in the AGR case. Chief Justice Chandrachud says he will consult with fellow judges. Vodafone Idea's AGR dues stand at around 70,000 crores, including interest cost. The Indian government approves Singapore Airlines' 49% FDI in Air India, clears the runway for Vistara to merge into the Maharaja. Vistara says all flight operations would be merged into Air India from November 12th. Passengers can now book a Vistara flight for travel only on or before November 11th. FY23 direct tax data points to a growing middle class. Over 2 crore individuals earned between 5.5 to 9.5 lakh rupees from salary and other income. 285 individuals earned over 100 crores from salary and other incomes. This includes 23 taxpayers who earned over 500 crores. At least 36 people have died across Gujarat as heavy rains and flooding wreak havoc in the state. Weather Department issues a cyclone alert and warns of extremely heavy rainfall. Himachal Pradesh Chief Minister Sukhu raises concerns over the state's financial condition, claims that funds from the union government had not been allocated as expected, says he along with ministers and some bureaucrats would defer drawing salaries and allowances for 2 months. Israel and Hamas agree to pause the fighting in Gaza for a limited period from Sunday to allow polio vaccination. United Nations warns that failure to vaccinate will be disastrous for children in Gaza and beyond. In her first interview after clinching the Democratic Party nomination for US presidency, Kamala Harris defends her policy shift on immigration and economy, says her views have evolved, also says that she's ready to appoint a Republican to her cabinet as diverse views will benefit Americans. Well, the big news maker this evening, Zepto has shaken the quick commerce landscape yet again with a fresh $340 million top-up to take its total fundraising in 2024 to over $1 billion. With this, the company has also raised to $5 billion in valuation. The funding comes as the 3-year-old startup expands rapidly and prepares its balance sheet for a possible IPO with a realistic timeline of 2025 or 2026. In an exclusive conversation with Shireen Bhan, co-founder and CEO Adit Palicha said that the sweet spot to hit public markets will appear once the company starts to generate significant free cash flow. Take a look.
How IPO ready do you feel today? And you know, what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
I honestly think it's just like a matter of, you know, when do we see, you know, the right sweet spot of, hey, you know, we're inflecting, you know, we think that we're going to get into, you know, harvest significant amounts of, you know, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, you know, it's a commercial strategic call. Yeah. I think that happens in, you know, probably sooner than even I anticipated. Yeah. And, you know, we're a fast company, so we take a call to go public, we'll go public very quickly. But yeah, I mean, I think 2026, potentially even late 2025 is a realistic timeline, and our focus would be build excellence and controls and make sure that you have a high, it's not about profitability today, yeah. It's about, you know, do you have, because, you know, break-even-ish is not what people are betting on. They're betting on, can you generate $300, $400, $500 million of free cash flow in like a reasonable period of time? And so once we see that inflection point, we'll say, that's the right time to go public.
I know you're you're doing the rounds of the investor conferences, Adit, Goldman Sachs, Motilal Oswal. What are the questions that they're asking you? Are they excited about the anticipated IPO?
Look, I think, you know, fortunately there is excitement. I think, you know, obviously the public guys have less detail on our bottoms-up numbers versus the private guys do. I think, you know, one thing I'd say for sure is that, you know, meeting the ecosystem 2021 when we were just getting started versus 2024, I feel like there's just a much deeper understanding of what quality internet companies look like and what bad internet companies look like. And the questions that are being asked are much deeper, right? So today you'll have discussions on, okay, if the atomic unit of your business is the store, what's the return on equity mechanics of the store? What's the return on equity mechanics for every customer that you're acquiring? What's the CLTV to CAC on that? So you're having really thoughtful, deep conversations, and we've really been excited about the way the public markets not just like understand our business, and I think obviously they're richly valuing this space, but it's not coming from just like some random thought process, right? It's actually coming from like an understanding of the mechanics of this business financially, but more importantly, the value for customers.
And a growing conviction in the fact that this business will actually work and take off, because that wasn't the case 2 years ago.
For sure. Look, I think I would say it's half the business model, but also half the execution, right? I think like folks are, there would have been a very real world 2 years ago when people had skepticism on this business model, and it would have failed. Like if we didn't execute, and it's not just Zepto, it's all the players in the space that did well. We've really just executed a very difficult business model, and we're getting rewarded for that.
Well, you can catch that entire conversation with Zepto's Adit Palisha at 6 p.m. right here on CNBC TV18. Well, let's move on to what was yet another record-breaking day on the Lal Street. Sensex and Nifty hit a new lifetime high as stocks gained for the 12th straight session. This is the longest winning streak for Indian equity since 1993, the best run in the last 31 years. The Midcap index also hit a record high. Sensex and Nifty are up 1.5%, 1.6% to be specific, for this week, which is the biggest weekly gain in 2 months' time. Surbhi Upadhyay is joining us now with a quick wrap of the day's market action. Surbhi.
Well, a great close to what's been another solid, superb week for the market. The bulls are in control, and they firmly announced that on Friday. The market practically ended at the highest point of the day. And not just that, Friday ended the underperformance that we saw in the mid-cap arena in the earlier part of the week. It was solid global cues, good global cues that actually lifted spirits on Friday. The Indian market took off from a lot of the regional Asian peers, and we ended, as I said, with plenty of green on the screen. And for a change, banks didn't disappoint. The Bank Nifty actually was doing even better than the Nifty, and we don't say that too often. So let's talk about the movers and shakers. The big winners on Friday included names like Cipla, Bajaj Finance and Finserv. Both of these stocks have put on great momentum this week, between 7 to 9% higher. So lots of buying coming back to them. Divi's, M&M and Hero Moto were some of the other high flyers that stood out. On the losing side was Reliance. It was cooling off after all the excitement around the bonus issue in the AGM on Thursday. ITC and Tata Motors lost some ground as well. The DVR shares, remember, have been phased out. They will no longer trade, and that corporate action is also underway. Now, as I said, mid-caps were playing big-time catch-up. The index was outperforming the Nifty for the entire day. And if I talk about some of the big movers, the heavy hitters, Paytm almost 13% up, Torrent Power 6%, Prestige Estates, Sundaram Finance and AU Small Finance Bank, where there was some positive brokerage commentary that really helped that stock move higher. Radico Khaitan and Godfrey Phillips, which has only gone up. By the way, Godfrey Phillips is up 20% this week, even as that family feud rages on. Sugar was in a very sweet spot thanks to all the policy announcements, with now sugarcane, molasses also being opened up for conversion to ethanol. That worked very well for distillery companies and for sugar companies like Bajaj Hindustan, Renuka, Dhampur, Balrampur and Triveni Engineering. Now, the sector of the week has to be IT. A lot of buying has come back. The IT index, the Nifty IT, is up 4% this week. Two major reasons. One, the expectations of rate cuts in the US and the fact that the expectation is that the large cap tech rally will not totally fizzle out. There's been a bit of a wobble because of Nvidia, but the hope is that, things will get back on track. And the second big trigger is just portfolio repositioning back home here in India, as a lot of fund managers are now looking to trim a bit of their positions on capital goods and on things like defense and railways, and perhaps shore up the holding on the IT side. So that's what helped IT, which brings me to the tally for the week. The Nifty is up 1.6%. The mid-caps, thanks to that Friday catch-up, up 1.5%. The small-cap index also pretty much in step. And the banking index, not too bad. The Nifty Bank up 1% as well. So it's been a good week. When we come back to trade Monday onwards, a couple of important US data points to watch out for. The PCE inflation numbers will be out, so we'll digest that. But the big number is, of course, the jobs report, the non-farm payrolls report, which comes out only next Friday. So that's going to be in focus. And also an eye out on oil prices, because Brent has been very volatile in the week. But bulls in absolute control as we wrap up August.
Right, Surbhi, thanks a lot for that. Now, just as I mentioned the last time, Sensex and Nifty gained for 12 straight days, was back in 1993, and the bulls will be hoping that history does not repeat itself. Nigel D'Souza is here to tell us why.
Well, I'll tell you what, everyone's talking about this 12th straight winning streak. But the bulls will be hoping that history doesn't repeat itself. Because in the last 12 sessions, the Nifty has ended well in the green, which is great news, right? When was the last time that we had a 12th session winning streak? It was all the way back in November 1993. You know, the markets went up by around 139 points on a base of around 800. And that's why the gains are around 17%. The last time around, we saw 12 straight sessions that we did have gains. This time around, because of the larger base, it's at around 4.5% odd. But I'll tell you what, that's a long time away. So let's figure out, when did we at least see a 11 session winning streak? Well, that was a long time away. In fact, it was in 2007 itself. And at that point of time, we had a good run. You know, the markets were up by around 700 points approximately in 11 straight sessions. 3 months later, we were even higher. So after jumping up close to 16%, we built on another 18%. But from then on, you know, things actually went southward. So post that 11 session winning streak, 6 months down the line, we had corrected by 8.5% from there. And 1 year down the line, we corrected close to around 27%. So it's been a good run, 12 session winning streak. The bulls are feeling good, but they are hoping that history doesn't repeat itself, because when we last had 11 session winning streak, well, a year down the line, things didn't look very good.
Well, I'm sure we'll keep our fingers crossed. Let's move ahead now. Oil prices cooled marginally owing to fresh signs of waning crude demand after weekly US crude inventories fell much less than expected. This comes after a session that saw prices surge owing to a supply disruption in Libya and reports of Iraq planning to cut output. However, the correction puts crude oil prices on track for the second straight month of decline. And Prime Minister Narendra Modi addressed the Global Fintech Fest in Mumbai today. PM Modi said that the best is yet to come for the Indian fintech sector. Lauding India's fintech revolution for making dignity and quality of life better, the Prime Minister also highlighted that the sector has played a major role in democratizing financial services in the country.
मुझे विश्वास है भारत का फिनटेक इकोसिस्टम पूरी दुनिया की ईज ऑफ लिविंग बढ़ाएगा और मुझे मेरे देश के युवाओं की टैलेंट पे इतना भरोसा है और मैं कहता हूं, बड़े विश्वास से कहता हूं, आवर बेस्ट इज येट टू कम। ये आपका 5वां समारोह है ना, तो 10वें में मैं आऊंगा।
India's fintech revolution is improving financial inclusion, driving innovation, and its diversity is amazing everyone. That's the word that came in from Prime Minister Narendra Modi on the day 3 of the Global Fintech Fest here in Mumbai that saw over 80,000 participants. As the Fintech Fest now comes to a close, Prime Minister Narendra Modi not only spoke to the fest participants but also took a tour of the pavilion that showcased some of the innovations that are happening currently in the fintech ecosystem of the country.
I think Prime Minister Modi is somebody who was very supportive. Also, he understood it very deeply, even though it is a very technical topic. He understood the problem, and it is a problem which not only affects urban consumers, it affects rural consumers. We shared some examples where, because of lack of digital data points in rural, frauds happen, and he really understood it well, and he gave us a lot of encouragement, and he said, if we need any help from any government agency, etc., and we should reach out.
We are really excited that the Honorable Prime Minister has given his support and endorsement and blessing to the idea of open network to digital commerce and what it can do for the small merchants and to give them an equal opportunity in the world of e-commerce. And I'm sure this will give a lot more confidence to various entities who have to work towards helping these people digitize, improve their processes, and make and help them to do digital marketing and make their products available and expand their market reach.
I think one thing that I particularly remember is his tagline, build local and go global. I think that is amazing.
at least as a fintech company building out of India and trying to enter other markets. I think that's an amazing tagline that I'll carry everywhere. But it's amazing to see. He also spoke about digital banking and how in future we could see fewer digital-only banks. So there's a whole and all very it was a fantastic speech.
The Prime Minister, he understands fintech very, very well, right? The entire Digital India Mohim has been started by him. So every possible 47 or 49% of the world's real-time transactions are happening in India is major to his vision and policies that have helped India catapult from what we were some 10 years back to what we are today.
Well, with that, it's time now to slip into a very short break. But coming up next, the Indian government approves Singapore Airlines' 49% FDI in Air India. Clears the runway for Vistara to merge into the Maharaja. Details when we come back.
Taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage. With current data prices that are 1/4 of the global average and just 10% of those in developed countries. In 8 years, Jio has grown to become the world's largest mobile data company. Today, Jio is a 490 million strong family, reflecting the immense trust and loyalty of our customers. I would like to share some good news with you today. At 1:45 p.m. today, Reliance Industries Limited has sent a notice to the stock exchanges that the board of directors will meet on the 5th September to consider issuing bonus shares in the ratio of 1:1. When Reliance grows, we reward our shareholders handsomely. And when our shareholders are rewarded handsomely, Reliance grows faster and creates more value.
Investing.
Welcome back. Now we are counting down to CNBC TV18's Banking Transformation Summit. Ritu Singh is joining us from Ground Zero. In fact, she's joining us from the red carpet where the bigwigs of the Indian banking industry have started to gather. Ritu, it's the second edition of the Banking Transformation Summit. You're speaking to bankers. Tell us what is causing the most excitement this time around.
Well, Ashmit, I'm going to have to ask the bankers about what is causing the most excitement this time around. And it's not just the banks; it's the NBFC space that's also been buzzing. And we have Mr. Chakravarti from Sri Ram Finance with us. Mr. Chakravarti, just start by telling us it's been a solid couple of years for the NBFC sector, but now, with the regulatory environment, with the liquidity tightening, do you see a bit of a slowdown for the industry before we see a pickup again? With the costs of funds, etc., also rising up for the NBFC. So overall, how's the year ahead looking like?
See, as of now, I don't think there is anything that we need to be really concerned about as of now.
Yeah.
Liquidity tightening, yes. The Reserve Bank of India actually is the regulator is asking banks to slow down lending to non-banks.
Yeah.
And they are also insisting that the non-banks raise some of the funds that instead of depending on the banking sector from the markets are also, as of now, they are very positive. Hopefully, the bond markets will deepen, and I'm also meeting a lot of youngsters who are actually showing interest in bonds.
I see.
So, which is actually a surprising thing. In fact, I've met a few people from the IT sector last couple of days, and most of the youngsters are, interested in investing in bonds. So, that could be one way for most of the NBFCs to raise money. As far as the lending business is concerned, the demand is still there. There is still a lot of unmet demand. But then probably the regulator is also justified in expressing his concern on the runaway growth.
Yeah.
So probably we'll have to calibrate our growth a bit.
Well, that runaway growth that you're talking about largely in the unsecured segment, and that has started to come down a bit, thanks to some of the measures that RBI has taken, for instance, the risk weights, of course. But, now the fear is last year we were brushing it aside as something that probably affects the fintechs. Now that we're seeing it in larger personal loans, also, to some extent, going beyond that, to MFI, and now with several states going into elections this year, perhaps agriculture as well. Are you concerned there are these, bigger pockets of stress that may emerge?
See, again, of course, the regulator was concerned that most of the money that's being disbursed through personal loans, because the end use is not clear and it's being used for speculative purposes.
Yes.
See, the BNPL was one big concern that they had. I think that also has slowed down a little bit. But see, personal loan space, most of the NBFCs have become conscious and they are actually tightened their lending norms. So I don't think we should be really worried if your credit norms are actually good and you are looking at the customer people's income and making sure that they are not over leveraged. On the MFI side, there is a stress here and there. That is also because of the over leverage. And see, most of the MFIs have a good amount of margin between the cost of funds and the lending rate. So probably a little hiccup here and there, they should be able to handle it.
Well,
I don't see any systemic risk in this.
Well, we hope that is the case, Mr. Chakravarti. Thank you very much and welcome again to our summit. We will catch up with you, but Yash, for now, you have another guest with you.
Well, that's correct, Ritu. We have Mr. Vishnu Dusad joining us, the Managing Director and Co-Founder at Nucleus Software. And I just want to start by giving a context to this conversation. We're speaking about the transformative stage of the banking sector. And I believe there's no better time to talk about the transformation here after the inroads that the sector has made. And you've been largely responsible for that, taking the digital acceptance of banking, of various financial services to every person. I want to understand from you, today the Prime Minister also spoke extensively about how the next phase of the growth in the banking sector and the financial services sector would be its digital adoption. How do you view this? And in that context, what surprises could the next 5 years get for the financial services industry?
We are at a very unique juncture of time where we have laid the ground level or the foundation level for the growth of the economy. for us to reach the $25 trillion mark by 2047, for us to be Vikasit Bharat, it is important that we leverage this foundation that we have created in last 10 to 15 years in a very robust manner. We are talking about 1 billion transactions per day in next 2-3 years.
Correct.
That's 100 crore transactions happening digitally in our economy per day. And we have 10 crore small, micro, mini, nano enterprises. If we were to look at the average, 10 transactions per day average we are looking at, and 300 transactions per month. And if we can understand enough about the individual, about the nano or macro enterprise from these 300 transactions, it will be very easy for us to make a 5,000 rupee loan or a 10,000 rupee loan possible at a very reasonable interest rate of, let's say, 30 to 40%, as against 365% that they have to pay today.
Correct.
Right? And it is only when we eliminate these frictions, these heavy frictions, and make the life smoother, that we would be able to unleash the entrepreneurship that exists in our population, and each one of them would be able to produce something that would be of value to the society locally or globally, and that's how we would be able to make $25 trillion economy happen.
Correct. Mr. Dusad, I want to speak to you a little about the MSME space. A very large space creates a lot of value in terms of credit as well. Banks have been speaking to you with respect to credit assessment of MSMEs. To you as well, how big of an opportunity do you think it is for Nucleus Software going forward? And of course, a very seamless process as far as loans to MSME is concerned, to the larger economy, which is actually the buzzing engine, the MSME side of it. What kind of transformation could that get in terms of moving the economy forward in terms of growth?
See, if we were to again go back to the same 100 million micro, nano and small enterprises example, what we are looking at is, if we were to just talk about $10,000, 8 lakh rupees per enterprise on an average, then we are looking at $1 trillion book to be built, and that should be possible over 5 to 10 years, and then we can only think of next trillion, and then the next trillion, and then the next trillion. So we need to create models, which is what Nucleus Software is working on. We need to create models which would make use of the various data points that are there, and decide whether a particular micro enterprise should be given a 5,000 rupee loan or a 10,000 rupee loan, and whether it should be given at 30% or 40%, or for that matter can be given at all.
Correct.
Only when we are able to leverage both this kind of data as well as our reach created through 1 lakh bank branches, reach created through NBFCs, that we would the combination of data and reach in person will make things happen.
Thank you so much for this conversation. Very clearly, we're looking at a very large opportunity. Thank you so much for speaking to us. I'll let you enjoy the evening, and of course, listen to the speakers here. But with that, I'll toss to Ritu. I guess she's got the Deputy Governor with her. Let's hear what Ritu has to talk to the Deputy Governor about.
That's right. That's right. He's the man of the moment, and I have our Reserve Bank of India Deputy Governor, Mr. Swaminathan, with us. Mr. Swaminathan, welcome. Thank you very much for being here. Let me just start by telling you about what the governor highlighted as the 5 key priorities, and also, with a warning of sorts that it is in good times, then when most mistakes are made. As the regulator, I wanted to understand, after 2 years of what has been a solid performance, are there pockets of stress that are emerging as a supervisor? Where do you see, some of the focus areas should be?
Yeah, first, thank you, Ritu, for having me here. It's my pleasure being here on the Banking Transformation Summit by CNBC. Yeah, right, of course, we are the banking system today is riding the high wave, and thankfully every financial parameter that we track are all doing good. But we also know that accidents do happen on good roads, so we have got to be careful. But having engaged the regulated entities intensively the last couple of years, we are finding the measures are being very well received, and everyone is strengthening their risk management framework and being watchful in terms of what they do. So we only wish that we continue to keep our guards at all times. Thank you.
Sir, you've highlighted the, unsecured lending risks, which are now materializing into, other segments like credit cards. We're seeing emerging stress from the MFI segment. Are you worried that may spill on to larger segments like home loans? Should we expect more measures? Because even in the last policy, you did allude to the fact that, perhaps, there's reason to continue to war in this segment.
I don't think at this point in time, as I mentioned, whatever numbers that we are tracking, whether it is slippages or stress, is not at a level where it's a matter of concern requiring an intervention. Well, of course, these are matters that we will have to keep watching the incoming data. We have committed to remain vigilant on this, and then we will take steps as we go forward.
So, some of the recent regulations with regards to, the LCR guidelines, the project financing rules, have some of the lenders worried that it may significantly impact their capital and therefore the credit growth. At what stage are these discussions? How soon will we hear from the, RBI, and will there be tweaks to some of these circulars?
These are essentially, as you would know, discussion paper or draft guidelines. Extensive discussions are taking place, and I'm sure we will be mindful, and all of you know that we have followed a consultative approach to regulation, and we will take into account all the feedback and do what is right.
Lastly, do you think some of the measures that you've taken against, some of the banks, some of the NBFCs, has that message gone through to the system? Have these bilateral engagements with some of the continuing concerns you highlighted, whether that was mule accounts, internal accounts, etc., have they been taken care of, or has the message gone?
Tremendous impact. We are seeing quite a bit of seriousness in the boardrooms today, the kind of developments that we are seeing and the efforts that are being taken to implement the regulatory intent, not just the guidelines, is doing very well, and I'm sure that everyone is more responsible today to ensure that the financial system, as you mentioned about the mule accounts, financial system is not put to any misuse. We are seeing quite a bit of efforts on that. Good traction. Thank you.
Right. Thank you very much, Deputy Governor. So that was the Deputy Governor, highlighting the balance sheets of banks remain healthy, although, of course, they need to be wary of the emerging risks. On that note, Yash, I'm going to toss it back to you for your guest.
Well, that's correct, Ritu. So I have Mr. Srinivasu MN of Bill Desk with me, and he's the sector is the sector in focus today after that grand speech by the Prime Minister. Putting all the time in talking about, fintechs, the role that they're expected to play in taking our economy forward from this point. If you've got a chance to hear what the Prime Minister had to say, what were some of the key takeaways that he spoke about in terms of how you expect it to grow over the next 10 years and the contribution that you're supposed to make to the Indian economy from this point?
I think the first thing was an absolutely fascinating engagement that he had with the fintech community. Most important, I think the indicator, the takeaway was, I think it firmly cements Mumbai as the fintech hub for India. I think that's the first key takeaway. He also, of course, highlighted India's kind of very prominent, dominant perhaps role in digital payments in the world. Leaders for the world from today here onwards, and actually touched on all the right points. And even as we grow the payments volume, one should focus on things like cybersecurity and customer convenience, and ask the community kind of to think strongly about innovation there. And it's a very welcome message, areas that we're all focused on, but an absolutely fantastic session.
Okay. I want to speak to you a little about some of the problems that we hear from banks, from insurance companies, which sort of are looking to partner with a lot of fintechs in terms of getting their application into their business. Even today, regulators are a little hesitant when it comes to these banks or insurance companies acquiring a stake in these companies. They rather want them to partner with them. But on the other hand, insurance companies and banks are a little hesitant because, multiple partners could come on board under that mechanism. How do you see this? Do you think for the development of the ecosystem, it would be a good way to collaborate between banks, insurance companies, financial services to acquire stake and have, an exclusive partnership between the two? Or do you think what the regulator thinks and the hesitation is quite real?
No, I think perhaps the right way forward is to look at collaborative and strategic partnerships. Acquiring stakes, I don't think is a very important or necessary thing, primarily because businesses are evolving. Technology is changing very fast. Business directions will change very fast. So I think it's a right approach is what the regulators are outlining. Do great diligence, have strong, onboarding policies, and get into multiple partnerships, see what's the right fit. And I think over the next 4 or 5 years, we'll figure out, who are the strong players, what is the right technology, and then kind of build from there on.
Okay. You spoke about that point which came from the Prime Minister, and I would want to allude to it again. That was the whole point of cybersecurity and cyber solutions. Cybersecurity is becoming a concern as, of course, naturally the fintech ecosystem grows. But the Prime Minister made a very important statement saying that cyber solutions have a very short life. Before you roll out the solution, the other day you know that it's been compromised again. So it's an evolving, constant process. How do you become the bad guy to fight the bad guys when it comes to the whole cyberspace, especially in the payments, which is such a critical infrastructure?
I think first thing what the statement shows is the Prime Minister's astute grasp of what it takes to be in this business, and how even as he evolves cybersecurity solutions, there is the bad actor who's trying to kind of find the backdoor entries. Asking the community to be vigilant, constantly innovate, I think was the right messaging, and that will remain a challenge, right? You keep building solutions, and there's equally a community says, how do I break into it? It will keep evolving, but I think the messaging was correct, the focus is correct, that you need to constantly build solutions, not just sit back saying, I've built one and be with it. So I think that was the right focus that she provided to the audience too.
Correct, and I think that will be a focus area where fintechs will have to focus when it comes to, having a growth which is secured growth rather than just growing blindly. So that is an important statement that you make. But with that, we'll go back to Ritu. I think she's got someone with her for that conversation. On to Ritu.
Yes, I do have Mr. Asim Dhruv with me, from SBFC. NBFC is very much in the focus, but before we get to the transformation they're seeing and what's happening there, are the lights still flashing orange, Mr. Dhruv? I'll hold that. Yeah.
So as a banker, it pays not to see the green light too often. It pays to always be a little sure of where you're headed. But more importantly, I think the economy is going through a great transition. It is just that it is time to be a little careful.
Okay, and where do you think these slips could happen? Because, we're in the good times. It's been a solid 2 years for the NBFCs. But now the macros are changing, perhaps not to their benefit to an extent.
So the sector always is like a pendulum. It swings from one extreme to the other. Yeah. It has been a Goldilocks scenario last year where everything, whether growth, whether it is in terms of NIMs, whether it is in terms of credit quality, everything has been perfect. So I think a little bit of reversal to the mean as the portfolio matures post-COVID would happen. But the mood is still of cautious optimism.
Well, unsecured lending is something that has been spoken about a lot, but are you seeing that now extend onto other sectors? For instance, with banks, we're seeing that, slip into credit cards. We're also hearing about MFI stress, and now with states going into elections, are you worried agriculture loans, and therefore, these new pockets of stress may emerge?
So see, the economy has gone through these transitions before. So I don't think there is need for panic or worry. There will be swings. You don't have all days are not the same. There will be some days where you will have everything right. There will be some days you will have challenges. So are there challenges in the sector? Certainly there are challenges in the sector. But is it that the growth is coming off the cliff, or is it that we're not going to grow? That is not true. The economy still continues on a very solid footing, and the demand for credit still continues to be extremely strong. But yes, you'll have to be careful to segregate need from demand.
Well, in terms of the credit growth again, what are the pockets where you're seeing constructive, demand for credit? Where are the pockets that you're seeing a bit of a slowdown?
So housing continues to be robust, and that drives really the economy. So housing continues to be robust. MSME continues to be very good, and a lot of inclusion is happening in MSME. So there are players like us who are actually bringing small businesses into the organized fold. So there is a fair amount of action happening there. Commercial vehicles are also doing fairly well. They have been in a good cycle for a while. That reflects the underlying strength of the economy. Agriculture, rural has been a little soft comparatively. So rural, there's been a little soft. Semi-urban is doing extremely well.
Well, on that note, Mr. Dhruv, thank you very much for speaking to us here. Thank you, and we look forward to hosting you at the event.
Thank you.
Okay, we're going to have to take a short break on that note, but don't go anywhere. We'll continue our coverage from here, the second edition of the Banking Transformation Summit. Stay tuned.
India's automobile industry has voluntarily agreed to give discounts on new cars and commercial vehicles to encourage vehicle scrapping. Car makers will offer a discount of 1.5% or Rs 20,000 on a new car, depending on which amount is lesser. This is subject to a condition that the buyer has scrapped his old car in the last 6 months and has presented a scrapping certificate. OEMs have decided to give this discount to incentivize scrapping for a period of 1 year, after which the policy, we believe, will be revisited by the automotive industry body, that is SIAM. Commercial vehicle makers have agreed to give a discount of 1.5% on trucks and buses less than 3.5 tons and a discount of 3% on trucks and buses over 3.5 tons. This too will be in return for a vehicle scrapping certificate for a vehicle recycled in the last 6 months. The policy will apply to commercial vehicles for a 2-year period. 12 car makers including Maruti, Tata Motors, Mahindra, Honda, Toyota, Mercedes, Skoda, Hyundai have agreed to give discounts of vehicle scrapping, and 7 commercial vehicle makers including Tata Motors, Volvo Eicher Commercial Vehicles, Mahindra & Mahindra, Ashok Leyland, Isuzu, Force Motors have agreed to give these discounts. These discounts will be over and above discounts already available in the market, and SIAM, the industry body, believes this will serve the purpose of reducing pollution by taking unfit vehicles off the roads and also lead to incremental sales.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos?
Well, Well, welcome back. We're here live at the Banking Transformation Summit, and who better than two of the most well-known faces, perhaps, in private banking today. One on his
colleagues from our past life.
Yes, well, one on his way out, and one, just taking charge. So we not at all, Mr. Shyam Srinivasan from Federal Bank and Mr. Ashok Vaswani, of course, from Kotak Mahindra Bank. From one banker to the other, taking charge of a new private bank. What would your advice to him be?
I think he needs no advice from me, and I think he's inherited one of the finest banks in the country, and he'll take it to another level.
Well, Mr. Vaswani, since you've taken charge, you've spoken about the 4 C's. That will be the core focus areas for Kotak Mahindra Bank. Give us a sense of, how you settled in, what progress you're making on all of those 4 C fronts.
Oh, first of all, absolutely delighted to be back home. It's been a long time, but a Bombay boy is always a Bombay boy, so delighted to be back home. We're making a lot of progress at the bank. Like Shyam said, it's a great platform. I wish I could take any credit for it, but it's a great platform, and we just got to take it to the next level. And it all starts and ends with the customer. So if we get it right by the customer, everything else falls through, and that's what we are focused on.
Well, Kotak Mahindra Bank's loss has been Federal Bank's gain. So let me ask both of you about that. With Mr. Manian leaving, one of the oldest hands at Kotak Mahindra Bank, and this leadership transition that you're in the midst of, has the ship stabilized?
Well, I think it has. And it's always great to have colleagues take over other companies, right? Yeah. Because then we are friends. And I'm really glad Mr. Manian got the Federal Bank job. Yeah. Sad to see my old friend go, but it's wonderful to have a friend at the helm of the company, and I wish him very best of luck.
Okay, and Mr. Srinivasan, your gain, what is the word of advice that you'd have for your successor from Mr. Vaswani?
No, I'll tell you, for Manian, the best thing I would like to give as a gift is a superb platform, right? I've always said that we're playing a test match. Yeah. The first 2 tough days we've seen through, he has a great chance to accelerate and build a fantastic bank. We are determined to be the most admired bank. With due respects to my dear friend, we will be the most admired bank. And I think Manian has the opportunity and will make it absolutely the best in the country.
What is the unfinished business you'd like your successor to take on?
This is a long journey, right? We are searching excellence. There's no finish line. So Manian will build it to another level, and his successor will build it to another level. But we're pursuing most admired, and most admired is earned, pushed very hard, and I'm sure he will take the torch further there.
Well, Mr. Vaswani, you've taken over at a time when the bank is facing challenges with respect to the RBI embargo as well. It's been a few months now since April. Of course, in your letter to shareholders, you said it is evident perhaps more needed to be done. How far ahead are you in that journey, to sort of, get out of that embargo, satisfy the regulator? What progress has been made?
So I think we've made very good progress. The teams have been working very hard at it, but ultimately it's for the RBI to give us the green light, and we're working very closely with them. And fingers crossed, hopefully they'll be pleased with the efforts that we've done.
But so far, what is the impact you've seen? Because, you cannot have new credit cards, onboarding through digital channels. What is the sort of impact we should expect?
So as we kind of talked about, and we've also done at the earnings conference, we've had a certain amount of impact. We quantified that. It's unfortunate. We'll work hard to put it behind us and move ahead.
Well, speaking of credit cards, that's emerged as an area of stress. Last year, we were talking about unsecured credit. Many were brushing it off as something that is the problem of fintechs. And now we're seeing that show up in the credit card portfolio, perhaps even spreading to MFI. How long before we see a sort of turnaround in this segment?
I think it's a little exaggerated. I don't believe it's a systemic issue. It could be specific portfolio for specific companies. I haven't seen any substantial deterioration for the reasons we've always said, right? The way credit is underwritten is materially different than it was a few years ago. So unless you've given all the controls a go and missed everything, you can't see a dramatic deterioration. Yeah, there will be pockets of stress, but within a range, and I don't believe it will be anything of the magnitude that is visualized. And the regulatory interventions that have come in the last 6 months have cooled it off. So I don't believe it will be a material problem.
Well, we're now some time away from just talking about the challenge of NPAs, and now we move from the fight against bad loans to the fight for deposits. Let me just quickly touch upon that because, household savings not going into plain vanilla bank accounts, also looking at chasing other higher yielding assets. Do you expect that to sort of curtail the credit growth because deposit growth of the system also continues to lag?
See, look, first of all, I think all the questions in the conference we are previewing right now. But I think the whole idea is, look, there will be customer demand, and where customer demand comes, things will flow to it. Deposits in its totality is not the issue. It's really the quality or the pricing of the deposit. So we will have to adjust for that kind of thing. But these are cycles which we go through, and I'm sure we'll come out in a good place.
Well, Mr. Srinivasan and Mr. Vaswani, thank you very much, and thank you for being here at our event. We look forward to hosting you. Thank you.
Thanks so much.
Okay, on that note, we're going to have to take another short break, but don't go anywhere. We'll continue our coverage right here from the Banking Transformation Summit.
Money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now, it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1000 to...
Well, hello and welcome to Business 360. I am Ashmit Kumar, and here are the headlines that we're tracking this evening. Sensex and Nifty hit a fresh record high once again as stocks gained for the 12th straight day. This is the longest winning streak in the last 31 years.
देश के युवाओं की टैलेंट पे इतना भरोसा है और मैं कहता हूं, बड़े विश्वास से कहता हूं, our best is yet to come.
Prime Minister Narendra Modi addresses the Global Fintech Fest, says India's fintech revolution has made dignity and quality of life better, highlights that the sector has played a major role in democratizing financial services in the country. Quick commerce firm Zepto races to $5 billion in valuation